All right. So that's working over there on that side. And we'll go ahead and keep this party rocking on our side. So shout out to everybody over at, like I said, oh yeah, or Brother Al. All right, yeah, it's working right over here. Okay, yep, the volume is up. All right, all right, guys. So let's get at it, right? So I know last week we again we hit, you know, a few of the family, got a chance to get some of their feedback. Again, based upon, basically what we're trying to assess in terms of what we individually are seeing in the markets in terms of what are the markets signaling to you as an individual trader or investor, and obviously strategizing the plan right around that, right? Because what we've witnessed in terms of seeing the volatility, genie, which is out the bottom now. Of course, this is a time where a lot of traders who are very avid in their day trading perspective, who love when markets are not necessarily, trading on a calm, even playing when, 'cause of course, when the Feds have control of the markets, I'll say that, right? There's this kind of, slow melt up, low volume value where, where the VIX is in that perspective is pretty much just tamed and locked inside of its cage. And if they have a mandate to kind of march markets higher, there's nothing you really can do if you're trying to counter trend trade it, right? You have to find those individual marquee stocks that you can kind of go out there and affect. But for the broader market, if the sentiment is strong in terms of the S&P 500, rarely will you be able to somewhat counter trend trade it, right? You might hit little, little blocks here and there, or whatever, or speed bumps, if you will, but you won't necessarily get that kind of full onslaught type of flushing that you would get in certain stocks that may have bad press, bad earnings, whatever. And so we witness again the slow methodical climb of the SP 500 since QE on steroids was in play. And this is going back even before coronavirus. We're just saying when we got to the point where the tariffs were beginning to be a problem child to that of the market, so to speak, right? In came again the Federal Reserve with their reverse repo operations, right? Of course, we know that happened and started on September the 19th, well, September 2019, month, year, right? And so since then, even though we saw moments, I would say even leading up until that became a real onslaught mandate, where there was still a lot of controlled buying of the markets. Of course, that being the backside of the banks, the hedge funds, they all working in unison. Along with that of what we got from old school, right? We still got to make sure we bring attention to that old school, excuse me, QE2 that was still going since the last financial crash, right? The subprime lending crash, right? So essentially, the Feds have not cut off the money spigot since 2008, right? Let that marinate for a moment, right? This steady onslaught of just pumping money to the market. And what they done, they found out that they were able to accommodate markets in a way where, to the average, I don't know, maybe if you had the senator or someone looking into the affairs of the Feds and trying to see exactly, what are they doing to, again, in terms of their eyes, meet maximum employment and, kind of backstop any kind of unforeseen issues that may come along, from our economy perspective. Well, they were actually, stepping outside their boundaries a little bit and doing a little extra. I think it speared from a lot of the talking points that we got out of Alan Greenspan. He was somewhat I should say, he was the hierarchy that really tipped the scale in terms of quantitative easing, pushing a little bit more, uh, I should say, the levers of our financial system to the point where they were very adamant about wanting to take care, pretty much. I'm trying to put it in layman terms, but it's best possible to take care of those who were taking care of them, right? So we understand that the Federal Reserve pretty much is even though they are a legal entity, but they are not necessarily a part of our government, right? They are a private entity born out of a At a time, they considered it to be a necessity, but since then, they have now come, basically became a consistent contracting party that pretty much handle all of our affairs when it comes to our financial disposition, if that makes sense, right? All right, so they got the keys basically to the to the Bentley, right? And the Hoopty. They got the keys to everybody's car, right? So again, since that has started, meaning the ideal that they've been becoming more accommodated, meaning they've been finding ways to put more money, liquid money into the marketplace. And they're doing it by way of, again, the BlackRock, the JP Morgans, the Cities, the TD Rose, whoever these people, these other little, I'm not going to call them shadow bankers, but basically what they are. Because, rather do you hear them go on, before Congress and speak to the exact extent of who they're giving these monies to, right? Because when you look at the reverse repo operation auctions that they have, all you see is the counterparties. Now, there are ledgers somewhere where you can go and probably see who those people were who were part of that auction. But for the most part, we're going to go ahead and just assess that these are people who, number one, who were already, a part of, if some people want to still use that, the mythos of the pump protection team, right? Banks and funds managers who are given somewhat keys to also help liquefy our marketplaces when we had stumbling block moments in the markets, right? Catastrophe, so to speak, right? You needed other people to help liquefy the markets at that point, right? Because the Feds can only do so much. But we know banks can buy assets outright. They can purchase assets outright, from ETFs, mutual funds, all the way down to individual stocks if necessary, right? And only when it becomes what they call red alert, when the Fed themselves start purchasing assets outright, meaning they're buying stocks like Apple, which they have provisions where they could do that if things ever was to get that bad, right? So let that marinate for a moment. Again, these people can buy literally stocks with taxpayers' money. And on the flip side of that, they actually did what? They bought stocks with taxpayer money, right? The insider trading, scandal. We get in that a little bit tonight too, right? But again, it goes to show you how when you have that level of power and you feel like you don't answer to nobody, because literally, who do the Federal Reserve answer to, right? I'm sure you guys know that, right? I'm throwing it out there to the panel right now. Who does the Federal Reserve answer to? Anybody? Who do they answer to?
Himself.
Congress.
Seemingly, right? Right? You say Congress, say right? So themselves, Congress, right? All right, y'all kind of obviously in the ballpark, but specifically, could you narrow it down to one entity? Who do they? Because they answer to
Joe
Congress
Biden.
to a degree,
I love speeches.
kind of, right? Because he's the overarching aspect of of the corporation, but
Or the
talking about
Treasury
like their
Secretary,
boss, exactly, right?
Janet
In
Yellen.
terms, Janet Yellen, right? In terms of their boss, their boss is Janet Yellen. Literally, she's look. They don't answer. Literally, have to answer to anybody else except them. Now they can go before Congress and choose to kind of play this, complete the fifth role, whatever. But it ain't gonna sit well when it comes to the nomination process. Of course, when they get ready to go before the panel to see if they can kind of get another term, then they'll be like, no, we don't, we don't want to deal with you because again, you would kind of stiffen us on a lot of our questions and this, that, and the third. So now we straight, right? But ultimately, only people who can really dismember them mid-term or this, that, and the third is the Treasury Department, right? They can kind of mess it up a little bit, dirt up, murder up the word, and then if it gets really crazy, I think Congress has some kind of level of provision where they can step in and then do like some kind of override scenario, right? But anyway, so just putting that out there in terms of, as we say, the powers that be, they having all this, this control, right? They have all of this unforeseen power. Well, it's to the point now where we witness something that that literally our markets haven't seen since, I think they were speaking about like since the Great Depression, in a lot of ways. How when they say the helicopter money, they bring the bazookas out. They just needed a catastrophe or something of that nature to tip them to be able to do so. And then from there, they were able to, have unlimited reign to just pump the markets. And we use that term loosely, of course, but we know exactly what you guys know exactly what I'm saying when I'm saying pumping the market. They have the rights to print unlimited values of money. Keep in mind, there's no cap. Now, there's no cap or a debt ceiling or a cap ceiling or expenditure ceiling on what they can do. Now, that's the scary part. Now, Congress and the Senate, they have a debt ceiling, right? That's what they fight over right now, actually, as we speak, right? They're trying to get that debt ceiling annex portion of the bill, slapped on top of the government shutdown package all in one, right? We're going to see how that works out because right now they still in chamber trying to figure out how they're going to do that, right? To the best of my knowledge, I haven't received any updates that they have, unless I missed it. But anyway, the Federal Reserve don't have that level of capsation, right? If you think about that, now they're basically printing our future generations' money in advance, like a payday in advance scenario. And essentially, you would think that money would be more useful if it was going somewhat like into the tangible coffers of the American people, right? Because these people who are actually paying this bill. It's your money, and they're spending it for you essentially, right? However, they're not spending it on you directly. I'm not going to say indirectly in some cases, right? Because you think about, again, how many people out there own, right, income producing assets besides, property, real estate, whatever, right? How many people out there really own stocks, right? We've asked that question to you guys several times. Like, you look around your peers, your family members, how many of them out there own assets, right? Stocks or whatever, stocks, bonds, whatever, right? That number is far and few between. And we're working on that course. That's a part of our business that we should have for being a brother's keeper or a sister's keeper, where we're trying to elevate the mentality of those who are needy of a steady bombardment of financial literacy to the point where they get frustrated, agitated, and start doing something about it. Why? Because we're witnessing, number one, the basic elephant in the room is the wealth gap increase. We know exactly why that has happened. No matter how they try to downplay it and say there's a lot of other, ancillary things that cause it, ultimately we figured out where it comes from. If I was to ask you guys that right now, how does the wealth gap widen, right? You all would say what? Or who's responsible for the wealth gap widening? I should ask that question. Who's responsible for the wealth gap widening? You guys would say what?
Federal Reserve.
You say Federal Reserve, right? Right in the jack, right? Right? Why? Because they are, again, taking taxpayers' money and they're implementing, a mandate on top of what they call fiscal Congress or congressional budget analysis, and so-called somewhat they're supposed to be filling in the holes wherever Congress falls short. But ultimately, in the end, a lot of what they do, which is a constant steady barrage of liquid money, printed and or just recycled money, is entering to our economy through the pipelines of what? Are they going straight to the labor force saying, hey, how can we implement some of our fiscal policy into helping you guys, function better, being able to hire people, right? Especially through the diversity clause, this, that, third, to really balance out, white to black ratio. Are they doing that? Obviously not. All right. Are they going to the health side, trying to figure out how can they better equip, some of those maybe lacking on the health side to have more access to capital resources to really build that? Absolutely not. All right. They strictly and only really deal with the banks, right? That's what the Federal Reserve is. It's a central bank that oversees all the subsidiary banks, right? The FDIC cartel, right? We can call them what they are. They are the FDIC cartel, right? And their only agenda is to control and manage the assets and wealth of not just America's pocketbook or purse, but potentially if they can get their their meat hooks into other countries too, subordinate countries, right? Because again, that's a trade-off, right? Well, we can tap their resources and they can pay us, their hard tangible resource or commodities, and we'll pay, backstop them with what? Paper dollars, right? Right? It's weird when you think about it, but essentially that's the hustle, right? That is the American hustle. print fiat capital money, which is basically worthless paper, right? Then turn around and buy real true assets with it. Let that marinate for a moment, right? Because essentially what has happened since of last year into this year, how the wealth became, the wealthy became wealthier again at the tune of, I think it was like $10.2 trillion as of the last tally. $10.2 trillion. The wealthy have been able to advance onto their books or their balance sheets due to COVID, right? A lot of that pipeline through the marketplace because that was the most liquid backstop place to be. And the excuses today is the reason why they cannot necessarily taper right away is for the fact that what, right? They're concerned about it upsetting the markets. Now, again, there's no one looking out for the middle people or the little man in terms of the main street. So, hey, make that make sense to someone that really needs, real tangible help. But we know that's what goes on, right? So beyond that, of course, these things you guys have heard several times. It's not like you guys are brand new to this, but it's important to note this because the reason why I'm kind of going in on those topics was because right now, if I was to ask you guys like we were doing last week, which we're going to get into that, what are markets signaling to you and whether you should, to buy this dip or not, right? Well, guess what, right? All that stuff is relegated back to those who are in control of the marketplace, right? Those who are in control of the marketplace, meaning, the financiers, right? Right? The angel investors, if you will, right? So those things are important. So again, and us being able to remain calm, focused, sticking to our guns in terms of our disciplinary value that we need to bring to the markets every day as investors and traders. Well, that's what we're going to focus on more than anything. Why? Because during times like this is the easiest time where you can get wiped out. You can easily get wiped out during moments when the markets are very volatile. Why? Because there's no, braking system in a sense necessarily in play in a way that makes you feel confident that okay, I can really play a true technical approach to markets because I know things are bouncing at this or bouncing at this indicator or bouncing at this oscillator, at around these areas. Well, those things somewhat go out the window when there's high levels of volatility. Well, when volatility kicks in, the one thing that makes markets even more unstable is the human emotion characteristic. That's when the C words get thrown around. Right? The C word gets thrown around, right? That C word is what? Right? That C word is capitulation, right? When a joker, about to capitulate, boy, look, you got a joker at the end. He at the end at that point, right? What's going on over dollar? We'll see you in the backside over there on the YouTube side of the house, right? Peace, power, property over, right? Right. So, that's where we are.
Record.
Right now, guys, I think we are in that phase where there's slight essence values of capitulation starting to happen. Why? Because we are starting to see the type of candles, bullish and bearish engulfing candles that are definitely signaling run off of what? Or run off of that of people's what? Stop losses, right? Stop losses are getting triggered. Right. And it's not like the market makers are just hunting stop losses for the fact that they're just trying to, imbalance the market to one side because they're punishing one side of the market over the other. They're hitting both sides. Right. They're hitting both sides. Right. They're trying to, balance capital and collect capital at the same breath. Right. They're trying to stay delta negative and delta positive and delta neutral. Essentially, that's their mandate. To always stay delta neutral. That's what a market maker is to do. They're there to be the balancing act for markets on both sides. But anytime there's abnormal volatility or implied volatility in an asset and it hits everybody by, surprise, guess what? That's when market makers lose control and you have these wild expansion movements, movements in stocks that may miss on the earnings or get some news out of the blue and the stock dumps or runs up 20, 30 points, right? Basic points, whatever. That's the stuff that they can't plan for. And sometimes they try to plan for it and they still go against them. right? Because there's other factors behind the scene too, right? So again, uh, coming from a place where we're trying to assess, you know, what are worthy dips to be bought, what are worthy dips to kind of let keep, continue dipping, right? And on top of that, again, are you reading the market properly? Because this is, I know people will say, well, you know what, that's really more structured towards people who are trying to day trade the market, right, from day to day, right? To a degree, it is. But I will say this too: anytime you feel like the markets are going on discount because you might be hearing a lot of bad headline press in around your cubicle when you're just out and about in the public, you're like, man, the markets are getting beat up. Man, it must be time to go shopping again. Well, you still have to be in tune to really what are some of the key levels that are you know uh, you know, worth looking at or mentioning in terms of whether or not these are good to call DCAs, right? Dollar cost averaging moments, right? Or principal based investing. Because if you're a little too premature, what can happen? You can blow good capital uh, a little too, a little too soon into it at a more expensive premium than that what you could have gotten at a lot cheaper, right? Does it make sense? Right? Because again, when human emotions are in play, what happens? We typically spend recklessly, right? That's just been since time immemorial. The human emotion is, the gauntlet of emotions that we kind of, deal with day to day can kind of throw you off your game plan if you ain't focused, intent, and purposely driven to make sure that you stay on par best you can. Because in that moment, markets are trying to what, they pulling on your heartstrings a little bit, right? They're pulling on your pocket strings in this case. They're trying to get you to buy this dip. Right, but if that dip ain't ready yet, then so be it. Let that cake keep baking. Right, leave it in the oven. Right, and there lies why when I make that point, or I ask the question in a lot of ways, what are markets signaling? This is me kind of prying into you guys' psyche to see if we can kind of see exactly where you are, and if we can toggle some switches here and there to kind of make sure that we still look at the markets as we are trained to, with what? A non-implicit bias, right? Y'all know we've been speaking about that a lot lately. Stay away from implicit biases. That's what get a lot of traders jacked up. Not just in traders, but investors too, right? Because they're just so dogged on sticking with one script and one script only. Now those things work only to a degree, and they do sometimes have unicorn type moments, like a GME or AMC, right? But again, there's a lot of other factors that go into that too. Of course, we know there's, again, extensions to those things that cause that, right? But that's not, those are not the norm, right? They are not norm, right? Right. So norms are okay. If we can plan to put together a 7%, 8%, 15%, 20% return on an annual basis, no matter what you do out through an entire year, up, down, sideways, whatever, right? Especially if you day trading this, that, third, burn up a little, little capital gain tax here and there. But ultimately, if you can end up at a 20% or 15% or 20% in terms of gain value, exceeding that of your fees and everything else that you had to pay, then that's a net positive, right? That's a net positive, right? And so, this is why, for me, I think, when I'm looking at, the marketplace, I'm trying to keep my mind always focused on all these different moving parts. Not that it's just something that's just kind of cumbersome to the point where I can't focus it. Because no, this stuff makes you a better multitasker, right? This stuff here challenges your what? Your inner, your inner smart side, right? That we all got it, right? You got it when you just in public regard, but y'all know what I'm saying. When you're channeling that best part of you, where you can say, you know what? I'm controlling this ship right now, right? I'm in control of this moment because guess what? There's nobody that can what? Detour you from it but you, right? You are in complete control, right? You are in complete control. Okay, there it is. I was waiting for the news to come out. It took forever. So it just happened, right? So breaking news, breaking news, breaking news. Joe Biden signs last minute deal to avert government shutdown. Now we know that that bill gonna come with some lot of what they call stipulations added to it, because it's about the government shutdown, not necessarily complete debt ceiling value too. I'm probably gonna have to read into that a little bit. Let's see. Joe Biden signed the deal of the House and Senate passed earlier in the day to avert government shutdown that would have affected hundreds of thousands of federal workers, slammed an economy still struggling to recover from the pandemic. Blah blah. Okay. Under the deal announced by Senate Majority Leader Chuck Schumer, senators dispensed with a handful of Republican amendments that and then approved 65 to 35. Okay, blah. Temporary funding bill that not only averts shutdown but also includes a 28.6 billion disaster states ravaged by extreme weather. Basically, that is the hurricane relief bill. And yeah, so 6.3. So they still got a 6.3 billion dollar to further assist the Afghan refugees. There it is. You know, if they were going to cut something, they was not going to
Cut that out.
They weren't gonna cut that out. We spoke about that, right? You're 100% right, over. That $6.38 billion of taxpayer money to basically relocate these Afghan refugees. Again, that MAGA people had no say so. Again, this is them playing. Yeah, move on. The House passed the Senate version of the stopgap measure late Thursday. Blah blah. All right. Just I was for nope. I'm trying to see if there's any So according to White House HR 5305, extended government funding, Deliver Emergency Act provides fiscal 22 appropriation federal blah blah. Forgive me, guys. I'm just trying to paraphrase really quick. I'm trying to see exactly if the debt ceiling was mentioned in this because that's the part about that's what got this thing all messed up anyway. The bill does not include any provision to raise the national debt. That part.
Yeah,
bad,
you know
guys.
the Republican Senate minority said he wouldn't, his party wouldn't support anything that had to do with that debt ceiling.
Right, that was the initial conversation based upon Mitch McConnell coming out, a week ago. But Nancy Pelosi and Chuck Schumer so dogged was trying to say, how would we, how y'all, how would you guys dare not attach that to it too, right? Because they wanted to get a 2-for-1. Right, Republicans like no, because y'all still have reconciliation power, right? And so whether you do it or you don't, either you're gonna do it now, reconciliation power now, or you're gonna wait to do it later, right? But Republicans also say, okay, well, we ain't gonna sign on to the government shutdown aspect of it too, unless you're gonna add the debt ceiling or the infrastructure package value to it too, because we want to see exactly how much y'all guys gonna try to put into this bill. We want to be able to kind of filibuster or push back against it if it ain't what we kind of initially agreed on from the beginning, right? So they're playing a very dirty game. Now, both parties are to blame for this because, again, a lot of these provisions are coming from Trump's, when he was in office. And these bills are not coming due. So guess what? Y'all know how this stuff goes. Doesn't matter when it was implemented. It's just who's ever the sitting president. The ball is in your court at this point. And all the bad things are going to be focused towards you, right? Because I can care less about any of these charlatans. Republican, Democrats, or whomever, they all rats to me, right? Because you know what they're doing, right? But beyond that, again, that part right there is not going to sit well with Wall Street. Let that marinate for a moment. That part right there, because the national debt is where Wall Street gets to get a bigger macro picture of exactly how much money they get to actually play with. From a forward future valuation perspective, okay, budget allocation, $3.5 trillion. Wall Street already looks at, all right, what sector is going to probably get that money, right? We spoke about that before, right? What sector is probably going to get some of that money? And they start planning, companies start planning around that, those extra funds. You see how that works? If it's just, okay, well, you just, avoiding the government shutdown, that's fine. That's business as usual, right? You still got to pay these, you got to pay the troops, right? Who wants to be in office as a politician? And turns out that you was responsible for not having paid the military, right? Even though they have a lot of fake outrage when it comes to military, but y'all know that stuff go, right? They play that we patriotic, man, right? You're not paying federal workers, right? That looks bad on any politician's resume, regardless, right? So of course we kind of seen this coming, right? They always go down to the last second, right? Literally the last second, and they do that just for what? To try to prove a point. And then they do what? They go ahead and pass over. This one was even more different than the last one because it had the debt ceiling attached to it. Under the auspice of they trying to get this infrastructure package to also kind of I don't know, shoved in there too, right? But Republicans like, no, we just ain't gonna let y'all do that, right? Y'all got power, but we got to still push back and be, the haters that we are. And when we are in power, y'all the haters. Y'all, I mean, that's the game they play. We get it. But anyway, that's the part I was waiting to hear. I want to see that they actually do some far as the debt ceiling, and based upon the verbiage here, they did not, right? As it did not, right? The bill does not include any provisions to raise the national debt ceiling, after Republicans steadfastly rejected any attempt to include it. So we already knew that was again, Nancy Pelosi pretty much came out and said it a couple of days ago that if nothing else, at least we could do something just to keep the government open. She was already at that point where she knew she had failed. She lost, essentially, right? And so now they have up until October October the 30th to come up with a debt ceiling number. If not, we are going to default still on certain provisions of the government. Why? Because that debt limit has to be set in place for people can push or allocate money, right? The money that they did for the government shutdown, that money is already in play. They just gonna use that to kind of finance the government through through December and whatever, right? So anyway, moving on from that, right? And that's definitely Sister Monica. She in the building. This is definitely her lane in a lot of ways too, right? She could definitely go into depth on those things because again, she is like phenomenal when it comes to again showing people how to find money, right? How to allocate, proper money, or how to budget properly so you can allocate your money in the best diverse way to help your financial situation, right? She pretty much is our grand poobah in the community when it comes to that because again, the woman has on the ground boots experience, So, but for a lot of what we're trying to do on this, the channel as a whole, the groups as a whole, the training session as a whole, is raise the financial awareness of everybody on here, right? So this is a part of again the training. Because a lot of people like, man, we don't want to hear all that. Get to the stocks, bro. Right? Well, no, it's not just about stocks. It's about also figuring out, how to find money so you can even be in a position to invest in the stock market, right? Or the Forex market, or the crypto, whatever, right? Those things are just, again, you can't have one without the other, right? So, if it requires you to learn a little something new that you never thought about was important, then so be it, right? So be it. What's going on, brother Ori? Right, family Quavo in the building. Our family CG3. I see you guys on the YouTube side of things. Thank y'all for coming through this evening. Peace, power, and profit to you all. Right. So, getting right into it again, like we said, this is part two. Part two, right? What are market signaling? Right, to buy the dip or no? Right. And so again, just precursor, really quick. Just looking at the SP 500, as you see, I have on the screen. We got about 5 minutes before considerably what they call the cash extended cash session closes for the night, before futures go full blown, either ham or it's gonna go, belly up. But as what we saw today, how the markets closed, I don't think they really. I don't think they really trust the government at this point. Beyond that, of what we've been getting out of the Federal Reserve in terms of the insider trade and all the bad policies coming along with the inflationary talk that makes it transitory when we know it's not transitory. Beyond all the back and forth when it comes to China, now destabilizing that whole eastern region, they got Japan on alert, Taiwan on alert, and Vietnam on alert with threats of potential war, and their cousins to the north of them in North Korea testing ballistic nuclear missiles again, which also heightens the alert, value of that region too, because again, who wants to be shipping stuff knowing all that stuff is happening, right? So again, but people say, well, what's that got to do with us over in America? Well, it has a lot to do with what we got going over in America. Why? Because majority of our goods and services come from where? Well, majority of our goods, I should say, they come from what? Asia, right? That's the cards that America dealt itself when they closed down a lot of its factories. And now you got rust belts all up through, the Northeast corridor of America, because again, they shut down a lot of the stuff that also gave America an edge. And so you outsource it to China. China got it, America by the kahunas. That's just what it is. Now, beyond the supply chain shortages that we are dealing with, where you got like literally hundreds of barges sitting outside a lot of these ports all around America that can't even dock to offload the goods, that's that and the third, or sitting and wait to have containers, ready so they can go pick up. This is a catastrophe at the highest level. And all this stuff matters. Why? Because you say to yourself, if you are in a stock that is sensitive to what? Supply chain issue, meaning your products are stuck in limbo, right? Well, guess what? As they say, one down day for a mega company is equivalent to them having, really a bad week for one day worth of stoppage. You compound that by, 3 or 4 days. Now you're going into a week. Now you talk about, it's like you behind like an entire month on your bills, on your client, PO, purchase order, this, that. It gets really ugly, once you get beyond that of a month, right? Because now you're messing up their guidance, right? Their future guidance, right? Companies like to be able to give a solid guidance in terms of where they're going, they're guiding to, quote unquote. If they can't give that with a very lucid picture, guess what happens? Investors get what? They get spooky. What's going on, Sister Tamika? Peace, power, and profit to you, Ilba. See you in the house. Happy to have you here. As always, the family coming through, getting some of this good financial information, right? Right. So again, that's why guidance is very important when it comes to earnings. Now jumping into the discussion tonight, because again, I don't want to be on here completely long today. I want to kind of premise it because I want to, again, when we get into asking you guys those questions, what a market signaling, well, you got to be able to speak to what? To the investment that you might have got, already out there working, the investment that you think about possibly getting into, and then what is the macro picture of the global markets that you're trying to now dissect in a way where you're staying safe, right? And not just jumping out the window because, you heard somebody say, no, right now is a good time just to go all in. Why? Because the markets are pulled back. Well, guess what? The market's only down about what? About 4.3, 4.8%, somewhere around 4.5% off the high. It seems like a lot worse, doesn't it? Y'all notice that? It seems like it should be down. It's like it's down a whole lot. Why? Because the way the market's been going up and down throughout the day and this volatility, it makes it exacerbates the emotional aspect of it. It makes you feel like you just emotionally drained, watch the market just go up, come back down. You in the money, by 60, 70, 80%, especially if you trade options. Then next thing you know it, you down about 30, 40% because the market has flipped on you really quick. You're like, man, my heart can't take it, right? Well, guess what? This is where champions are born. This is where champions are bred. Why? Because if you want to, again, if you want to be the boss, you got to be willing to pay the cost. And so that's why I tell people, don't jump out the window too prematurely if you don't have a level of confidence, right, that you are in a position or taking a position with, the understand that you've eliminated a majority aspect of the variables that make you feel content to take that trade or convicted to take that trade. So you can rest, better if it does not necessarily work out. Again, I'm speaking to the traders out there right now. This is strictly to the traders conversation right now, right? You have to have that level of conviction, right? Because it matters. First, as they say, first impressions, right? You have to have it, right? So again, we use some very fundamental things over here, whether you use or you don't. We like to kind of still share it with everybody. We use our what, our why, our where, our when. We dumb things down a lot over here for a reason. What are you investing in? Why are you thinking about investing in it? Where's a good place to invest in and when to pull the trigger on it? If you can't answer 3 of those questions, then trust me, move on, find something else, paper trade it, if anything. Don't put your capital out there like that. You got to be able to account for the ATR, the volatility, the implied volatility, right? The market sentiment, sector sentiment. You got to be able to account for some of those things, the company as a whole, right? You got to be able to account for those things, right? Order flow, right? What the order flow market looking like, right? Because it again, it's just a part of our daily ritual, our methodology, so to speak. Y'all with me there? All right, so that's important. So let's jump right into it, guys. So I want to keep you guys no later than necessary, but I want to come on. I want to premise the conversation for this reason, because a lot of people out there are getting very antsy and they're getting giddy on both sides. sellers and also buyers. You have to stay calm and play your position. That what you can again account for, right? Which is very important, right? So, so last week I know we did we did what Sister Angie, we did over Brandon, we did over Chris, we did Brother Dundre, I think it was a Brother Calvin, and we had Brother Calvin last week. And so we haven't done Brother Dundre yet. We haven't done Brother Ghost yet. Brother Albert, we haven't done you, Brother Al, right? No, we did, right? We did Brother Jeremy last week, and we got Sister Avalon this evening as well. Happy to have her in the building. Peace, power, and profit to you, Ilva, right? So we're gonna jump right into that again, guys. So again, thank y'all for following along as well. On the YouTube side, again, we're just a part of our Thursday training session. We offering up to the backside to you guys as well to add input when necessary if you guys are able to, and we just hope you guys enjoy the build with us as well, right, as we go through our training session, right? So I guess I would go down the line and just pick somebody, but I'll let you guys choose because again, I do understand you guys may have family time going on. You might just be listening, taking notes, whatever. But anybody that can open their mic that did not go last week, I'll allow you guys to kind of pick that who goes first or whatever. Matter of fact, let's see. Let me go over here and double check in the building here. So we got okay. So yeah, I throw somebody out there, brother Jermaine, because I know you was I think you was busy last session. Are you able to open your mic, brother Jermaine? He may be compromised at the moment, family wise. Let's see, brother Ghost, are you able to open your mic by any chance? Let me see who can get their mic open here without spooking the family, right? Brother Dundre, brother Al, any one of you guys? Any one of you guys have the ability to open up? We didn't do you last week, brother Rich, did we? No, we didn't.
No.
We did, right? Because we got close and right. So I could do you, brother Rich, because I know you got a little, you stable right now at the moment. If you will, if you don't mind, over Rich, you open up your mic here,
Yes.
and we'll kind of go from you, and we'll kind of go outward from there. So this is again part 2 to what we discussed last week. So what are market signaling? Right now, you have the ability, if you want to share your screen, you want to go into a specific entity of a trade or this, that, and the third, you have the ability to do so. Just let me know. I stop sharing my screen, of course, and you have the floor. All right. So just asking you that same question that we asked the panel last week.
Right.
Essentially, what are market signaling to you right now? Right. And the caveat to that is that, is this about a dip moment or no?
Two good questions. Well, from today, it looks like the market turned around early in the day. It got up to 433, then it started going back down. And it kept going back down. It kept hanging around 430, 431. Then I was looking on the BBS board, and they were buying up a lot of puts. So they were just pushing the market. Every time, somebody bought calls, they would buy puts and then another put and just, pushing the market down. So I know they didn't want the market to go up. So it was just bearish.
So the overall sentiment.
So my overall sentiment is the market is bearish at this moment, but it could possibly change because, okay, we got the sinusoid waveform. Since Biden just signed tonight, he signed the bill. So possibly let's see the futures overnight, see how the markets open up. But the market's funny. You might think it's going up in psychology, they pull it back down below 429.
Interesting. And that's an assessment that we've been able to witness firsthand based upon what a lot of these futures over the past, let's say, weeks, right? Well, let's say, especially over the last 3 days, right? Where we having these massive blowout future sessions. And then when retail comes to market, what happens? They deflate all the money and all of a sudden they pull all the money back.
Yep, they well, they put you in a bear trap. A bull trap. They act like the market's going up, and then you look like 10 o'clock, 11 o'clock, they start pulling it back. You see all the puts. You look on like Black Box or other scanners, you see they start pulling it back. The time you get calls, you get a couple of puts. Then you get calls. Then you get somebody like institution drops like $1 million worth. They buy up like put contracts, and they start pulling the market down.
Now, do you think that's basic? Well, essentially, of course, funds are always trying to stay, well, they always seeking alpha, of course, but
Yeah.
is this more of a hedge-laden environment as opposed to an aggressive risk-on environment? Which we kind of know that's somewhat the answer to that, but I'm just kind of just asking you in that perspective. Where do you think the market's at now?
I think you always should hedge. I'm just looking back when the market was, I don't know if you guys remember, about a month ago, the market got up to like, the SPY got up to 453. And that's when it started, slowly coming down. Now, if you had bought a put and held that on, like the brother Marcus was saying in the group chat, he was talking about it, he's going to start buying puts. So if you have, if the beginning of September, if you had bought puts, and when the market was 450, okay, you're showing it. That was the peak. Right. If you had bought some puts and just chilled, you would have got 23 points. You would have been sitting pretty.
Now, interesting, because again, this is why these training sessions are important. Why? Because we map this out.
Yes,
we not. We were ahead of this. We were talking about it. We were politicking. We were saying, okay, not now, not yet, not yet, not yet over here, not yet over here, not yet, not yet. Okay. Now we're starting to get to that point. Why? Because September's a bad month, leading to the October effect. Now we got Jackson Hole. On top of that, we had the FOMC meeting that was very important. The idea that they had to start really thinking about taper because the inflation was starting to run out of control based upon what the CPI data and also the PPI data, right? Everything had came to a mashup or a head, so to speak.
Right.
Make sense?
Yes. But you know how they get you, right? Every week they go up, they go down a little bit, then they fool you and they pull it back up. Look at the chart. And then they pull it back down. Meanwhile, if you had just bought puts at the beginning of the month and you just stood back and just read the market, got the big picture, you would have seen instead of every day, mess with the market.
Now, again, that's definitely based upon, again, like I said before, each individual perspective of what you guys have as individual traders in your journey, in your walk to become more, solid in y'all craft. It's being able to read that aspect of the market that not necessarily is so what? It's not so much in pictograph form, right? This is more understanding what they call, this is what they call experience sentiment, right? Experience sentiment. There's the thing, experience sentiment, right? Warren Buffett is definitely a person can give you what they call experience sentiment. Why? Because he's been through crashes and bust cycles and boom cycles, right? He knows emotion, right? He knows these things that become major catalysts for markets once things get out of control. We talked about it earlier when they do a run on you, on stop losses, right?
Yes.
When market makers are doing that and they're doing a liquidity run and they're triggering people because they know they're mostly compromised. They in the mode now where they're starting to capitulate, right? But here in lies where we kind of say, okay, we know we getting ready to come to some kind of form of inflection point, a crucible moment. We had been talking about it back here. We had been talking about it over here. We definitely talked about it here because it wasn't ready yet. That cake wasn't ready yet. It was not ready yet right there, right? Because we know that at that time, what was still happening to kind of pump the brakes on the ideal of what the Fed thinking about tapering. It was the ideal that what the Delta variant was still what
Yeah,
being
pronounced.
a headline topic that people just couldn't really shake, right?
Right.
And then eventually that began to subside when the idea that a lot of the market or economy constraints were starting to hit the average everyday American, in their wallets, right? Right. Retail spending had went up and then it came back down. Then it shot up a little bit, then it came back down again, right? The retail numbers basically, consumer basic numbers. So that was signaling a lot of different things, right? So again, when we were like, okay, now we're getting to a point now where you have what they call market exhaustion, where all the sellers, or excuse me, the buyers are basically what exhausted. Now, even though they keep talking about trash, but there's still a lot of money on the sideline. People wait to get in the market. Yeah, but a lot of those people ain't stupid either. Don't you get sucked into that CNBC stuff when they be trying to talk
Yeah.
that trash about, oh, everybody, still a lot of cash out there in the market. Well, the reason they jump out there in the market and buying up at the all-time highs because they know what something is brewing, right?
Right.
Makes sense. They
But
know something. Go ahead,
my,
over.
my fault. I was gonna say they don't tell you which direction, which way the cash is moving up.
Right, and see that's the part of the individual responsibility that we are, all as investors and traders have to be an account for on our own. Why? Because yeah, you can only get us, they're only going to give you so much. Why? Because they're answering to fund managers, right? Every fund manager come on the CNBC most on average, at least 90, I would say 94, 95%. These people got what? Clients. And they got to keep their clients what? Happy. And they got to keep them clients what? Either net neutral or net what? Net positive. Right? So they always gonna be talking about, yeah, now's a good time to still what? Buy the market, right? But
Mhm.
what they don't necessarily account for is like, okay, well, you have to account for, I should say, where are areas that you need to focus on potentially buying, right? Who's been
Collection.
riding the gravy train through Biscuit, Gravy Valley Biscuit Wheel from this point all the way up this long, right? Those certain sectors, right? And when those sectors start to kind of what? Fail, who's the next one to kind of what? Start stepping into to kind of what? Fill those voids, right? Right? Because even though you see these red candles right here, that means somebody make money to the upside. Even though you see a big bash and go for candle like this one right here, that means somebody still made money to the upside on that day, right? Let that marinate for a moment, right? It's hard to fathom that sometimes. You just think about, man, that's a lot of pain right there. Somebody lost a lot of money that day, right? But yeah, but somebody always also made a lot of money going up that day too, because they were in the right sector, right? So that's how markets work. It's not there. As they say, it's a sum total, right? But there are also individual moments too, and those individual moments account for you understanding where all the places they're now starting to hide out in, when they can't hide out in their most usual places like tech, right? Which we know they always hide out in tech. If you can't hide out in tech, because tech getting decimated because of what? The yield running, the 10-year yields ripping to the upside and the dollar ripping to the upside, then where else can you go?
Cyclicals.
Right? We talked about that a lot. That's why people like, now y'all see why I keep talking about all this stuff. Like, man, why do brother keep going on all this old, this deep into this Wall Street jargon? This is why, because you got to understand, right, the cyclical nature of markets in terms of where you can move cash to when something ain't working that you might be familiar with, right?
And bank stocks.
Say again.
Bank stocks.
Well, of course, banks too, because guess what?
Because the yield is going up.
My man, right? I was about to ask that question. What causes banks to start to catch a bid? Right? What has to work in their favor?
Yield.
Right? So the 10-year yield, right? 10-year, even the TLT and the 20 and the 30, right? 30 is not to a definite 10-year. Everybody focus on the 10-year yield for a reason, right? Because that's where a lot of these companies and corporations, they borrowing at those at debt, debt value to finance a lot of their product, right? Cheap money for a whole lot of way, right? A little something strange for a little something strange, right? A little piece of change for a little something strange, excuse me. That's where they hang out at. A lot of corporations hang out in the 10-year yield perspective. So anytime that 10-year yield is going against them, that means it's hurting their what?
The bottom line.
Their credit power, right? Their borrowing and credit power is being now tapped a little bit because now they've been used to getting money at what? Banks at 0 interest rate, right? right? And so they payback is like, basically peanuts on the dollar, and they're taking billions of dollars, right, of America's taxpayers' money. That's who basically paying footing the bill. I hate to break it down, break it to you, but that's where they're getting it from. It's taxpayers' money, future valuation. They taking that money. Some of them R&D, the rest of them are not. They're just taking that money and doing what? Sitting on it and using it for what? The ability to potentially, right?
Loan to the retail.
Buybacks and stuff like that too.
Yeah.
Right? Because they can't really tell them what to do with the money once it's on their books. You just know that you have to pay it back, right?
Yes.
That's how Wall Street. There's a story behind that, but that's another conversation for another day. But this is how Wall Street stays in business. It's exactly how they stay in business. It's the recycle game. It's the same thing, basically in tandem to that of the reverse repo operations, where they're just recycling all this liquidity back through these institutions. And the investor only benefits if he or she sells or liquidates some of those positions during the buyback. Because most times when a company does a big buyback, the stock price usually does what? Go up or go down. The stock go up or down when the company do a buyback.
I would say it's going up.
They go up, right? They buying back shares, right? They decreasing a lot of the outstanding shares that are out there floating around the market, right? That means it's in-house and it's now being diamond handed. I'm using the AMC. It's being diamond handed by the company, right? What better place to feel comfortable about your shares of your company being controlled than by what? The company.
Yeah.
So if the stock goes up, the only way you get a chance to take advantage of that 7, 10%, 20% bump up sometimes, some of these companies do buyback, is you have to do what? You have to hit that sell button. If you hit that sell button, that means you are responsible for the what? The capital gain tax. That's how they get you. Right? That's how they get you. Right? So you would have to sell to take advantage of it. Right? Now, instead of saying, okay, we got a little extra, why not let's just pay out some really nice what? Dividends or special dividend. See, they hustling. But anyway, I'm saying all that to say this here. Because y'all know the banks just obviously got off what? Off punishment or suspension, back in December of last year, where they can now start to do what? Do buybacks and the executive bonuses all over again, right? Because these are the biggest crooks, right? So, and on top of that, in a low interest rate, banks are suffering because they can't really loan money to make money. They make money off interest, right? They middlemen, they parasites. That's what banks are. Essentially, that's what they are, right? We know that, but we're going to keep hammering that because we want you to really understand exactly their place in their position. So in a case where everybody's been on the other side who are innovating and doing other things outside of the banks, because they only make their money through interest and stuff like that, they got a chance to really break out. Now, if the 10-year yield is starting to now rise again, right? Because people are starting to what? Dump bonds. That's how this stuff works. Y'all know they have to dump bonds or sell bonds, right? If they sell and dump bonds, that causes the yield to do what? Go up or down. If they selling bonds, that means yields are going up or down.
Down.
No yields. Now keep in mind, if they selling bonds,
they're going up.
Oh, yeah.
they go up. Yeah, they
Yields
go
go
up. Right.
Yeah.
So that if y'all ever hear, when we talking about CNB, like, the yield is rising. Well, since if yields are rising, that means they're what? They're dumping the what?
Bonds.
They're dumping bonds. What is Jerome Powell doing right now to keep the yield from rising? He's trying to do what? Buy what? He's buying bonds, right? How much is he buying every month?
120 bill.
Specifically, how many in terms of the treasuries?
120 billion.
No, yeah, but that's the overall number for two parts. But what specifically is he buying strictly for bonds and bonds only? There's a certain amount that he's spending on bonds only. It's 120 billion, but some of it allocated towards MBSs, mortgage-backed security, and the rest of it allocated towards bonds. How much is going into bonds?
I can't tell you.
You
that.
know it's definitely bigger than the what mortgage-backed security because they trying to keep the 10-year yield what subdued, right? They're trying to beat the animal back in the closet, get back in that closet,
Hold on, don't say that yet. Hold on.
right? They trying to keep the pit bull from getting off the chain because you know you're gonna chase them kids down the street if you get loose. Y'all know, y'all know been in them hoods like that. They try to, hey, you know, hey, don't mess with Tyrone, boy. That dog over there. That's essentially what they're doing, though. So the bonds, right? They're buying essentially. Or I'm trying to give y'all a minute to kind of get it, but we'll jump into it. $80 billion worth.
Yeah.
80
Yep.
billion
Mm-hmm.
of taxpayers' money.
Yep. Treasury securities and 40 billion of mortgage-backed securities.
MBSs are 40 billion.
Yep.
Right. Now again, y'all didn't have any say so in this. All right, being the taxpayer.
Didn't
Right.
text me nothing.
Right. Ain't nobody sent you no pamphlet in the mail, no nothing, right? No brochure, no nothing. Now they'll say we're doing it in the best interest of the American economy. Why? Because we have to keep our debt to equity ratio somewhat balanced. Well, we just had a what? Basically about a $9 trillion run on onto the what? The Fed balance sheet. Right? Because of what? The idea of a catastrophe to the point where everybody is scared, screaming in the streets, while the feds and Congress and corporations are what? Double dipping into what? American taxpayer money, literally robbing people right underneath their noses. Why? Because they understand that the majority of Main Street Americans, for the most part, outside of a 401k, maybe a TSP, possibly a Roth, possibly. These are you see the words I'm using. Very maybe if and maybe possibly. These people do not own appreciating assets. So how are you benefiting off them doing these kind of purchases on your behalf with your future tax dollars, and then you acting as if you really receive a benefit from it? Somebody make that make sense to me.
Mm-hmm.
Make that make sense. So if you're not gainfully employed and understanding how markets work, then you are behind it. You're behind 8 ball. You losing. You taking L's every day. As the saying goes, it's not about trying to time the market. It's all about what? Being in the market, right? Time spent in the market is better than trying to time the market. Why? Because if you sitting in cash, as our famous what astute Ray Dalio said, what did he say about cash? What does Ray Dalio say about cash?
Cash is trash.
Cash is trash. That means any savings account you got and you got some money bank, it's trash. Hate to hurt your feelings. I don't care if it's 100K or a million. If it ain't growing money on top of it or appreciating, it's trash. Why? Because what's killing it? The bonds, especially the Feds keep buying them.
Yeah.
It's causing the money market accounts to go lower and lower and lower and lower and lower and lower. So again, 2% on a million, it's a little pocket change. You settle for 2% on a million when you can potentially get what? 8% minimum on the SPY. Make that make sense. Make 2% bigger than 8%. Anybody go. Anybody. Her average annual yield, average of 8%. Make 2% or 4% money market yield make sense.
Ooh.
And that's if a person even understand what a money market account is, right? Or the teller sat down and told me, yeah, you qualified, to also, get a little appreciation. That's not happening. It is not, right? Because they don't teach financial literacy in America in a way where it is a prerequisite to what? A standard of living in this country. They're making it an elective. Finance, they make finance. Banking and finance is an elective in high school. Shut the front door.
Shoot, we didn't have that at all.
And some, we talked about it before. Some institutions, states, this, that, third, didn't even have it in their program, in their curriculum. Now, this all falls back on the Department of Education, of course, so they take the blame, right? They get kicked in the face for this, right? How you not make that mandatory under somewhat of a federal mandate? In public schools at least, right? Because you can't really, whatever, in private and charter, all this stuff. But public school, how dare they? How dare they? Why? Because they know the majority of people who go to public schools, especially on the east, up and down the eastern quarter, southern quarter, and some parts of southern Cali. These are who? quote unquote minority people or black people. They are focusing those kids to be able to again to be what? Worker bees. Again, we get that. This is part of the game. They don't need to know no more than how to understand what the checkbook is, how to cut them checks and pay them bills. Basically, that's it. They're not teaching them how to take that checkbook and what? Make angel investments with it. That's the difference. They're not teaching them how to leverage their credit in an investment world. Well, that's what the banks do they not? That's what companies do they not? Do they not borrow against credit and make investments with it?
Yep.
Now convince me how black people run around here with all this credit, buying Gucci this and Giuseppe or whatever that stuff we talked about last time, all this goofy stuff, and ain't nobody willing to put that credit to work for as investment value that they can take fiat currency, credit value, and turn it into real hard, tangible assets. Somebody make that make sense to me. Please, somebody make that make sense to me.
It don't make sense.
I can assure you that's what everybody else doing that's already initiated and know what's up and that's on code. They've been doing it since they've been running this thing since the beginning. They build out their credit and borrow against it and make investments with it. Now keep in mind, if they just turn a basic 8% on an S&P on a per annum basis, let's say you got $100,000 worth of credit. What's 8% of $100,000? What's 8% of $100,000?
8,000.
That's $8,000. That's $8,000 per year, right? Per year.
I'll take it.
You pay the credit installment. You meet the threshold or pay it off. Keep in mind, here's I guess grace, because we're not doing this on a 12-month timeline in most cases. Again, they could be in a stock like a Tesla or Apple or whatever the case. After they embark, that means that money is already it's out there. You got to pay the lender. Granted, that let's back up, right? And we just use the SP 500. Let's stay on the SP 500. I'm not going to go to some other stuff because it'll make you probably upset, right? You're like, God dang it, but this is how these are going to be coming up. Just 8% alone in that. How hard is it to make $8,000 in the SP 500 with $100,000 within a week? Anybody?
Options. Crazy.
Yeah, it's not that hard if you you season.
Think about that for a moment.
Even if you ain't seasoned, any food can luck up and make a couple bags.
That's the whole buy the dip crowd, ain't it? Buy the dip, buy the dip, buy the dip. They've been doing it. And they got spoiled doing it. Because they who was backstopping them? The feds.
Mm-hmm.
Because the feds doing what? Buying bonds, killing volatility, causing markets to kind of excruciatingly inch to the upside more and more and more and more and more, as you see on the chart right here. Besides all the calligraphy. Y'all with me here? Y'all see what I'm going with?
Yes, sir.
Credit is for leveraging. Okay, they don't tell you what to leverage with, but smart people either gonna be you start a business with it, right? Or you gonna learn how to put it to work. Companies put credit to work. Black people put credit to
celebrate. Really?
Boy, you know what I'm saying? Think about that for a moment. Let's see. Again, I gotta have that conversation because again, how hard is it to make $8,000 with $100,000 within a week? How hard is it?
Not hard at all.
And this ain't too now on horn, but we're gonna do it because we work hard over here.
Right.
And then turn $271 into like 16 racks in about 12 days. 12, 14 days.
It's definitely possible.
That went 271. 271.
Yep.
Now, if I'm overly leveraged out, not margin, but leveraged out on a full 100K, and I took that approach, do the math on that. That percentage gain on that. So you got it, what? The 13 was that's the difference. What 271? How many times 271 go into 13,
13.
13K?
Ooh.
Anybody get that math? Let me know.
Well,
How
if
many
you
times? Go ahead.
If you round it, it's 48 times. What? 47.9704797.
All right, so we talk about it roughly about that means that's over what? 480%? No, excuse me. Is that 480% or 4,800%?
No, that's 4,800%.
So around about 4,800%, right?
Mm-hmm.
That's 271 into 13 rep. So what's 4,800% on 100K? 4,800% on 100K. That kind of math there hurt your heart there. You're like, God, dog, bro.
That's 4.8 mil.
But you're saying that's $4.8 million, right?
Mm-hmm.
4.8 million. That was done every bit about what? 13 or 14 days. 14 days worth of trade, this volatility on this pullback in the market. So again, I asked, how hard is it to make $8 grand on $100,000 within a week?
Easy. Time it and get them charts right. Yep.
So y'all get my point here. Our job here is to learn how to what? As I'm going back to old school, this old school training. Read the what? We used to say this like read the what? Read them what?
Please.
Read them tea leaves. You gotta learn how to read the tea leaves. Well, what are these little green little things on the counter right here? That's new tea, right? What's some red colored tea leaf? That's some of that what that already what aged tea, right? You got green tea or you got some of that aged tea. You got Lipton and you got what green tea, right? That's what it is. It's reading tea leaves. Exhaustion. We ran right into exhaustion, and all the news came to a head at the same time. In the month that's known to have what? Bad, vibe value for what? Markets as a whole.
Mm-hmm.
This is the part of you reading the market, understanding what markets are signaling. Some of you guys are different stages in your journey and learning, but this is what we are trying to, in our focus group, right? This is not an echo chamber, of course. This is a focus group. We are a think tank in itself, right? We're trying to make this stuff make sense. So when you're out there individually looking at the markets, you're knowing exactly how to what? How to read into what's going on. Not to get ahead of yourself, but stay within the confinements of what you can account for every day. Even when you miss a trade, that's fine. Guess what? No harm, no foul. Even though you might be sitting mad because you might be counting dollars, it happens. That's human emotion. We get it. It happens. But it's the experience that you was what? You was mentally right. You put together the trade in your head. You outlined your thesis and it happened. You might just miss your entry. You might have been distracted at the time where you didn't get a chance to what? Take that position. It happens. It's better than rushing. It's better than chasing. But above all things, it's about you being in a position of learning how to read those tea leaves. Each individual candle uphill on this chart is a story. This is the daily chart. I'm speaking here. We're on the daily chart here, as you can see up here. Each individual day says something. If we back this thing out, of course, we know what it's going to look like, right? It's going to look like, okay, like this stuff can't even be, it's like, this saying, it's like this something out of a what? A comic book, right? A romance. Hold up, let's do it this way, right? Let me tighten it down and do it this way, right? It's so much in a straight line, linear line, you can't even get it all up in the screen. It just show you how these people just made all this money. All this money. Look at that. Let's go back to the COVID low. These are COVID lows, right? Right? Where we at? COVID lows? Close to COVID lows yet down here? COVID lows. 100K down here at the COVID lows. What do you think 100K at the COVID lows looking like right now in the markets? Looking mighty dang on nice right now. And you just really broke out of the trend band. Look at this. I ain't making this up. You just broke outside the trend band. You've been inside this trend band going back, goodness, man, way back here, because that's what it only stops at a certain point. It ain't been back in trend way back here, going back since, I don't know, further than that, man. This thing been in trend since here, right? I would say, Ryan, so around October of last year, this thing just been in straight trend. It's been before that too, of course, you go back here, but that's when we kind of fell out just a little bit slightly, and then we kind of bounced back. But we talking about a massive correction. This thing been in trend since then. And notably inside from here, from May of this year, look what it's been doing inside this band beautifully. We just finally broke outside of it to make this stuff up. So again, what are the markets signaling here? A lot of different things is signaling, but for the most part, kind of going back to you over Rich here, is directional biases are only as important as the energy of the market given that particular day, because it is subjected to change.
Yes.
Make sense?
Yes, it does.
Right? And one of the things I used to say a lot, y'all remember I used to say this a lot, he that is most comfortable is least likely to change.
Uh-huh.
Try that in the market. Try to get comfortable in the market. At a point where you know it's starting to change and you ain't, adjustment with Omaha, right? What his name? Peyton Manning, Omaha. You better audible. Yeah, people say, okay, markets get ready to go on discount, or some things are on discount, and they buying up here. They already buying down here. They bought up here because they thought the market gonna rebound, and they got what flushed down on there. So they wasted money. Not people ain't gonna say wasted. I'll take that back. Ain't gonna say wasted. It's just that your emotions got you right here.
Pay the
Some people
tuition.
say again.
Pay the tuition.
Right, they pay a little tuition because they could not see the market not being able to be what bought in terms of the proverbial dip, and we rebound because all we've been seeing is what V-shaped recoveries. See how that work? See how they get you? V-shaped recovery. See right here? V-shaped recovery. See right here? See how they get you? Right? Go a little further down. See right there? V-shaped recovery. It's almost at the same time interval. Look at that. Move the count, the dang on thing over, and it's lined up almost identical. V-shaped recovery. Couldn't make this stuff up. So we saying 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20 days. We did this before already, but I'm gonna do it again. About every 20 days, you have what?
Pull back.
A pullback. Let's over here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. Right? Kind of wrapping in that time for 18, 20 days. Pullback. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. Pullback. And this one came faster because what? It had reached the point of exhaustion, and we know all the news was coming to a head, like we spoke about. Y'all with me there? These are what you call nerd, or what they call stats for nerds, right? That little section on your phone that is way the back in the about section. That for nerds. Like, man, I ain't got time for all this stuff. I know about all that. Right. Well, guess what? This is a part of our job, guys. Yeah, yeah. Again, we keep talking about the market, one big pattern, one big trend, right? Well, let's act like we see it when we see it. Okay, we talked about this last week, right? Right, and we're gonna move on to somebody else real quick here, right? But for the most part, did we kind of hit most of that what we wanted to kind of discuss a little bit over Rich in terms of some of that?
Yes, we did.
Even though we're gonna hit a little bit more here, right? Let me clean this up here real quick, right? Let's yeah. When we ID'd this here last week, this is what we ID'd last week, right? Last week, where we looked at what beginning of the day, what happened?
Pullbacks.
It's right here. Y'all see that? When we was able to kind of ID that pattern, when we found it, it's like, oh, I had been seeing. I was like, oh man, I gotta share this with the family, right? Because I wanted if anybody else see this too, right?
Lower highs.
Yeah, y'all see that? Look at that. Look at that.
Mhm.
Mondays. Excuse me, Mondays. No, the first hour in the market. First hour in the market.
Yep.
First hour in the market, right? First hour in the market. First hour in the market. Look at that. First hour in the market. See right there?
Sounds like a pattern.
Right?
Consistent.
Y'all see that consistency? Now let's go to where we at now, right? That's what we ID'd last time, right? Let's go see what the market might be looking like this time. First hour in the morning. In the market. Keep in the morning. First hour. This one was different because we established a what? A clear what? Reversal.
Yeah.
See, that ain't rocket science at that point because you clearly made a reversal. You bounced, you found support, you bounced.
Pivot.
Granted. And you was what? And on top of that, we learned how to read the tea leaves, right? What's this down here? Somebody tell me what that is down there.
RSI.
What that thing say?
Oversold.
What thumb that? What brother thumb that? That
Below
30.
over
Go below that 30.
You buy.
You buy. What brother thumb that right now? Boy, okay, that RSI go over 30, but I'm buying. That thing go over 70, but I'm trying to sell a little bit, right? Clearly, we were due for a bounce. Look at the gap down. That was expansive gap down. Expansive gap down. SPA ain't seen the likes of that in a long time. SPY market was like, man, this is so we ain't never seen. We ain't built for this. Cause all we know how to do is buy the dip. Yeah, they buying dips and get ripped. So clearly, y'all see this here. Look, we ain't making this stuff up, man. When the uptrend began to kind of subside and you began to go what they call net neutral, right? The market just kind of went iron condor style, right?
Oh yeah.
Then we kind of played the game of what? We
Peak
still
control.
somewhat trying to tread bullishness, but we still got a lot of what? Bearish sentiment. Why? Because the only thing we did is made back to a what? Somewhat of a marquee or demarcation line of what? Potential trying to decide the sentiment of the market going back. The market was already beat down at this point. That means we were still in what kind of trend? Bearish or bullish trend when we got into this area right here. What kind of trend were we still in at that point? Were we in a bearish trend here or bullish trend at that point since we bounced? Anybody?
I would say bullish because you were on an uptrend and you went into a channel. So you had to, so you stayed in the channel until either you pull back or you continue upward.
So you continue upward. All right. Anybody else? Anybody want to tack on to that? Anybody else want to add something to that? Bearish or bullish at that moment? Once we hit, bounce off the lows and got into this consolidation zone here, are we in a bearish trend or are we bullish trend?
From the looks of it, it looked like it's in a bullish trend. Ain't that a bear flag? I mean, a bull flag.
Flag, exactly.
Right. So you got a bull
But
flag, you got a pronounced bounce, and you went into consolidation at or around a certain what? A moving average, right? A solidified moving average, which is in this case 200, right?
200, yes.
On the hourly chart.
Up
Now,
into
Hourly.
go ahead. Somebody about to say something? Somebody else about to say something?
up into the right.
Okay.
Up to the right, right? Now let's take it a step further. We're trained to read the tea leaves, right?
Yes.
Mm.
Okay. We always look to the what?
To the left.
To find the what? The future, right?
Yeah.
What does the left say? Bear flag or bull flag?
The left says bear flag.
Y'all with me there? Everybody understand that? Or anybody unsure about that? You got all this here still higher than what? This right here. That means all you have right now is a series of what? Y'all know we talk about this a lot. You have a series of what?
Bearish sentiment.
Or as we know to be what?
Lower highs.
Lower highs.
Yeah, no, nice.
When you establish in a downtrend, you establish a downtrend by its what?
Lower highs.
It's lower highs.
And that's that gun,
was, go ahead.
that gun line.
That gun line. Tell them about the gun line, boss. You cross that gun line, we gonna shoot you, right? If you even think about, hey, we gonna shoot you.
That's the 200 day moving average, right?
Yep, that gold one. Yep, and this on the hourly chart, right?
Mhm.
That's the gun line. But all it is it stay at around the gun line. Jangling and they were hanging out around the gun line, testing massa. They were testing it. I'm gonna stick my toe outside this thing. I'm gonna see. But all it did was stay in a what? In a lower high, and you double top it on top of that. Look at that. Boom.
Hidden resistance.
I'm seeing that and saying, give me a bullish catalyst to turn this market back out of this bear flag to kind of get them back to a point of what? Contention for the bullish sentiment. What was out there that they could have got to turn the market at that time? Keep in mind, this was only what? 4 or 5 days ago. What was on the table that could have turned the market back bullish?
Debt ceiling came up with a resolution.
Stop buying bonds.
All that we
Yeah.
talk the bonds, right? Right? Not James Bond, but the boom year. Now I'm go. There you go, brother Mike. You can go to German on y'all. Germany in the boom years. I get the booms.
Gutenfrau.
Them German booms. Look at him. They already knew what was going on, right? But since they drug that out because they made it a political football, it killed the what? The sentiment of the what?
Market.
Of the market.
Get rid of COVID, one or the other.
So all you did was bullish bounce. All you did went back to a place of saying, let's catch our breath, right? Because look at here, I'm gonna make this even make more sense to you, right? Because everything down here, let me use the color, right? Everything from this point here, look at it. It's still within that chunk. See that white line there? Everything
Yep.
below this here is essentially can y'all see that there?
Water.
Underwater. What?
Underwater.
Oh, okay. I had a full screen. Okay.
Everything below that trend channel band right there that we kind of established right there is underwater.
Right.
So all this underwater.
We done sank.
Go ahead.
We done sank.
Right? At the saying goes
Sink or
in the market, you sink or what?
Sink or swim.
Right? All y'all should know what that means. Sink or swim. Now, even though everybody ain't subjected to it, because Wall Street don't seem to be what? Have to subject themselves to it, right? They have bad business practices and they still get what? Bailed out. Yeah. With taxpayer money. Let's make this stuff up. Right? Move on, brother. Move on, brother. I'll be there for hours on that one. Sink or swim. Everything under that trend channel right there is underwater. You barely getting back above the trend right here. That basically means you got your what? Your head barely above what? Barely above what? Water.
Water.
They call that what? Treading. Right? Where my swimmers at in the house, right? Right? You tread in water.
Mm-hmm.
Now I'm gonna ask y'all this here. We're using physics, basic understanding. Is treading water bullish or bearish?
Treading.
Treading. Is that bullish or bearish?
I'm gonna go bearish on that one.
Yeah, because if you don't tread, you're going down.
Make it make sense, right?
Sure.
Look at him.
Yeah, when I say you trading on thin ice, that means sink or
See how that saying? See how the cloaking sayings work out? See, I keep telling y'all, read the tea leaves. Right?
on thin ice.
Look, you on thin ice, bro. You treading on thin ice, boy. You gonna get a whooping. Keep on playing around. And your mom be like, "Yeah, keep on." I'm like, "All right, all right." If you treading, that means you what? You barely hanging on. That makes you still what?
Mhm.
Bearish in sentiment.
Yeah,
You go back
yeah,
under anytime
that's what it did. Sunk.
because see, if the saying sink or swim, here you trying to keep from what? Sinking. If you tread,
Mhm.
you trying to keep from sinking. You ain't stretching out there like Michael Phelps or one of them. You ain't swimming, right? You trying to keep from sinking.
Kicking and punching the water, trying to get back up.
Going nowhere fast.
Mhm.
Fish there looking at you like, look at this idiot here.
Man,
Right?
shark done pulled you down, man.
See what I'm saying? So this is a part of our game plan, guys. We ain't making this up. Y'all know me, right? That's one big what? Y'all know I love talking about them.
On
What
the
about
top.
them rounded tops? Ooh, boy, rounded tops make them drop. Somebody look at it. Rounded tops make them drop. You exhaust your catalyst, you got what? Nothing. And not only to show you how markets work in terms of where they have now kind of given up the quote unquote the ghost or the implied understanding of what that may be or mean, or to you, for a lot of people like, well, okay, man, they're giving up. Okay, let's put some context on this thing. Now let's come over here. We talked about this too. See, over here was the same thing. Matter of fact, let me go back before we go there. Right over here was the same thing. See right here. Let me do this line.
Mhm.
That way I make it very demonstrative. So that way y'all know exactly what I'm doing. What was that right there? Double bottom? Was that a double bottom right there, guys? Was this a double bottom right here, guys?
Oh, yeah, you can see that. Gap down.
Would y'all consider that a double bottom or something else?
Nah, it's no bottom.
It's kind of a trick question, but I do this for a reason.
Yeah,
Is that double bottom or something else?
because a double bottom, it would be
Dead cat.
vivid.
That and a double top.
But you got a gap right below.
So if we broke, that means it's not a what?
Not bottom.
That means it makes it a what?
That cat bound.
Double
A
top.
dead
Double
cat.
Bounce. Yeah.
Dead
A
cat
dead
bound.
cat. That's the saying goes. You drop a wind out, a cat out of 2/3, but he'll bounce at least once, right? Right?
Cause it pretty much stayed in range like a channel, and it broke down. It broke
And
down.
that means it was a dead cat. Fool's gold, dead cat bounce. A lot of people that bought calls here, because that's what they're doing. They start loading calls. Oh, we back. About to dip us back. We going to 450. 450.
That's
So
right.
in operation.
Boom, pull them back down.
We went to the order flow chart. We looked on bar chart. What bar chart was saying that 450. Remember we did this? Go look at the video. We got the video. Like we said, we got the evidence, bro. We got
the
state
receipt.
evidence. We got the receipts. They
Mm-hmm.
loaded up at the 450s.
Come here.
Did it because
Come back down.
come right back down. Ooh, come here. And flushed them off the top of the channel. 446 area down. Ran them all the way down. I mean, look, ran them down. Ran them all the way down. 428. Ooh, look at that. Look at that gut there.
Come here.
I'm talking about, look at it. Boy, 4-barrel carbureted, but that old school sound.
Took the
Right?
lasso out.
And they gave you the back tire. You can't even walk it down. You say boat style. But think about that. At 445, 446. We saw it. We talked about it yesterday. All the way down to 428. How many points is that? What's 445 minus 428?
That's 17 points.
17-point runoff. In how many days?
Nice put.
Yeah.
That was every bit of how many days?
Not
Oh, yeah.
even a week.
2 days.
2 days. Oh
Let
yeah.
that marinate.
Wow, that's a nice put.
Days, 17 basis points runoff. Off the what? The dead cat what?
Out.
If you wasn't prepared for that, Because there's the thing that we've been talking about on this channel on basing our training for quite a while. We're gonna continue to talk about. It's called what? You gotta learn how to what? Starts with an H, ends with an E. It's called what? Hedge.
Your
Say
position.
it with me.
Hedge your position.
How you don't see that kind of egregious pullback? You get a small bounce it upside, and all of a sudden we back after that kind of barrage of selling. Somebody dipping. Somebody dipping out the door. When you have that kind of level of egregious sell off, you always think about hedge. You always should think about hedge. That's what y'all hear me say about what? Y'all hear me say this like about what? 4 down, right? I say about 4 down and what? 2 up. If I got a 4 down, 2 up, that means my sentiment is what? Obviously gonna be what? What's 4 down and 2 up mean?
50%.
Bearish.
Clearly bearish. 4 to the downside and 2 up. Clearly that's bearish. If it's flipped on the reverse, 2 up and 4 down, then you know I'm speaking more very what? I'm
Bullish.
aggressively bullish. Here, all I saw was the bounce. We hit resistance. We charted the resistance right there, y'all. We was right in class talking about it. Like, here's our resistance, guys. Right? Y'all was there. We got the receipt. Here's our resistance, guys. If we can't break above that, matter of fact, me and you, over Jeremy and a few others, we implicitly spoke about that resistance around that 446. If we can't break it, right?
Remember that? It was what was that? A spinning top candle. It was short, fat, red candle on the chart we had.
Was it this one here? Was the guy right here? That one right there, right? And we broke. Look at the bearish candle that followed next day beside. You rather right back up closer, didn't even get back all the way up there, because you know that's a sign of weakness. If you can't go all the way back to retrace the entire move, you wicked out, but you didn't what? Body candle move up. That means that's what? That's obvious.
Selling pressure.
That's
right.
Yeah.
Sink or swim, baby. Sink or swim. Clearly. All I need to see is 446 resistance. That second day, I saw that wick right there. On that wick right there, I literally because y'all now spoke about that. I showed y'all know I got the receipt. I posted in the group. I literally went 7 down. I had 7 puts. Total what? I think I had about 9 because I had, was about 8 or 9. Because I had some in Robinhood and some in the Webull. And I only had that point, maybe, I think I had maybe 2 up. I went 7 down, 2 up. Off that resistance, that weakness.
How about Tasty?
That's what it was. It was total. It was total about gosh, it was total around about what 9 puts. I think I had like about 5 or 6 or 7 in Tasty work. Then the rest of them was in Robinhood. Again, you know, it's in the
money
group.
was made.
That was a 2-day drop, 17 basis point, 2 days on a 7 down, 2 up. The 2 I got out and still got out with them somewhat unscathed.
Went down with the anchor.
See what I'm saying? I still was able to collect a little premium, although if not break even or a small loss, because it didn't matter at that point, because the first candle, all I need to see is that first candle. We had talked about it, that first hour in the market. You're gonna have that flash up to try to save it like they always do. You're gonna try to save it. It didn't work. I instantly closed those 2 calls out. I'm finna ride these puts down. Slave Bell style.
So my call fast, but I got out real quick and then bought some puts.
You know what I'm saying? That's how we are learning how to what? Read the sentiment. Again, this is more of a trader sentiment, but guess what? This kind of level of intuitive scouting and assessment follows you into your investment career value too. Y'all with me there?
Yeah.
Because you're more poised to make better decisions in terms of where you may find a good discount buy when you didn't see the market acting nutty like this here, acting silly. You're like, no, I'm gonna wait on a little bit because I think I can get this thing a little bit more cheaper. Now, even though it's gonna be a long-term play, but guess what? Look, buy low, sell high. See all this up here, buying bullish right here, aggressively bullish. That was emotion. I know a lot of people in some of the Discord, they was buying up there. They was strictly what? Emotional. Because they could not believe that they buy the dip theory was not working all of a sudden. They clearly didn't see this thing arching up, hit resist in the channel, and plan itself back to the downside because they could not breach that 446 resistance. But we saw it and we planned for it. And a lot of us bought puts. Clearly, I mean, that was just, and they were dirt cheap.
They was dirt cheap.
Dirt cheap. I'm talking about Georgia Red Clay dirt cheap, right? Dirt cheap. And we ran it all the way down. And then guess what? Now you're playing again. Going back here. Let me clear the screen. You got gutted for 17 points. You rallied back from 428 and you came as high as around about what? Your new resistance became around about what? 444.
44.
That means you are in a what? A lower what? A lower high. By training standards, patterns and trends and recognition of a trend, we understand that lower highs denote what? Downtrends or bearish until what? Proven otherwise. And guess what we did? Right back down and broke that low today. Dang near. Matter of fact, let me show you how the market's really gangster. Y'all see that right there? Let me do this. Y'all got to see this here. I was sitting there watching it too, right? I was busy. I was running around doing some errands and all that. I'm still getting in, but matter of fact, I had to go up in Best Buy. I was on my cell phone. I was just grinding. She was like, "What you doing? You focus on that?" Yeah, I'm working. Right? I mean, I'm working. Look here. Let me show you this right here. Hold up, let me clear this here. Sorry, forgive me. Y'all with me? Y'all with me? Y'all, everybody with me? I know we got get a few people. Everybody with me on the live here?
Yes, sir.
Brother Brandon,
Yes,
brother
sir.
Rich, brother Jeremy, you with me? You with me?
Yeah.
Brother
Yeah.
Ghost, you with me? Brother Jermaine, Sister Kiana, I see you came to the building. The illustrious Miss Eel in the building. She's been crazy busy lately. Happy to have the sister in the house, right? Right, Sister Kiana, Brother Dundry, Sister Avril, excuse me. I'm about to say Brother Al, but yeah, Sister Avril, right? And everybody on the YouTube side. Look right here. What do y'all see right there? At that crosshair section right there.
428, 86.
On what side?
Right side.
On both sides. When you agree with that?
Oh yeah. Okay. I gotta
How they
stop
do you?
zooming the screen. Yeah.
See how the markets do you? They slam the brakes right at that what?
That
Previous low.
Yep.
Tell
That's
me
tough.
charts don't have memory. Go ahead. Oh, I'm sorry.
I say yeah, that's tough.
That's tough, dang. See how they do you?
Yeah, I had posted that. Yeah, it came back from the 20th of September.
Well, I seen
Yeah.
430.
Yeah.
I'm like about 4:30, 10. I'm like, yeah, it's about to break.
Yeah, I saw that. I was like, uh-oh.
Break right before the market too. It was like maybe about 3 or 4 minutes left, and they said, "Come on."
And they dropped that old piece of try to say the market press release. Oh, they agreed to the term. Remember, I think I wrote somewhere. I say all that stuff ain't number window dressing until they actually sign it. If they ain't nothing being signed, whatever. And at that point, it was almost but certain that the markets had what? Priced in.
Mm-hmm.
The markets had almost but basically priced in government shutdown.
Yep.
Why? Because they had a chance to get it done, get her done. I'm gonna use that terminology now. They had a chance to get her done way back. What here? This is where it was very critical. This one is supposed to have got it done right here. Why? Because you was at what? The 200 moving average. The market battled all the way back to get you above 200 moving average, which is a launching pad
Mm-hmm.
for uptrends. And they dropped the ball. They dropped the ball in the Senate, whatever, House, whomever, government as a whole. They dropped the ball. Wall Street bid the market all the way back up. You know, that That was uphill climb. They dropped the ball.
Always doing that too. Always trying to make something
Criticize
new.
everything.
Yeah, to try to push the market up. I'm like, y'all did this on purpose, man. Y'all waited till the day right before, you got to get a deal done or else. They knew what they were doing. This stuff is not it's not made up. It's not coincidence. They planned it just like that. They knew they was gonna get the deal done today, just so they can look good. Like, oh, we saved the world, man. Get out of here, man. Cocaine operation. We know this. We know what it is.
Constant. I ain't even had my camera the whole time. I thought I'm just going in. The whole time they knew it. And they allowed it to to politicize it, and they failed the market. And it's weird because the headlines that came out yesterday and the day before, they were literally saying if they don't get this done, it's gonna tank the markets. When they start putting that kind of news out there like that, they're signaling, they're dog whistling essentially. Hey, y'all got to get this done. Because the market tried to give you some get back. Y'all failed it here at the 200 moving average. Now people in trouble. And just to look, clockwork. Tokyo drifted all the way back down.
Let's see that's not your number.
You had to. Oh, somebody mic open. Brother Rich, that's you? Yeah, brother Rich, I got it. No, I got you. No worries. You handle business. I got you. So that was just, again, all you seeing is here, right? I think that was Brother Dollar Will. He spoke about that on one of our live. We was talking about what the ABCD pattern, stuff like that. ABC different pattern, right? You kind of seeing what's going on here, and back down. A, B, C, D pattern right there. Right? I mean, Mark is just signaling all kind of scenarios here, trying to, whatever. Now, clearly, we on the lows. We're dancing with the Grand Reaper, right? They need to bounce. If they're gonna take this market all the way back down to literally the previous lows from that last dead cat, flogging, literally, then they're gonna need a bounce, right? Because if they lose that support right there tomorrow, but I would just say on a look, on a conservative level, we could easily see 426, 425 tomorrow. Conservatively.
Yeah, let's go ahead. 390. 400.
Right. We already did our check down. Remember, we already did our percentages of drops, right? We did our 5%, 10%, 25%, we did our 50%. So we prepared.
Yeah.
We know our levels. If you got it, go back and look at the video we did. We broke them levels down already. We already prepared for certain levels if they're gonna drop it. 5, 10%, 25, or even the 50. Yeah. I saw something the other day, they were talking about 66%. I don't know, they pushing. Somebody like 6%.
Business Insider. Yeah.
Yeah, Business Insider. Yeah. 66%. Like, woo, boy. Y'all
dropping that low.
Hard tech.
They dropping that low, boy. I'm gonna load up.
You know what but see that all that stuff is synonymous because now if they obviously, that's why I say what's tonight's topic? What's tonight's topic we talk about? Right? Right. What are markets signaling, right? Yeah. To buy the dip or no? Right?
Yeah, if they don't pass that debt ceiling, like that's gonna tank the market. I mean, Jenny Yellen told them.
October 30th.
I think she said October 18th.
Yeah, she said
it is 18th, sir. I did say I'm right. It's 18th.
Yeah, that's only a couple weeks away, actually.
So, very important, right? Buy the dip or no, right? So, they need that dip. They need that dip to hold. They need that dip, guys.
They gonna wait till the day of and say, "Oh, we signed a deal. We got the money to pay the bills." I'm like, man, y'all on fugazi, man.
Again, markets are always trying to price in what? The future, right?
Yeah.
if the markets don't know how these gonna go, they can't price it in. They can't bid the market up. You know what I'm saying? That's what caused this drop right here. They failed to bid the market up into that point of consolidation there at about 200 moving average here on the hourly. They failed, and the market said, "Okay, we out of here then. I'm out." Essentially, the market is through the deuces. I'm out of here. And put buyers like, okay, game on again. So it's look, been crushing it. We've been crushing it. You got to stay within the confines of what you can account for and atone for, and understand this is how markets work in terms of sentiment, energy. I'm talking about your level of focus, right? You can't be distracted. Again, I'm speaking to the traders right now, not the investor. You can't be distracted out there. You got to understand all the rules of engagement, how to read those tea leaves, and how to again read that sentiment, right? That bullish or that bearish sentiment. That this is a part of it, your psychological valuation, your psych eval of markets. As an investor, you are what? A psychologist, you're an engineer, you Elon Musk, you Tim Cook, all right? You Satya Nadella, you all them, right? As an investor, you are that CEO, that CFO, that COO, that CIO. You are all those and then some. You're essentially board member on that company. Right? So again, all this is a part of your, or you building out your ability to be able to read these tea leaves. As an investor or a trader, it's incumbent that you take the time to learn these little small minutiae of markets. Why? Because it's a benefit. It's a net positive benefit. What do you give? What are you losing? You ain't losing in learning, right? That's a t-shirt moment. I don't know if it went out there like that or not, but that's a t-shirt moment right there. You're not losing if you learn it. Right? Y'all have to own that. Again, study time is serious. Charting time is serious. You're trying to be good at being able to, again, not necessarily time the market, but understand time in the market. Time in the market gives you a little bit more. It gives you a little bit more perspective, context. Because now I'm saying, okay, I know I've learned the different patterns. I understand different bounces and double tops and triple bottoms and triple tops and head and shoulders and this, that, and third. Some of that stuff got to account for something. Clearly, I see what's going on here. Round the top, okay, dead cat bounce or double bottom. Okay, then bro, okay, this dead cat bounce. Right. So again, this is the part of the game where you got to dig down. Again, dig a little deep, figure stuff out with your group, with your family members, right, with your peers. You have to be able to kind of talk your way through this stuff, because again, it really isn't. It's not rocket science to that level. There's trend diagrams and chart diagrams, pattern diagrams all over the internet. Literally, free 99. You're trying to train your optics, your visual value to be able to see these things when you in real time, when you step back and do a bigger picture, and then when you get real close minutiae, when you're doing the real short stuff, you got to be able to do all that as an investor and a trader, because they're synonymous, right? One and the same, right? So again, don't be fearful of it. Don't run from it. Don't be intimidated by this stuff. Don't. These people sit around and make, these people make, buku money. Buku money. Leveraging what? Credit, right? Trust and insurance payout. These people have been grinding for quite a while. And a lot of us are just trying to be ultra conservative. Like, oh, I don't want to let, like, you just, you better learn how this stuff works.
I hold you.
Right? It's important, because again, assessing markets, reading it, making good superlative decisions are going to be a net positive for your futures once you get comfortable and going through these steps enough to make yourself feel really good about saying, you know what, I think I'm definitely capable of making some good monetary decisions right now with my funds in this marketplace, and I'm hedged or I'm protected. I know my risks. I assess my all the different variables out there. Let's go. That's conviction, right? So that's why it's important. So again, just touching on that, we're gonna hit a little bit. We went on a little tangent there for a moment, in a good way though, because these are what they call real world lessons. You have to be able to again atone for markets when they are doing nutty stuff like this right here, right? You have to be able to atone for this. If not, you got to sit back and just observe it, right? Sit back and observe it, right? Paper trade it or put it on paper. Trade it literally on real paper. Like get out your paper, get your pen and pad, right? And literally draw the chart as necessary and paper trade it that way in thesis term. That's how they used to do it back in the old days. Before they had all this smart technology stuff and all this now. You had to do all that stuff, put on and send it to a runner or a house, and then they send it through the system, right? Imagine how long it took.
Poetry in motion. Put it on paper.
Put it in paper on paper. Essentially is it, right? So it's important, guys. It's very important. So when you see it, you can honor it, and you can what? You can adapt to it, and it won't be foreign to you.
Really?
Right? So really quick, and then we're gonna get to somebody else. I don't know somebody else either who we ain't hit. Like we ain't hit Brother Al. We got Brother Ghost still. We still got Brother Dondre, Brother Jermaine, Sister Kiana. We didn't do Sister Monica. We did Sister Angie. So Sister Monica. I think those are in. Yeah, I think it's everybody who ain't went yet. So really quick, where we at? Where you at, bar chart? Here we go. Really quick. All right. Let's see here, really quick. This just kind of, we window shopping, right? All we doing is window shopping. Right? These are expiring clearly tomorrow on the 1st. We closed out this past quarter today. That's why you had that mad imbalance at the back of the day, right? Because people were fund managers, more importantly, big money, was shifting money around.
Wearing the books.
Right. Y'all
Third
saw what
quarter.
AMC did?
And
What did AMC do? Did y'all see AMC bounce? I literally playing AMC all the way down. Man, that's wrong. That's definitely AMC there. I was like, AMC breaks below, down below 35 and getting 34. You start looking for the bounce, right? Start looking for the bounce down there. I literally shorted AMC because y'all know I'm showing y'all in the group. I've been showing y'all my little receipts for AMC. I literally shorted AMC all the way down from the area here, all the way down here. All the way. I'm not making this up. I am not making this up. Shorted AMC all the way down.
diamond hands.
Big boy. Y'all talking about, looking here. Right into that, that chop zone here. That previous chop zone area down here.
Tough.
Right. See right there? Look at that line there.
Mm-hmm.
Right on down in that line area there. And y'all know markets like hold numbers at $half mark. So 34 was even just clearly, right on into that area there. And then you had a hard wicked bounce. A wicked bounce. Look at that. It ran from 34 all the way up to dang near 41.3, 41.5 close. Wicked bounce. Right? Because they at that point it was clear that it had hit that kind of proverbial support point where and funds that they've been saying, all the Wall Street bets and all the apes and all that dumb stuff, We just wait for what? The Wall Street to what? Cover, right? They're gonna cover eventually, right? That's their mandate. I'm gonna leave them alone. I ain't gonna go in on, right? Right? Wall Street got to cover the minute. The funds got to cover a minute. All right, yeah, all right, yeah. Well, you happen to be on a day that what? Where we closed out the quarter, right? And the month all in one day. Couldn't make this stuff up, right? You closed the month and the what? The fiscal quarter all in one day. And that's why you had contracts today that was expiring on today in terms of SP 500, which is odd, right? You typically don't get an SP 500 contract that close on a Thursday. It's typically what? Monday, what? Wednesday, and what? Friday. But you actually had one that closed today, and you got one closing tomorrow because it's in the quarter. And we get ready for what? What earnings are coming up next?
Bank earnings.
Yeah, what cycle? What was fiscal calendar?
Q3.
3. We on
Yeah.
Q3 time.
Yep.
So about another couple of weeks, we right back in the thick of earnings.
Okay.
That marinate. And this earnings is gonna be a little bit more what? Wicked. Why? Because of what? Everything that everybody been already what planning for, that they've been saying the SP 500 and everything else is what?
Supply chain issues.
Saying it. Right? Supply chain issues, all kind of what?
Inflation.
Inflation, you got a litany of things, right?
Puts.
What else? Chip shortages.
Yeah. Chip shortages, shipping freight prices,
Freight prices, right?
China lockdowns and stuff like
China.
Ooh.
Y'all see what's going on here?
Puts.
And
That's
you best
what I'm
believe
thinking.
they finna try to everything they power try to price it in too. They're gonna be trying. So be careful too. But they're gonna be trying to find a way to price it in. They're gonna try to come up with some kind of they're gonna try.
Yeah.
They got to, because why? Because their darling S&P 500 is what? It's coming down.
Mm-hmm.
And to them, they're gonna try to use the excuse, well, the markets are getting what? Cheaper now.
Yeah.
Are they?
They gonna use that. Yeah.
Right? Markets are getting cheaper now.
Buy
Right.
the dip.
See how they get you view? They're desperate. They're taking L's and they ain't used to that. Why? Because Wall Street then got spoiled. Wall Street spoiled.
Yeah.
They get first dibs at all the fiscal money that comes in or out of America. Let that marinate. Not Main Street, not the taxpayer, not people who really Wall Street get first deals on everything. They get the big piece of chicken. Everybody will get the little wing tip, right? And the gristles and all that, right? Like, bro, I paid for it, but yeah, you still get the gristle.
Chicken back.
In the back, right? Old school, right? You're old school with it, right?
Yeah.
So we got to learn how to what? Play ball on basically all sides of the field, on every aspect of this field. Understanding those perennial things. See, this is your scatter plot right here. See this right here? This is your outline. We talked our way through that and figured out what's going on in the world globally that could be a hindrance to what? Earnings getting ready to come up. We already got some of the pre ones that already then came out, kind of let you know. What happened with Nike? What did they say on their conference call? Supply chain issue.
Supply chain issue.
Oracle just had recently, MU, Micron, University, they make chips. What did they say?
Supply
Chip
chain
shortages,
issue.
supply chain
Yep.
issue. They already signaling. So everybody's gonna try to get ahead of it. You see what I'm saying? To try to like, well, see, we're gonna let you know in advance we might be in trouble because of blah 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 blah.
Yeah, them people.
I looked into that. They said that those ports is just like stuck on the coast of LA or something like that.
LA, some in New York, around the
'Cause-
Gulf.
Well,
Sitting
because you got workers not there. Then you got trucks that ain't delivery. You just don't have. They don't have the labor. Yeah, they don't have the labor.
Train, CSX, all these. Keep in mind, 'cause that's part of transportation. You know what I'm saying? They fall under transportation. What's the transportation ETF?
Oh,
Sister Shanika, you know I'm gonna put you to work if you're able to Sister Shanika put you to work. You already know. I see. Don't look at don't die. Don't try to duck over now. But to put you to work. What is the transportation ETF of the
Okay,
spiders? Of the spiders. The spiders index. What is the transportation or the Dow? You give me the Dow one or the spider one. What's the transportation ETF?
I gotta use my Google, right?
yeah.
I'm sorry. I'm sorry. I'm just trying to catch up.
Unless you got that we call that mantle, you just snap that thing just pop up like what they call that
I know, right?
halo. That,
Unless I'm using my psychic capabilities today.
right, you know what I'm saying? You know you gotta use that cellular phone.
Okay. Oh my
Yeah,
goodness.
'cause
I
y'all know
think I think
information
you
is
had it.
king for us. Because we are is what? We're data chasers. We're data collectors. We do this for a living. You get excited. Smartphone
You said
actually being used for a change now in our life. Gotta love
you
that.
said the transportation ETF.
Yep. What are the transportation ETFs? And specifically, I said the spider, but we'll just whatever you find because you still this is a part of your learning. This is good. I like this. This is good. I like it. Get your hands dirty a little bit.
Transportation ETF. Okay.
And y'all can be pulling up
Right.
too while she's pulling it up. Unless you guys already know it, that's fine. But again, this is a workshop environment for a reason.
Yeah.
What are the transportation ETF? She got to get an answer though. Of course, y'all got to just hold the answer. Right?
Okay. Well, these are the best ones, but you asked for a specific one.
But
It
no,
brought me.
get what you got, and then if you can find the specific one, the spider
Okay.
one, that's fine too. But but what you got? I take what you got.
All right. Hail, XTN, and FTXR are the
Give me
best
give me the
transportation.
ticker symbols one at a time, slowly. I'm sorry.
Okay. Hail, HAIL.
That's a ticker symbol. That's the ticker symbol itself.
Yeah, I think that's the ticker symbol. Because it's this next one is a ticker symbol, and so is the one after that.
All right. What else?
So XTN,
All right. Which one is XTN? What does it say about the
that's the
XTN?
second. That's the second one. That is
No.
the
Y'all would say what's the descriptive value of the XTN?
okay.
What is
What
the
is it?
name? Say.
What's the name of the controlling
Yeah.
entity? I'm sorry.
I'm gonna get it right now for you.
No problem. Sorry.
All right.
What is the XTN?
FETF.
Thing.
Okay. It's a All right. I want to make sure that I'm looking at the right information here. This says transportation sector set for a strong mover higher. No, that's not it.
So remember, we talked about how to query really fast and not get caught, trying to be overly,
In the bar chart.
no, but again, just however you query, you going straight to Google, right? So really quick, when you go in and pull up something, you know how this stuff go, right? You're trying to find specifics and you're trying to find it what? Direct, fast as possible, right? So what do? You hold up, so let's say real quick, right? You go
Yeah.
XTN. So that ETF already pulled up, right?
XTN.
Let's see. I click
came up.
on it. I
should've
come
just
down
did
here. See right here. First thing you see is what?
Oh, you know what? Because I can't see your thing until I pull out of mine.
Oh yeah, let me clear all this. I got all this scribbling on mine. I'm sorry.
No, it's not your fault.
Pink.
I'm on my
Keep-
phone. I'm about to switch to my computer.
That's all right. What do you see on my screen then? What do you see? What do you see? First thing you see is what?
Okay. On your phone, okay. Transportation ETF is the State Street. Oh, SPDR S&P. Transportation ETF.
So that means it's a part of what? The what?
Transportation.
But we know that's the normal, right? But it's a part of what ETF sectors? The what?
Transportation ETF.
The
S&P. It's a
man, we looked
S&P.
at that wheel last week. That big wheel with all those different things inside of it that you're supposed to be
Yes.
studying.
Yes.
Now this one particularly went up, but there's also other aspects of it that wasn't on there, right? Like the XRT, the retail. So this is one dealing with what? Transportation. So that means, like, so we've been discussing for our supply chain issues and lack of what? Truck drivers and freight finna go up and plane costs finna go up. FedEx did already told y'all that they finna what? Raise the prices on freight going into the holiday season because they hurting because of all the other stuff. See how that work? See how this stuff? It's all connected, right? It's all connected.
Mhm.
Thank goodness if you got Amazon Prime, they ain't gonna charge you extra, right? And Jeff Bezos, he can foot the deal, right? But they're gonna
Right.
probably hit you on the cost of the other products, right?
Mhm.
So clearly, if you click on that, right, just on GP real quick, right? There, come on, State Street be on all that crazy. So right here, State Street, this ETF, right? XTN, right?
Mhm.
Let's see here. Let's transportation, right? So here we go. So let's go. Let's see what some of the holdings inside of this right here, real quick, right? All right. Let's see right here. Let's see, and that's just one, right? It's just one, right? And we can kind of double, I guess compare it to another one. So you said Avis Budget, right? So rent a car, SkyWest, right? Had to do airline, Atlas, Hawaiian Holdings, right?
Mhm.
So we talking about transportation. Uber, Uber is even in there now. American Airlines, Spirit Airlines, Delta, United Airlines, right?
Uh-huh.
Right. So you see what's going on there, right? And a few other ones over here, right? And this is a part of this so-called what? ETF, right?
Uh-huh.
So in terms of what they call fund sub-industry allocation value, how much is connected to trucking? What's the weight value?
36.15%.
How much airlines?
27.5.
Air freight logistics,
57.
railroad,
1988. 848.
and then marine value.
792. 7.92%.
So you ever heard the saying a dime holding up a dollar? You ever heard the saying a dime holding up a dollar? Anybody ever heard that saying before? A dime holding up a dollar?
No.
That's old school. Y'all ain't heard a dime holding up a dollar?
I know,
Where y'all
right?
jugging from? Well, I'm about to go. Let me get y'all mamas and parents on the. Get somebody put their mama on the phone. Let me get some talk some of the old school. Y'all ever heard the saying people say you a dime holding up a dollar?
Mm-mm.
Man, some of them rap lyrics out there too. Man, this just on some of them rap songs. Let me go to YouTube. Y'all jugging tripping on in this pattern now. I ain't gonna play with y'all jugging. Where my YouTube family at? What Dollar Wheel? Let me get Dollar Wheel, man. Dollar Wheel old school. Dollar Wheel probably know about it. Anybody on YouTube ever heard the saying a dime holding up a dollar? Meaning you small change, you holding up a big, we ain't messing up some real change. You messing up some real change. You a dime,
Mhm.
right? A dime holding up a dollar. So if you take that in the context of what we talk about as far as what's outside the coast of LA right now, stacking up,
Shipping containers,
they're part of what? Marine, right?
transportation. Yeah, and transportation.
How much do they count for?
Since
How
the
much
shit-
Marine count for?
7.92%.
Ain't
So
that
that-
part of trucking too?
Say again?
It ain't a part of trucking.
Hold up. We talking about the Marine now. We talking about out on the water out there. They
Everybody.
coming with that down there. You a little ahead of us right there over, Jeremy. You a little ahead of us. They coming though. They're gonna have a boat truck. It's coming. You know it's coming. They're gonna put some hydroplane flippers on the truck. They're gonna be out there on the truck. 18 wheel on the truck to pass y'all about to add the Bass Lake. Right? They coming. But we talking about strictly Marine though, for this perspective, right? That's everything we just talked about, because y'all say the ships are piling up out there on the what? At the ports, right?
Yep.
They can't dock, they can't offload their goods, right? The supply chain issue, it's choking them, right? Y'all seen the picture in LA? I'll pull it up. It's madhouse out there. It's crazy. But the Marine only count for how much of the XTN ETF transportation is only what? 7%.
7.92%.
So that means that's a dime holding up a what?
Holding up
A
$1.
dollar. Right? 10 cents holding up a dollar. Hold up. Let me 0, 1. Y'all get it. All these right here are bigger. 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 These guys here, which is the most expensive one, most weighted one up here, can't do its job until these what? Ships get what? Unloaded.
Yep. Shoes ain't here. I had some birthday shoes.
Got you.
Been waiting 2 weeks for them. Damn near a month for them almost.
Truckers sitting around like, bruh, we looking for, you know, some lanes. We waiting all these ships get unloaded, bruh.
Can't do
A
no work.
dime holding up $1. Y'all with me there?
Right.
Is everybody with me? Y'all, look, is this rocket science? With me, Sister Shanika?
Yes.
Y'all with me here? Everybody with me? Brother Rich,
Oh man.
Brother Jeremy, Brother Dondre, Brother Ghost, Brother Jermaine, Sister Kiana,
Yep.
oh, Sister Avra. Y'all with me here?
Okay.
So if the biggest weighted aspect of this ETF is trucking, now they still got other stuff that's moving through, you know, the lanes of trucking too, but a lot of that stuff is dependent upon what? Air freight and what? Rail, and then the marine, all this stuff down here, right? If that's the biggest issue because of the boats, a lot of those goods that need to be offloaded, that need to go inside those trucks, that need to get on, that couldn't go on a plane, that need to get on a railroad system, it's stuck at the port still. And the marine got everybody what? Held up.
Held
In
up.
terms their current value of being able to make the money that they normally do by pricing in the loads that they can account for, they cannot now. Why? Because it's all what? Held up at the marine section. That's a dime holding up $1.
Mm. So it's gonna make all. It's gonna depreciate the value of the dollar. Then the dime is gonna wind up making the dollar value fall.
Well, I'm using that as a colloquial saying, right? A dime holding up $1, meaning their money in the trucking area is what? Now held up a little bit. Some of the money is held up because of what? Ports are still what? Clogged up. Some of the money the airlines depend on that they couldn't get it, you know, strictly through airline that needed for it to come on the ship before they can get it off a dry dock and then put it on a plane and fly across the country. FedEx, right? They just told you on their earnings report they have problems with what? Freight, and they got to raise the prices on freight now because supply chain issue. Because it's stuck out to what? Out to sea. It's costing them more money now to get that product, whatever, you know, and get it shipped at a much more what? Expedited fashion. Just that the third. Does that make sense?
Mm-hmm.
Shipping. So if we were to put this whole, I guess, narrative to test, right? Forgive me, guys, I'm sitting there eating some pretzels, right? Right? They spelled though. Right? Really quick. Let me do this really quick. Sorry. 1 second. Stop. Let me go back over here. Excuse me. X10. Really quick. All right. So we see that. Oh, make sure it's right. Yeah, that's the right one. It's the spider one. It's starting to become apparent, right? Now, this is a very illiquid product, but it's still a product nonetheless that gives you what? It gauges sentiment, right? Within this sector. And that's what you're using it for. Whether you're going to trade it yourself, you can trade it. But you definitely gauging what? Sentiment of what? Shipping. Are we stressed at the ports or not? Are we stressed at the airport or not? Are we stressed in the trucking sector or are we not? See what happened here? On the daily chart? What do y'all see right there? We were doing good until into the summer. And then what happened? And then we did a bounce, right? Right? And now we starting to do what? Y'all see that right there? Can y'all see my screen?
Yep.
Now we starting to come back down because what's hitting this, I should say that all the area right here, it's becoming apparent that what's the problem right now?
Supply shortage. Supply shortage.
Chain.
Bottleneck.
My chain. Bottleneck. Yep. I'm just saying it's a minute ago.
You know what I'm saying?
Wow.
And so now this ETF is starting to what? Retreat.
Timber.
Right? Them jokers taking what? Cha-ching.
Man.
Profits.
Mommy, good night.
Good night, baby. Let me kiss.
I am.
I'm sorry, boo boo.
It's not going to be earned out overnight. You with me there? So guess what? Very much can easily what? Find a way back down to the linear regression line, the gun line. Can possibly even break the gun line.
Like a summer.
You see what I'm saying? If they don't get a handle, and 200 mark moving out on the daily, sitting right here, $81. Now, GP, we don't know. I haven't checked it yet. Just off the cuff, right? ETF, transportation. Go to the options really quick. Really quick here.
Puts.
Very thinly traded because it's a sentiment. You know what I said? It's a sentiment gauge.
Mm-hmm.
That's why I look like this. Very thinly traded. Very thinly. But still, don't let it fool you because it has a lot of weight value for a little individual companies that make it up, right?
Yeah. ATR probably not that big either.
But you still see that it's still what? You know, it in essence to that, you got a few people trickle in here. You got some people that tried to buy it because of what? It fell so hard, right? Well, considerably high it falls, right? That's a hard fall for this ETF, right? Trust me. Last 3 days, 4 days, 3 days, that's a hard fall for this because it has a low, like you said, right, Chris, low ATR, right? Up here you're at 89 to 90, and now you back down to 84 in 3 days, 3 or 4 days.
Kind of making the same move though. See the 3 green candles and then the 3 red right back door right behind.
Right beside it. Mm-hmm.
Yeah.
And that's because again, now the combination of that and it topped out the top of the round of what? The regression band up here.
Yep.
Right. Clear resistance right there. Which is now presenting the same thing we've been talking about. Is presenting what?
Lower highs.
There it is. There's your resistance up here. 7 high, and now you right here. So
on down. Huh?
Somebody says it. Oh, that's a sneak, right? So a part of this ETF and that transportation, this is just kind of backstopping that stuff. This is how you do a little back end scouting. Whether you favor to it or not, because you might be in a company like CSX, Kansas City, Kansas Southern, Canadian Railroad, right? Man, there's so many of them out there. What's the other rail? It's so many different. JB Hunt, intermodal truck driver, right? You might be into those individual companies, but the bigger, broader picture, you're trying to figure out what's the transportation hub look like as a whole. Now that's just for the spot. There's also another ETF for transportation that's actually a part of the Dow, the Dow Jones. Anybody know what that one is by any chance? What is the Dow Jones component ETF?
Yeah. Are you
Which
talking about transportation?
Yeah, for transportation, ETF for the Dow Jones. XTNs for the spiders or the S&P. What is the Dow Jones Transportation ETF?
It's IYT.
Which is it?
IYT.
And just for the Dow Jones?
Yeah.
Yeah.
What do y'all see right here? Peaked in May.
Yeah.
Been backing off ever since.
Come
All the way
on
down. You see it?
Mhm.
The price is right, and that's contested. Right? All day, every day. 278, now you're down to 243. Same pattern as we just saw with what? The XTN on the spiders. See right there? The 3 fleeting candles there. Broader market, obviously, they're attached to it, obviously, right? Y'all see it coming down right now. The same talking points are now starting to say, okay, supply chain issues, supply chain issues, supply chain issues. Bring it down.
Guess who issued this ETF? BlackRock.
Them, yeah. Had to be saying who them jabronis,
Yeah.
right? Look at 'em. What do you see in their options flow chart? They got some action over here. Because most people actually trade the IYT more than they trade the XTN. Look right there. Look at the put volume that came in over the call today. Double.
Yeah.
Look at the put open interest over there, the call open interest.
Mm.
Dang, that triple.
Yeah.
What's unch?
Say again?
What's unch?
Say it again. I couldn't hear you.
What's unch?
Where you seeing that?
Unchanged. Oh,
What's
she talking
unch?
about the UNCH
Yeah.
is unchanged.
Oh yeah, okay, yeah. I might have missed that. Oh, you're on the chart. She look at the chart somewhere. Oh, my bad. Yep, that's what it is.
Yeah.
Unchanged. My bad. Forgive me, sis.
That's
So,
okay.
So yeah, that's essentially what's going on here. That means in terms of unchanged, that means it ain't, the value of it hasn't increased or decreased in terms of those options. Right. In terms of percentage gain, right? Percentage gain or loss.
What does
So
the strike mean to the call? I
now
mean,
this
to
is
the
strictly
move?
option. This is the option flow chart. Because this is,
Oh.
I'm not gonna say it's well, I mean, it ain't intricate to the point where you can't learn it. Because this is, this is where, where you kind of get a little bit more, a little advanced, right? Because you at the building blocks a little bit, but you're picking up a lot of stuff in passing. But one thing I love about bar chart, if you ever come to the website, if you hover over each and every one of those titles or whatever, it'll give you the descriptive value of what it is.
Okay.
All right, so strike price. Now, even though you might still be like, I don't know what this stuff is, but this is a little bit more advanced. But you learn as you go. Because when you hear us talk about it, when we're doing it in passing, you can pick up on it. You know what I'm saying?
Mhm.
Right? You could take notes or you can, go back and do the replay. All right, let me see. I saw that. I'm gonna go read up on that a little bit, right? Or go watch a video on YouTube, right? Have somebody, have them break it down. So it's always good that you can be in learning mode and pick it up. So strike price is just basically mean this is which the holder or the price at which the holder of an option can buy in case of a call option or a sell in the case of a put option, the underlying security when the option is exercised. Makes it mean at that price, you chose to take this trade into that price or away from that price, right? Meaning you're trying to hit that price or exceed it or, or go past it in a way in the direction of the sentiment that you're trading it. So if I was bullish on this stock, right? And let's say right now the stock price is 243, right? Per share, right? I would say to myself, I think in about a week's time or a month's time, it has every bit of the opportunity to possibly go to what? 245. Make sense? So you're making a predictive assessment of where you think the stock is going to go over time, right? Just putting it in layman terms. That's what an option basically is. You're using time and what? Price value, growth, stagnation, or depreciation as a factor to see whether or not you want to either own the stock outright or just trade it like a day trade. You could day trade options saying where you can own stocks outright. So you own it, what they call you putting out a contract on it, in essence, to lease to own it. Right? You're leasing it. You're not owning it outright in the option contract. You only what? You're leasing it with the right to own. Does that make sense? So since you're getting a chance to test drive the stock, if you like it and it moves towards your strike price that you chose and you make money in it, you can then turn around and say, I want to exercise this contract, right? Because it hit my strike price and went deep in the money. And I want to pay the difference to own the shares outright at that strike price. So for instance, if you bought the 235 strike price, right? It hit your strike price and exceeded it. Let's say it went to 238, 230, 239, 240, right? That means if you exercise the contract, you get to now take 100 shares ownership of this country, of this company, right? I'm about to say, I'm thinking big term. You see it already in my voice, right? Right. That means you get to take 100 shares of this company at that strike price of 235, even though the price is now 240. You get to get it cheaper, right? I'll show you, right? So that's the good part about when you're trading options, you get the lease to own. Now this, again, this is a little bit more advanced, but you learn it as you go because you filling in some of the gaps as you go. right? For some of y'all, some of the rest of y'all in here too. This is a part of how you kind of round robin learn in that communal environment, right? In workshop environment. So if you see something that's interesting to you or that catches your fancy or whatever, piques your interest, you write it down. You go back and pull it up on YouTube. You go, query it on Google, right? That's how you get better at this stuff. You have to get nosy about the markets. You have to get nosy about this terminology, right? Because we do it for everything else, don't we? We did it for everything else, right? That's how we became all integrated. Now we're doing it for something that actually matters. Make sense? This actually matters because you can turn around and get you a bag off this information, right? This ain't all that. Somebody, girl, I ain't get no likes there. I posted a good picture. There ain't nobody even like my little post. Y'all in your feeling behind a like. Like, no, they ain't gonna move neither, right? They ain't gonna put no bread in the oven, and no beans on the stove or none of that, right? So this is reality. You're working to become more astute in the realm of financial literacy by understanding all these different moving parts. How do people sit around and making billions and billions of dollars every day, right? And a lot of us are somewhere waiting on the light. Somebody gonna like my post eventually. Somebody's gonna like my post eventually. Like, what? Like, you got time for that? I'm over here working. I'm grinding. I'm gonna get this bag, right? I'm gonna get paid. So yeah, so that's what it is. So everything you see on here, you can go back and read it, right? Or you can pull it up, right? But it has a descriptive value of what this stuff means through these option contracts. But we do use the option flow chart. Basically, in a nutshell, this is a flow chart of what markets are predicting itself to be or to do or to,
I was about to
go ahead.
ask that. So that's the strike price is like it's a potential explanation in numerical value for what you could make if you bid at that price, right?
Well, it's a performance value, or it's an evaluation
Right.
price of what a person is trading into or for to be able to potentially own it at that price, right? Or not necessarily own it at that price, but you can also sell it because you don't have to exercise a contract. Like I said, I don't want to go too deep out into it because it's only gonna make you right. Because you can be like, man, it's gonna take you there. Because that option is like that. That's why I like option, because it's not super hard, but it's also there's a lot of different moving parts with it. But it's good once you start to connect the dots. Then you be like, okay, I got this. All it is like, it's understanding. Again,
Your options. It's kind of like shopping.
That's what it is.
If I can get a shirt 50% off, same shirt, different price, but one got 50% off, the other one don't. Another one got 13%. Where I'm gonna get it from? And I'm looking at 3 different vendors, and this is the potential I could have. If I have 100, I have more money in my pocket getting 50% off than the 13, and the other one, same shirt, different prices. Those are my options, right?
You buying it at a fraction of the price.
Yes.
Right. So as opposed to paying $2.35 a share.
Here.
No, you
got. I'll be lost. I'll be lost. I'll be.
No. You learn it, right? You know, such thing as you lost when you learn it, right? So if the price of the stock right now, see right here, it's at 243, right? And so every option contract comes with an implied value of ownership of 100 shares. So you're getting 100 shares per contract of this company to lease it. So what's 100 shares times 243? What's 100 times 243?
100 times 243 is 2,000.
100 times 243. $243 times 100 is what?
2,430.
How much?
2,430.
243, meaning 243, not $2.43. Gotta move them decimals.
You better move them.
You gotta move them decimals. Well, you know what I'm saying?
143, yeah. 24300. So 24,300.
So that means to own 100 shares of this stock, it's gonna cost you how much?
200.
You just said it, right? If 100 shares, how much?
24,000.
That's a lot.
Math is not exact science. I'm about to say math is not exact. Math is an exact science, right? So what does the calculator tell you? What's 100 times 243?
24,300.
So why are you saying it like you're not sure?
I'm very sure. 24,300.
There you go. We had the thing over here. We say it with the chest. Math is exact science. Stop trying to get me to try. You're not gonna back me down off exact science. You know what I'm saying? Because if it was your money on the line, guess what? You're gonna tell that
That
bank or that
no,
person trying to get over on you.
that's right.
Exactly. You're gonna tighten up on it real quick. Like, look here, right? You're gonna see it in your face before you even
To
open
the
your
to
mouth,
the coin. Yes, I am.
right? So you're learning how to move with preciseness and exactness as an investor. Why? Because time is money. You don't have time to sit here and capitulate in your head if math is the exact sign when you know it's the exact signs, right?
That's
If you're
right.
trying to make a play on the move on the stock and you know the price and you know how many shares, uh, that you're trying to get and how much it would cost when you plug in that calculator, guess what? That's your price, right?
Yep.
And you get that and you move on to the next task, right? Or the next order of business in essence. So in that case, you're talking about what? 24 what? 24,300?
4,300.
So that's gonna cost you $24,300 to own 100 shares of this company, right? If I buy the options contract for that value of a strike price, in this case, there's no 243, right? So if I want to buy the 245 strike call, right? I get it at a fraction price. See that right there, $3.80, $4.15, $4.15, $7.95. That means that's times what? How many shares I'm getting? 100, right? That means that's gonna be what? $3.80 times what? 100. What's $3.80 times 100?
It's gonna be 38,000.
No, $3.80 times
Oh,
100. Again,
3,800. 3,800
you
times
said
100.
right, times 100, right? So $3.3.80 times 100.
383.
Oh,
That's why I
I was
say
trying, I was doing it.
don't. Again, it's okay if you try to do it fast math, but you get
Yeah,
that as an investor because keep in mind once you get to that level, these numbers are gonna be what programmed in your head. You're gonna be moving swiftly, right? The same way we can dissect these numbers, like okay, I know what this is, and boom, 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 boom. But if not, until then, calculator gonna be your best friend. Why not? It's a cheat code, right?
Yes.
No, but seriously, because time is money. If you spend a lot of time fiddling just to get the numbers, get the start and did. It threw you the deuces, like, okay, we'll holler at you. Right? It didn't ran, right? Went on somewhere else. So you learn how to multitask to get more proficient in this because it requires you have to be very what? Focused and understand the moving parts or the ancillary things in terms of the math and all that stuff like that. It's already set in motion. Make sense?
Yes.
And then a lot of these brokers is actually they do the math for you. They got it now when you can plug in just how much money you got. It'll tell you how many shares you can get. Make sense?
Yes.
But for the sake of learning, because we doing it
you need to be able to do it yourself.
exactly and move swiftly with it too. Because guess what? Time is money.
Time is money.
Right? You don't have time to be sitting there. Let me see them collard green burning. Look at you trying to get on this trade. Look at that one trade, make that whole collard green pot. You throw that whole pot in the trash. You make about $8,000 on good trade. Like, I throw that whole stove away. I go get a new stove. I ain't even worried about that stove. Reason that just burning. Like I don't even need that stove. I go get a new one. Right? So essentially,
that was 380.
Yeah, so at 245, that's $380 that you have to pay to get 100 shares for a stock. In terms of owning 100 shares of it, you buying it for a fraction of the price. Right? And so if it moves towards your strike price and hit your strike price or exceed that, you get a chance to eat majority of that for every basis point based upon the delta. That just basically means the intricate or the intrinsic value of the stock. You'll be able to get that value as long as you have time, enough time for it to hit that strike price, and movement value, whatever, will honor you per 100 shares, whatever that delta is. So real quick, if we run over here, look at the volatility in the Greeks, and this just sidebar, right? This just a sidebar, right? So right now, at that 245 strike price, that's expiring on the 15th, so maybe 2 weeks from now, it's basically telling you that you're getting what? $45 for every what? Or 45, for every dollar, right? 45 cents for every dollar, a whole dollar mark, right? So for every time the stock goes up like one full basis point, makes basically from 245 to 246, right? If it does it slowly methodical, that means you're gonna get $45 per every dollar. Right? That's what the delta tells you in that moment. If you buy at that strike price at that point with that much time left in the contract. Now that's just a stationary price. When the markets are moving in real time, that delta number is going to fluctuate. Why? Because the intrinsic value is going to flop based upon if more people buying the contract, right? Because you're establishing a pool, like what do you call it? A kitty, right? You play biz with, right? You're building a pot, and more people that buy into those contracts, it swells to what? Pot, right? So the implied
Mm.
volatility is going to grow, meaning it's going to get more volatile, right? Because more people now in it or coming in and out of it. And in some cases, it's going to increase the what? The delta value, right? The delta basically is the what? It's to measure the sensitivity of the option's theoretical value, right? Or we would like to say it's, extrinsic value or intrinsic value, right? That's all that is. Just giving you a readout of for every whole dollar mark, you're going to get that fraction of it at that strike price, like $45 per dollar.
So the delta measures the sensitivity.
Right. So
The
if
value,
you
the
spend
potential.
380 and it goes, let's say, from 245 to 246, and it did it pretty much in short order time frame with more time left. Let's just say for every dollar went up or something like that, you got $45 off what in profit. Right. So basically that 380 that you spent, now you didn't tacked on what 45 or $50 on top of that. You with me?
Yeah.
And you got to add a fraction of the price. You didn't have to pay the full 23,000 or 24,000. You got it for only $3, basically $380. And you was able to pick up like $45. So basically, you can do the math on that, turn the percentage gain. But that's a quick way of looking at it. I don't want to get too deep into because
Okay.
I got you wreck you, but this is good. We got some good videos in the group, and also I have to go repost them about basically option trading, from 101, right? And this is kind of like I said, down the line a little bit from when you get to this point. But it's good to learn it along the way. Make sense? Because whatever that piques your curiosity, I'm gonna tell you this right now. Run with it. Run with it. Why? Because you're still all part of the same what? It's all part of the same game. Make sense? Be it an option, be it a regular stock, itself, the actual equity itself. When you look at other asset classes, crypto, forex, and all that stuff, it's again, you see what I'm saying? It's all synonymous at the end of the day. Right? So let it pique your curiosity to the degree where you want to go learn more about it. And in doing so, guess what you're gonna do? You're only gonna sharpen your what? Your knowledge bank.
Sharpen your knowledge bank, yeah.
See what I'm saying? So you becoming a stealth warrior out there. Right? And that's a good thing, trust me. Right. So that's it. So you just again, game, like we talked about, just the ETF aspect of that transportation. That's the other one there. Right, IYT, and you also got the what? The XTN, right? Those are just sidebar, but it kind of goes hand in hand with what we was talking about for supply chain issues, dealing with the intermodal, these trucks, these ships, these planes, all the logistical freight stuff. It's all out of whack because of what? Everybody getting hurt at the ports and this, that, and the third. So if you got an individual stock that you may like that may be affected by it, guess what the stock probably doing right now? It's probably coming down, right? Who do a lot of shipping in America? What are some of the most well-known shipping companies in America? Anybody? Well-known shipping companies in America are what?
FedEx, UPS, Nike.
FedEx stock. What FedEx stock look like right now?
Puts.
Wet in the bed. I mean, dumping. It's all outside the band. Look at that band. Dumping. Give me another one. We almost can guarantee everything's gonna look about the same. Would y'all agree?
Yep. UPS.
UPS. Let's go there. What do UPS looking like right now? It ain't bad as FedEx, but it's still it's dumping too. Right? Give me another one. Anybody know any other logistical companies out there, or transportation based companies? You got FedEx. You got UPS. You got what else? You got? I'll shake it. All right. Anybody?
FedEx.
Say again.
FedEx.
Yeah, we already said FedEx. We got FedEx. We got UPS.
What's the
Who? Somebody said. Go ahead.
No, I was gonna say, what's the other one? DHL.
Are they publicly traded?
I think so.
I don't know.
I say DHL.
I don't think DHL.
I don't see DHL under not under that actual ticker scenario, but they might be underneath for umbrella company. Right. Any other transportation companies that anybody?
Oh, they under they in OTC markets. They're under another exchange though.
How about CSX?
Right. What do they do? What does CSX do?
They move stuff through the rail.
Right. So rail, right?
Yeah.
What the stock look like? To make this stuff up. Right. One more. Somebody give me another one real quick. I'm just showing y'all patterns. I'm just that's market ain't number one big pattern, one big trend. If a sector's being hurt, guess what? A lot of these underlying players, guess what? They will probably be catching it too. Unless they're doing something superlative to stand out, everybody finna get it. At the saying go, everybody can get it, and your mama, right?
I got
Go
I
ahead.
got some for you. These are what's it 18 revenue. It's FedEx Freight, Old Dominion
Yeah.
Freight Line.
Right, so Old Dominion, right? We already did FedEx, so we can do Old Dominion. What's Old Dominion ticker symbol?
I'm gonna find it
Should
right
be
now because I'm on my computer. Old Dominion.
Old Dominion ticker symbol. Give me Old Dominion ticker symbol. Anybody.
Should
Time
be
is money. Time is money.
should be OD.
Right? Let's say OD, right? OD ain't I'm pulling up.
Old Dominion.
Old Dominion.
ODF,
Yeah.
Say again?
ODFL.
ODFL.
Yeah, Oscar David Frank Larry. Yeah.
Right, Old Dominion Freight Line. There it is right there. See there? Yeah.
Yeah.
What is it doing?
It's going up.
Actually,
Well, it was. But you see what I'm
it's
saying?
dumping now.
Now
Starting to
you
dump.
and y'all see this, right? What do y'all see right there? We've been talking about this all night.
Double
Stop
top.
playing. Stop. I'm gonna say
Double
y'all know y'all
top.
better see that there.
Rounded tops. Double top, rounded tops.
Round the top, make them drop.
Yeah.
Just some strange falling piece of chain.
You got TGH.
Wait, OD.
TG. Oh, you say TG. H.
Yeah.
What is that?
Tech Center
Textainer?
Group. Yeah.
They're like a holding company, so they're pretty much
Oh, well, yeah.
office. They do more the office side.
Okay, go
Give me a
to
pure play transportation company. Pure play.
SBLK.
XBLK, that's the boat, right? Star Boat Carriers, right? Star Boat Carriers do what?
Xpologist.
What do they do? Plane, trains, automobiles, the boats.
Boats.
No, my.
That's on the boat side,
Yeah.
right? So they're gonna fall on the what? Marine, right? Like we just saw on the XTM coast in that case, right? So
Yeah.
where we may have supply chain issues on our side when it comes to getting those stuff off the boat, ships are still what? Moving though. See what I'm saying?
Yeah.
If that it's like this right here. If that boat fired them engines, somebody's gonna get paid or pay them, right? They don't have to worry about what's gonna happen after the fact. See what I'm saying? If they fry them engines up on that ship and move some freight, regardless if they're gonna get bottlenecked or not, you gotta pay them. So
what about JB Hunt?
Union Pacific.
Yeah, that's the railroads.
Yeah, JB Hunt ain't got Union Pacific, right? They do both. Look at JB Hunt.
Dump.
Look at that. Union Pacific is what? What's the ticker symbol? UCP. What was it?
UNP.
UNP, right?
Hey,
Look at that.
Oh my God. Super dump.
Look at that there.
Wait.
And
Which one y'all doing?
People forget the trains too. They
UNP.
forget about the trains. They forget about the trains, man.
Pop at the linear regression band, sit on the daily, clear as day resistance there.
Difficult.
Yeah, flush down the linear regression band all the way down to 195. Couldn't make this stuff up. 226 to 195. Y'all don't want to make this money. This is how you find this stuff.
Yeah.
There's a lot of nice I step doing this right here. What's that to get beat up the most? Let me go do it. I just sit there and go through like 20, 30 different stocks sometimes.
Yeah.
And just looking at the chart, going to the chart. Remember I talked about that last session? You got to go through at least how many charts? At least 10,000.
10,000, man.
Minimum of 10,000 charts. Minimum.
It's easy to go through 10,000 too.
It ain't hard. Like I said, once you get the basics down and learn how to read patterns and read trends and understand how to put some lines on that thing and put some sense on it, right? You go through them pretty quickly. But basically what you're doing though, you're programming your what? Your cerebral, right? You program your eyes. Just see to spot what? Patterns, trends, anomalies, stuff that's out of place, that don't need that's look, you know what I'm saying? And you couple that with an RSI or oscillator or a MACD or stochastic or squeeze momentum, right? The volume, right? again, you could this stuff begin to start turn over your head so fast, and before you know it, you're like, oh, I see what's going on here before you even get a chance to even what, getting it all into the minutia. This is when you know you starting to pick up on this stuff properly, and you can make moves like this here. You input, register it all, output, and keep it moving. Make sense? Your mind is moving like the supercomputer that it was designed to be. Why? Because you understand how to what? Process data, information, word, whatever, quickly, and move on to the next. We were designed for this, guys. I'm sorry. I don't mean to, I know y'all might not want to hear that. Yeah, but y'all were designed for this. Go ahead, Sister Sneak. I'm sorry.
No. With international transportation companies be even of more interest on the put because they.
Well, here's the deal. If they're not trading on our exchanges, then guess what? The only way you can trade if you go what? You have to go to this specific what? Exchange, right? So you would have to go through where it be Canadian, Israel, China, right? But
So
it's still get. Go ahead.
No, go ahead. I'm sorry.
No, go ahead. I'm sorry.
I want to hear what you had to say.
No, I was just saying it. But I mean, all in all, if it is international, you get a chance to still see the bigger picture, right? Because it's all about macro what?
All the things I've always tried.
Right, macroeconomic, right? A macro picture, right? All those things tied to what's going on, even on our side, right? Whether you could trade theirs or not. If not, you want to trade there, you trade out, right? You already know we getting hit because everything in America is what? It's times 10, right? Because it's the most expensive country. Well, one of them, right? It's getting cheaper by the day, right? They're tearing up this country. But that's fine. But ultimately, these stocks, again, are able to be researched, analyzed, and also give an assessment on and move on to the next. Make sense? So, but again, just using that sector as the marquee banner of what we're trying to look into, there lies how you can get through what? All the other stuff. Make sense? All you need to hit the two words, what? Supply chain. Or 3 words, excuse me, in this case, supply chain issues. If there's supply chain issues, planes, boats, automobile, rail, all that finna be what? Probably be in a mess right now, right? And some gonna be worse than others. Just by looking at some of these, what's worse, the trucks or the rail stocks? Which one probably worse, the trucking stocks or the rail stocks? Meaning like railroad stocks.
Truck. You said for what?
With inside the transportation sector, which one's getting hit hardest, the trucking sector or the railroad sector?
I believe the trucking is.
Probably the railroad.
Here's Union Pacific. This railroad, right?
The railroad could take more.
This right here dumped from 226 down to 195 in what? 1, 2, 3 days? 3 days? It's down that much, right? We looked at CSX. CSX kind of barely starting to kind of look at the same thing. Look at that. Ooh, boy, look at that. That chart look just like UNP. Look at that. Y'all see it? I ain't making that thing look just like Union Pacific. Right? That's big dump, right? That's from 33, right? All the way down to what? 29. That's a lot for CSX, believe it or not, because the ATR is kind of weak. That's a big move.
FedEx.
Right? That's now you're talking about what? FedEx does what? They do what? Plane, train, not train, but plane, what? Planes and what? And truck, right? Right? They do plane and truck, right? So that's the combination a little bit, right? So they like a combo, right? All right. I'm sorry. Went too many. All right, FedEx. Okay, yeah. But we know why this down even more, because they just had what? Earnings, right? Okay. They dropped from 250 basis. Now they down to basis down here at what? 219. How many days? About 2 days, a couple days.
Tell me this. How about we look at Amazon and see how they being affected by this?
Well,
they trying to get their own logistical company. They actually got their own logistical service.
Yeah.
They just trying to be able to account for their own what? Now what? Plane. That's what they're trying to buy their own planes. They also trying to buy their own what?
Yeah. Cause they doing this stuff on trucks and.
Exactly. They moving towards that. They're building a fleet. That's what they call a fleet, right?
Right.
So Right now, they can afford to buffer some of the costs that everybody else is getting hit hard with because they have what? Other ways to spread that what?
Yeah.
Expenditure out across the other business models. Make sense? They can absorb some of that cost better than everybody else can.
Mm.
So it's coming down purely because it's a part of the what? The tech sector, as most of it is a part of the what?
Transportation.
Transportation. Make
Yeah.
sense? And retail, right? Because it's retail, they're hybrid, right? They all in one, right? They're exclusive,
I got
right?
it.
Mhm.
Inclusive in this sense, but essentially that's what you're looking at this for. And it's down to 200 moving average on the daily. Look at that, right at the 200.
Mm.
See, people
Who got 200?
at 200 day moving average, right? This is the important moving average here. They come about the gun line. This is a very important indicator here. Anytime a stock comes at or close to this 200 day moving average, this line here, that means that the company or the stock, I'm going to speak from that perspective, has to make a real hardcore decision. It's going to bounce, go low. If it go below that, that means it's going to be more of a bearish sentiment, meaning more people might turn around and start selling it. Right, so that's a very important indicator. It's called a 200-day moving average. So you might want to write that down in your notes or go back and replay this later. The 200-day moving average. Google everything you need to learn about 200-day moving average, but it's the most marquee moving average sentiment indicator literally on the planet. Right, I got to say it that way too, because that's what everybody do from all around everywhere. Everybody use 200-day moving average as their litmus test for the most part on the daily chart or any long extended period, and even short terms too, but definitely on the macro. People normally use the daily chart, right, to establish what a stock is doing. And it's right down here at that 200 moving average and slightly below it, right? So it actually closed below the 200 moving average for the first time in a minute, actually, right? As you see a little spillage right there, a little spillage over here. Now it actually closed below it here. So yeah, Amazon's still out, not out there. It was sit up here at 3,700 though, almost $3,800 a share. Right, thing dropped $600 literally in that amount of time.
That's
Let
tough.
that marinate.
So it
Very
could tell
expensive.
basically the resistant level or the moving level, like when the price is below or when it is gonna go higher.
Say that again.
It's a way of looking and seeing a resistance level of a stock, basically. When a price
Or
is
support, right?
below.
It could be either or.
Hmm.
It could be bouncing off that level, being on the floor underneath it, or it could be pinging up against it, trying to break above it, and it started to be what? Resistance, right? Anything trying to break above a line is going to be what? Resistance, right? Everything below it or at it, that point is going to be a what? A support, right? Support resistance, right? That's exactly what we train for a lot. I love this stuff. Up here is going to be what? Right? If you're trying to go up, it becomes a resistance. Right? If you're coming down towards it, it's going to be what?
Supporting
it, right? Like feet, it's just earth beneath your feet, right? So very important understanding that under that value of the importance of the 200-day moving average, right? That means that's a strong line that says that time and money has equated this to be at or around this price over a 200-day period. Right? That's a good assessment of what the strength of a stock, how it should be trading. Would you assess with that? Agree with that? 200 days should be a great timeline or chart perspective to say this stock has done pretty well over 200 days, but it's a good potential buy now. If it's at or above that price, yeah, you want to look at it from that perspective. Or if it's coming back down towards it and testing it and potentially bouncing, that means it's also really what? It's showing strong support at that 200-day moving average. And most times, most people buy more shares or add to their share position when the stock comes down towards that 200-day moving average, because it is a natural litmus, moving average that most people look at, as a gauge to see how strong a stock may be trading. Make sense? Right? And you're gonna learn more as you go, of course. But I'm just saying it, in passing, so that way you can hear it in your head and turn it over psychologically. Right. So when you start doing more research, all that stuff begin to make sense. Like so moving averages, right? That's a part of the technical analysis course. Understanding the volume, understanding the candles, because we gave you the information on the candles, right? You probably did, looked into it with different types of candles.
I got a
It
lot
takes
of students.
time. No, it takes time. You do it when you
Right.
have time. I keep telling people. See, this one thing y'all got to realize too about this. It really is a marathon, not a sprint. The markets ain't going nowhere.
Mhm.
But the
Yeah,
one
right.
thing that is going somewhere is your interest if you don't take advantage of it. Make sense? You have to will your interest into wanting to learn this stuff. Why? Because you ask yourself this question: what's the importance of you learning it?
My financial future and my children's future. If they learn it, I can teach it to them right.
Because Miss Maybell them down at the local public school ain't finna be talking about nothing but how they gonna be a good factory worker. Not
That's
in my
how.
house,
No,
right?
no. I'm
Not in
gonna
my
share
house.
this information. No,
We're gonna be
no.
owning a factory or something. That's
That's
you see what I'm
right.
saying? So that's your job as the parent, or the uncle, or the auntie, wherever you fall in the that's or the community, vanguard persons out there trying to do community outreach. That's your job to do this. Because these kids lacking in this. That's why they get railroaded when they go off, point intended, railroaded, when they run off into the NBA,
Right.
NFL, NBL, or rap
Mhm.
star. They don't know how to deal with money.
Yeah.
They out there with phone blocks all side the head, or throwing it up in the air again. I know the strippers when they come for me. They out there making it rain at the strip club. You work hard for it, then you just throw it out and throw it away. Throw it up in the air on the ground.
No.
This is our mentality. This is our mentality. Right?
Mhm.
Hey, stripper, meet me on every weekend when when on your off day. Let me teach you how to invest some of that money. Now I know I'm not finna come to the club and make it rain all over you. Now you forget that. I'm finna make it rain with the lessons though. Come right, get right on over here, Michelle, with these talk moving averages in this talking point. Right? Change your life. Change your life.
Well, maybe I could change my life tomorrow morning if I get this straight. Because if what you're saying I'm getting, and I think I'm getting it, and it's not rocket science. The logistics company would you okay?
It's
I would look at
process.
the top. Out of these companies that you said, are the top, the SPDR, transportation EFTs, those ones that's mentioned, they
ETF.
seem. Sorry, ETF.
It's all right.
Those, no, I like that. That's being specific. You have to know what you're talking about. So
Mhm.
thank you. Um, the trucking company would be one of the ones probably getting hit at the bottom. But which one to take on the most work would get hit? You want to look at the best of those companies, and the logistics is they have 50 of those logistic companies top ranking. So those that perform the best will probably be losing the most because they have the most work. And then those are the companies that I would look at to throw puts at, right? At the right time because I would make more money, definitely knowing they're going to lose a lot of money. They're gonna lose more money than the other. Duh, right? So I have the top ranking 50 logistic companies. I have the top ranking transportation companies for 2021. I'm looking for the top ranking trucking companies, and then I just need to know when to put these, how to do a put in the call, and
But
so I
see
can put my
that the
money
putting the
in.
cost still coming down the line. You ain't finna do that with real money. Not on my watch. Now you can do it outside of my watch, because I can't tell you what to do with your own
Why
money, but
can't?
I'm not gonna recommend you spend no real money. But
Why
but
not?
but, but know what you just did though? You see, I lay back because you know what you just did? You
What?
just put together a trading thesis
Thesis.
as
Yep.
a newbie.
Oh,
Didn't even
If
know
I
it.
had some sound effects right now, you'll be getting it.
You
oh,
ain't know it.
oh shoot.
See,
Listen, well,
this is what
me.
I just talked about there before you even got to that. You have to what? Enhance the interest in this, because the interest is gonna keep you what? Interested in want to what? Make sense. Connect the dots. You see what I'm saying?
Oh yeah.
You just did that. And it
Only
wasn't
thing
what?
left, only thing left is doing a little bit deeper, seeing which ones were strong and which ones is weak.
In
Yep.
terms of what you were looking at in terms of the top
Mhm.
the bottom half, and figuring out who got more to lose and who got more to gain. Make sense?
Yes.
That's the only thing I was left in that thesis, pretty much.
Give yourself a round of applause, sis. You don't understand what you just did.
Well, you can hear
Y'all
me
see
in
that
the
little
background, but
meme
I'm
with the
glad
slow
that's
clap?
you.
That
You ain't getting the
Morgan
emoji, you getting the
Freeman
real
that
clap.
award show. He was sitting there cooning and grinning. He was out there just look at Morgan Freeman. He out there cooning, boy. Morgan Freeman. I'm leaving alone. I'm gonna leave him alone.
You
Jesus.
just
Oh my
became
God.
dangerous. You just became dangerous.
You just
Telling you.
became dangerous, sis.
Oh, you wait till 4 o'clock tomorrow morning. We'll see, because I'm about to put $1,000 on it.
No, you ain't.
Nah, no,
But about what?
paper
That's a
train.
lie.
Paper
Paper
trade.
Look,
train.
I know you would say though.
First.
I'm just,
Roll credit.
Paper train.
I'm just joking.
Cut the TV off. Right? You see over there, I'm gonna go to YouTube. Y'all family, y'all hear this right here. Y'all on the YouTube side. Y'all know we don't work like that over here.
I wanted
Disclaimer.
to get a laugh. I'm sorry.
You do it with a paper trade right here. You doing that real money. You still in boot camp.
She said she about to put $1,000 in some puts.
You know what I'm saying?
I'm
Drill
gonna
sergeant
just
can
go
hit you with all
across
kind
the
of push-ups and
She went and got
pull-ups.
the thesis for you. Yeah, I got it. Watch me make these puts and calls real quick.
Right?
Good.
You jump out that window and make you some money. Don't look at it. Don't look at it. Don't get cocky.
That's probably by Taurus risers.
Now you
Yeah,
learning
about
though, but
that
again,
money.
take your time. Because again, over time, what's gonna happen is you'll begin to again. So I'm saying it's systematic, right? Or we call it what? Methodology, right?
Oh yeah. Yeah.
What is a methodology? Right? Preparation, plan and procedure, right? Structure too. It's structure.
Yes.
You know the rules of engagement, you know what to look for, you know how to
Execute.
dissect it, input, output, keep it moving. You're doing that, all that in what? In a timely fashion. Why? Because time is what?
Money.
Money. And it ain't finna wait on you to sit there and fumble through the market like, yeah. Pew. Right? So again, but that's strictly to again, we speaking to that trader side, but even as an investor, because you can say, I got a trading thesis in play where I want to buy in at a certain price. I'm waiting on this price. It come and hit your price. Get what you doing. You at the nail shop, not your alert set, just sitting there talking about, what Dolores did at the grocery store. She didn't slip down. You'd have missed your entry because you weren't prepared. Feel me? But see, they got things in place where you can do that. You can set an alert. When the stock gets to a certain part, a certain price, your alert, your phone buzz and go, what is it? Oh my girl, this thing hit my strike price. I'm finna buy it. This is the price I've been waiting to get in at. Oh, give me 1 second. Oh, yeah, so what you was talking about? Yeah, so and so. What you did? Yeah, I done bought 1,000 shares of this company right here. What would that mean? Yeah, that mean it has the potential to bounce in and go a little higher and make me some money. Oh, really? Yeah, really. Let me tell you about it. Come here.
What? So hold on.
It's interest. So you move according to what you can account for, and then the rest is all up again. It's applied. It's applied experience. Why? Because experience in the market doesn't necessarily mean you actually losing real money or making real money. It's about you observing, right? This is an observant market, right? They call it window dressing, right? That's what you're doing. Every day you pass by a piece of data point that has something to do with the market that's symbiotic to the market, that's window dressing. That's natural observant. Why? Because you're building a what? A repository of this information up your head. So when you hear it again, see it again, it's spoken again, you're like, oh, I remember this because so-and-so, so-and-so. Make sense? Sometimes you hear me on here when I just be going in and I just be pulling stuff out of what? Left field, right field. Like, how do you remember all this stuff? Like, what is stuff? What you just sit around looking at CNBC all day? Essentially, I have all that stuff in my periphery throughout my day. Even when I'm doing other stuff. I could be housing stuff, business stuff, clients, right? But I still got all this stuff, in my periphery throughout the entire day, right? You want to be a businessman or a businesswoman, guess what? You best to get good at learning how to multitask. And number one, get out your feelings, stay away from emotion, and get laser focused on learning how to be what? A business, that's what I'm saying, a business mogul. Make sense? Because the people that got that kind of bread like that, two things you ain't gonna waste. They what? Time or they what? Money. Make sense? And then you look at them like, see that joker that think they better than everybody. No, they just right now ain't got time for that foolishness, right? Because they chasing the what? Bigger goal. Because now they might be employing people. They got people to feed. See what I'm saying? They ain't got time to be sitting there shooting the breeze about, what what little Junebug did the dice game last night, and he lost some money, right? Like that ain't the time and place is my point. They may talk about it, but not in there. But either way, you're learning how to compartmentalize your time in essence to that of your your interest level. Make sense?
Yeah.
So you'll say, well, I got this extra 10 minutes here, this extra 20 minutes, right? The kid's good, everybody else solid. Let me go do me some quick research real quick, some quick study time, right? You can find time. I see people find time for everything under the sun all the time. But when you start pressing them on saying, hey, come hang out with our study session. I don't know about that, child. I gotta go. Ooh, I gotta. I'm like, Negro, you see, they just told me the other day that you sitting there struggling financially, and your paper might be a little funny, but here I'm trying to help you figure out a way to grow your paper, and you still trying to give me an excuse on how you feel like you ain't got time to learn how to grow your paper. Now, convince me what part of the game is that? I love how people out there running around like that. Are they not?
The complacent part.
Because they don't understand that time is money. They think that they got all the time in the world. And guess what's happening? Everything is passing away. Young. What the wealth gap looking like right now? The wealth gap expanding. These people sitting there making a killing off your tax dollar. And they looking at you saying, if they ain't going to invest in it, we going to do it. We'll take it. And then their kids going to employ what? Your kids. Like, yeah, make sure you be good to Miss Millie now, because you don't want to upset Miss Millie. Like, what? Miss Millie finna get one of them pies like on that movie, or you finna get one?
Oh, no.
Oh, no. The help with that movie, the help. Yeah. It's a nice little pie. What that is? Pecan pie? Yeah, okay. Yeah, what it is.
No.
That's what it is. No, but seriously, you get my point. So again, take it serious. Not that you don't, but I'm saying that because I like to repeat that psychologically, because you're working on your psychology in the same breath. Right. That's what this is. A lot of this stuff is going to be really psychology. A lot of it is. A lot of this is your psyche valve you doing yourself. Right. If you easily move or easily nerved and all that stuff, look, you finna learn how to build that up to be strong. Right. Because the one thing that gets people emotional is what? Money and love. Two things.
Oh, yeah.
Two things to either get you emotional: money and love. Right.
Yep.
And if you got if you lacking one or the other in that quest to have both, you in trouble. You looking for love, ain't got no money, woo, you in trouble. Right? Right? Yep. You got love and ain't got no money, ooh, bro, that could be a problem too. See what I'm saying? So you're always in the quest to be balanced, basically is my point. So that comes from you understanding who you are, what you can account for, and everything that you can account for. You don't beat yourself up about it. You say, in my respective time, I'm going to learn it. Why? Because it is a marathon, not a sprint. Now, that don't mean you just go out there just lollygag off and blow through good useful time. Well, again, that's the individual, right? I'm not saying you have to, you don't. I'm just making a case study to say, if you really want it that bad, here's what you're going to be doing. Basically what we're doing right here. Once you have a little extra free time outside of doing, having some time for yourself, do that too, but also do this too when you find free time. Why? Because it's going to make you a better person. Because this stuff, really and truly, to be honest, it expands into your what? Your personal life.
Yeah.
The skill sets you learn from this here make you an overall well-rounded, better person. Why? Because you learn how to be very what? Disciplined. What's one thing people lack the most in their life? Is what? Discipline. Stop playing. No matter how churchy they is, or how mossed up they is, how Islam they up is, look at it. Get him in some real world situation. That stuff, all that stuff gonna go right out the window. Like, what, man, nobody care about that, bruh, right? So money is one of those things that keeps everybody somewhat, grounded to a degree, because they realize that it's a survivor game. Either you have it and can survive, or you don't, or you feel like what? Any day could be a bad day, right? You trying to survive, self-preservation. Again, and the aspect that this gives you the keys to unlock the Lambo, literally. Ain't nobody in the way you can even get that Lambo. No education, no job, no resume, no credit score, none of that stuff matters over here. Let that marinate for a moment. Race, color, creed, sex, gender, orientation, midget, humpback. None of that stuff matters here.
Yeah, just realized.
Think about that for a moment. Am I lying?
No.
Who's gonna tell Shanika that she can't trade the stock market tomorrow? Only you can.
Yeah.
See how that work? But looking at it from the perspective here,
I listen to you.
how much money can you make in the stock market given the right situation, in the right environment, in the right knowledge, in the right?
Right.
There's no
Yeah.
cap on it. You see, brother Al avatar on this screen right here in the group. See right, it's Al Sims right there on the group.
Yeah.
See all the members in the group right here.
Okay, I'm not. You know what? Because I'm on the
It's all
teaching
right,
page.
but Al's
haven't-
avatar, you see,
Yes,
it's a check.
Alton. I see it. Yep.
How much that check worth?
100,000.
No, stop playing. How much that check worth?
100,000.
Girl, your eyes bad. I'm finna come at you now.
Oh,
What that check worth? Right? I'm a love doing business with you. You gonna
Wait,
give me
no.
900,000.
I'm being again.
I'm gonna walk away with 900,000. You 100,000. And I'm
You gonna give me
yep,
$9
I'm
and take the rest.
gonna give you the 100,000. I'm gonna be fair. I'm gonna give you 100, but I'm gonna take that 900,000. Work it. Cause that's what you say. You want 100,000 out of me, right? That's a
And
million
I kept saying it too. I'm tired.
with confidence. No, it's all right. But you
No,
get my
that's
point.
not. I know, right? That's a million.
So that's again, you get to dictate your paychecks here. See, rather can people go into on the job, punch the clock, and tell the boss what they're gonna make, right?
Right.
Here, you get to tell you, the boss, how much you can potentially make, because there's no cap. At the young folks saying no cap, I ain't capping, right? No cap, ain't no cap, right? True story.
And I'm looking at something here that says for custodial accounts, it's called a UGMA Uniform Gift to Minors Act. It's an actual act. The account allows a custodian to invest in traditional assets like stock, bonds, ETFs, mutual funds, and related securities. And there's a UTMA Uniform Transfer to Minors Act. And this is a type of custodial account that can be used in a variety of ways, which include alternative investments. I'm gonna look that up, along with their traditional uses like financial assets and investment vehicles. UGMA, which is the Uniform Gifts to Minors Act, accounts can also be used to store items such as property deeds, automobiles, and valuable art collections. So basically, you can hide your assets in a child account, aka gift.
So
What?
LLC, C Corp, S Corp. Why
What?
can't people play those games? Stop playing. And it ain't no game, but you get what I'm saying. People realize how to income shield,
Right.
how to protect
Right.
your from your, see what I'm saying, liability. Look, you even to come get it, clean me off in one sweep, right?
Mm-hmm.
See, they've been doing this for forever.
Yeah.
We trying to play catch up. And I'm only saying that because ubiquitous value. A lot of our people are still, we got all the talent, but we don't have all the, you know what I'm saying?
Mm-hmm.
So we trying to connect the other side of the game with this, innovative, ingenuitive, awesome talent, spectrum that we have, right? We trying to marry the two because that's the lack that most people have. That's why they give up, because they feel like everything they try to submit to is being blocked, right? Because people want your talents and your gifts, but they don't want to pay you what it's worth, right? Wasn't that our ancestor, Dr. John Henry Clark, that said that?
Yes.
Right?
I need to share your stuff more often too. The link
That's
to
all right.
the class and and the YouTube is not, because I share a lot of stuff, and your class is definitely one that needs to be shared in several groups that I'm in, and I'm gonna share it. I'm gonna make sure that
I
I do
counted
that.
all.
I've
You know what
shared
I
it
say?
before, but I mean like constantly, you know?
I understand, but you know my mentality over here. We stand by one word over here, and this is part of you learn that you kind of in the family now. You learn how we been rolling. You've been in the periphery for a long time. You've been hanging out there on the outside for a long time. By the time you came in out, but you've been hanging, and that's good. But that's all right.
I've been
So
reading.
we move by one word. Anybody in the group know what that one word is? We rule by this one word. We move by this one word. Starts with a U.
Bantu.
That's
Bantu.
right.
What does word Bantu mean?
I am because we are.
It's simple as that. Because there's no emotions over here. There's no competition over here. There's no I got and you can't get over here. See what I'm saying? See, that's what a lot of them other groups deal with. So that's why they always stay what? In conflict, right? Because it's one bread runner and everybody else asking for the game, but that person kind of, not getting the game, but keeping them strung on long enough to kind of keep them, see what I'm saying? And then somebody fall out, right? I'll leave that alone. I'll let y'all do your own with that. But y'all know, but I'm just saying, I'm speaking because y'all know the community like I do. That's what I'm saying. I ain't talk about nothing that y'all don't know. Y'all know our community. Let's keep it 100. Over here, see, that rule don't apply over here. Why? Because number one, we don't own the stock market. See, it's every man, every woman for themselves. But collectively, guess what we all do? We still work together to make sure all of us get a chance to what? Come out on the good end. Make sense? Because we're literally going and taking it to the who? To the man, right? Old school style. You seen the movie I'm Gonna Get You, Sucker? Old school, I'm Gonna Get You, Sucker. The old school star cast movie.
Favorite movie.
I'll leave it. That's your favorite movie. I'm gonna say, y'all know I'm Gonna Get You, Sucker. Man. Come on, but y'all know y'all been living in the box, right? That's
Many are called, but few are chosen.
You were chosen, right? Look at it. We you know, one reel. Let me get one reel. One order of reels. No, one reel.
Just one rib.
No, one reel. One reel.
Just
Yeah,
have
nigga,
one.
reel.
One rib to go.
I sure am hungry.
Just one rib.
You got any soda? My soda go $1. Man, pour them a hand for a nickel, man. Come on, man. Pour them a hand for a nickel, man.
Hungry.
Come on, right?
Funny, man.
I sure am.
Chris Rock.
I sure
am hungry.
And he pull out that wad of cash.
I just pull out a bar. Pull up a Bible. Pull out a Hebrew content Concordian Bible with the wall. But look here. Right? That's how y'all gonna be though at the end of the day. Cause you know what? Y'all gonna blow no money. That you can't. No, I need the money for this. I'm sorry. Give me one reel. I'm straight. I don't need to eat today. I'm trying to get this market. No, but seriously, that's your energy, right? Feed it daily, cultivate it, curate it, and then go out there, you know, and enjoy it. Because again, here the rules are what you set for yourself, for the engagement of it. The protocol is already in play. This is day-to-day what? Living. This is commerce at its mundane level, bartering 2.0 in our technological advancement age and what we're dealing with right now, right? Cell phone, computer, information comes what? Instantaneously, right?
Yep.
To invest in the markets, it's the same aspect now. You have instantaneous access. So this is how, man, look, imagine when your kids become where we at. What you think they're gonna be dealing with in their time? But see, that's just if you can foresee the future out like that, then you built for this. Because people over here are basically sages. We're all sages, right? Am I lying? You're just doing it in the aspect of money and company and paperwork and but people who thought about the cell phone way back in the old days, right? Or the computer, because we know the military was the first to kind of put together some kind of aspect or apparatus of that of a computer. Then it got, when the public got it, and private sector got it, they went on whatever, or put whatever. But again, who knew then what it would be today, right? And the ubiquitous nature of it. See what I'm saying? So you're having to start to think like that, to think about your future success that's coming through these companies, through these products, right? Through these services that they offer too. Make sense? So if I ask the question again, if I go through the panel right now, ask each and every one of y'all, very candidly and straightforward, do y'all think Amazon gonna be around 10 years from now?
Yes.
Yeah. Do y'all think Apple, the company Apple Incorporated, gonna be around 10 years from now?
Yeah.
Yes.
Do y'all think Tesla is gonna be around 10 years from now?
Definitely.
Do y'all think Facebook still gonna be around 10 years from now?
To switch up, but they might.
That's a question.
I say yeah, because they starting to work on that metaverse with those NFTs. They getting into the NFTs and that metaverse with they bought out Oculus and trying to create their own virtual universe. So I think Facebook's gonna be around for a while.
They're gonna switch like you said, and I've seen Apple doing the same. I've seen Apple having it.
Facebook might be
When I
around.
bought it, I ain't even opened it yet.
Zuckerberg might not be
It's
around.
still brand spanking new. Now here, I'm saying that to say this here. Who's gonna challenge Facebook? Who's out there that can challenge Facebook over the next 10 years to take their spot?
There you go.
Nobody.
Anybody?
Twitter, no.
A grimy partner. No. that's business. That's what capitalism with no feelings. One of
They
their
bought their
partners had, like,
competition. Their
Instagram.
biggest competition was Instagram. And they bought them.
I was about to say, like, Instagram, supposed to be a
They
partner
bought
in
Instagram.
social site.
They bought WhatsApp, the international phone company that everybody uses from Africa. Everybody in Africa got a WhatsApp. Everybody in
All
Africa
around
got a
the world.
WhatsApp.
That's it. Mhm.
You ain't never lied.
That's
They
crazy.
took that
India.
off the market. They took those two things off the market in itself. So when I asked that question, I'm trying to ascertain who's their next competitor, right?
How do they make money off of WhatsApp?
Apple.
So if Apple come up with a social site, do you think it can equate to that of Facebook at this point?
Too far behind.
They got to do
Key
like
point, key phrase. Somebody just said it. Who said it? Somebody just said, I missed it.
Too far behind.
So sometimes there's a thing called what? First to what? First to market. You ever heard that term before, first to market?
Mhm.
Because you get a chance to iron out all your what? Issues out front.
Right.
See what I'm saying? Once you get all that stuff behind you, new player got to come in and try to what? Figure it all out from what? The ground up. They're going to blow a lot of money.
they can take over TV though. Apple.
Early bird gets the worm.
But see, that's the part about it too. Because even if they can't complete 100% take over the social media on a pure play, they can also have ancillary what? Hands in the cookie jar, right? They can do other things, right? That's why you got streaming across the board. Because who overtook the cable company?
Streaming.
Who was the first to take on the cable company?
Netflix.
Say it with your chest. Who was it?
Netflix.
Because y'all was doing it. Netflix and chilling. How cool was that as a talking point?
Yep.
Everybody was doing it. Man, I've been Netflix and chill, bro. I've been Netflix and chill.
Yep.
You talk that business into existence.
Don't drop them around.
Because word of mouth is the first form of what? It's the best form of advertising, excuse me. But beyond that, they just got behind and be like, now who gonna compete with Netflix at this point?
Disney.
See how I get, because the first thing you can say, like, Disney, why? Because Disney been around longer. But here's the deal. Is Disney a pure play on what Netflix is doing?
Absolutely not.
You know what I'm saying? So Netflix has a leg up. It might be small or not, but they still have a leg up in what they do. Why? Because they're dedicated purely to what?
Concentration, yeah.
You see what I'm saying? So in that niche, they're gonna stay that way until somebody can really overtake them on that level. Disney can take market share away. They got the Marvels, they got this and all these different shows, Star Wars, all this. But again, on average, they're focused on what? A lot of different other entities. Theme parks, this
Going into gaming now.
See, now Netflix just said, okay, we kind of mastered this here. Everybody come for us. Now we can move into possibly what? Online gaming.
Oh yeah.
Right? Like a Twitch, right? But even though we know Twitch getting ready to go IPO soon too, I don't know if y'all been hearing about that, but I think Shamat leading up Twitch, or he leading up, what he leading up? He leading up something else that's getting ready to go IPO, or they think about going IPO. Discord, excuse me. I think he's part of the Discord underwritten team. Or if I ain't mistake, I'll put it up next time we talk. I had that information, but I think he's part of that, trying to get Discord to go public. That'll be huge for them, right? But y'all get my point. See, what are we doing right now? This is what they call what? What are we doing right now as a group right now? We're doing what? Starts with a T. Starts with a T, and the next word is a T. We're doing a what? We are a what? Starts with a T. A what? Say it again.
Think tank.
Say it with your chest over.
Think tank.
See, black people ain't used to being in these spaces.
Yeah.
But we innovative, come together, comprise and thought. Now they got an app for that called Clubhouse. I ain't been on Clubhouse yet. I've been trying to get on there, but I ain't got an app, right? My bad.
I'll invite you. Android. Oh my goodness, I'll invite you to Clubhouse.
I'm a Druid person. They ain't got Druid on there yet.
Yeah,
but
no, they got Droid. That's how I got on.
Well, they finally got it. But here's the deal. My thing is this. What they're doing on there is supposed to be based upon these kind of conversations, right? You know what I'm saying?
Right.
Ours is more intimate because what? We have a vested interest to want to make sure everybody on here be successful. Make sense? Literally. It's not, oh, I'm the big dog in here, so I get a chance to take all the floor speed. I'm just paraphrasing because I've never been in there, but I hear the stories over there, right? And I've been in these groups before this, right? I did corporate America. I did international marketing, right? I sat on some real powerhouse little, back in the day, what we consider to be clubhouse, right? Where we had guest speakers come in like Tony Robbins and John C. Maxwell. Like these, this is it. These are the people at the top of their game. Make sense? So they give you the real game, right? It ain't based upon window dressing and no, not to say that those are, but y'all get my point.
Can't show your screen there either, so.
Right. So, see, even little stuff like that. So in the case where you can say, well, let me politic, the future, right? With some of my peers, right? On Ubuntu, right? No matter who been in the game long or not, all that stuff don't matter. Why? Because it's all ubiquitous, that you are in the same space and you learn it, and your perspective could be also what an additive to this. Why? Because you can bring something unique that we might have missed. Make sense?
Yep.
The way you just broke down that thesis about if top 50 holding companies, this, that, and the third, the bottom 50, if I put on the top because they got more to loot. That's what an executive person that's sitting in or in an analyst hub at the fund manager, that person's job, to get them stats that and deliver it to the big man. Hey, I did. Here's the data. All right, run with it. Let's do 100,000 shares at blah 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 at this price, and baby, it makes some money. Good job, so and so. You was right.
Question is, are they talking about that in Clubhouse? Are they just talking about stocks to buy?
Okay, I was refusing Clubhouse first of all because it was for just Apple people. So I was like, I don't think it's. I'm not interested. I'm not getting an Apple phone. I'm team Android. So that's like, I guess cliche. But a girlfriend of mine, because I do the readings, she said you have to get on there. You don't understand. And she said my group has over 14,000 people in it. Or probably more. I probably got the figures wrong, and it's a little more. But it's called GABA Gang. And she said I met some really, really high-end influential people, and I've made some great networks. And she said they somehow, some of the people in there were asking for the readings because she invited them to her coaching group, which I did a reading in there, but that was smaller for everybody in there, maybe like 20, 30 people one night, and I read everybody. I did it, just to show her that I'm supporting what she does because she's genuine. She loses sleep, and like you, Oba, she's really into making sure financial literacy for real estate and starting your own companies is given to the sisters, and to share it with their families, their husbands, and everybody. So I read everybody for free. When I got into you can't get on the Clubhouse unless somebody gives you an invite. So she was like, please come on, could you do it tonight? You and Nay. Nay is another reader, and we both mediums as well, and a few other things. And I said, okay, I'll do everything in the group for you that the people ask. And I did it from 9. I got on at 9 o'clock to 5 in the morning. Literally, there were all types of people in there, investors, artists, musicians. Okay, so basically when you get on there, long story short, you have to be invited. You can only set your account so that you are communicating with people that are investment minded. So some of those people, they are millionaires. They're they're offering information. And you like what you do right now, you're face to face. This kind of is even more time consuming because you're sitting and you're in a Zoom and people are paying attention to you and you have to stay in one spot. With Clubhouse, and you could be on your phone in your speaker and y'all sharing information. The only revert part is that they don't have the video yet. It's no video. So everything that you're communicating with, if you want somebody to speak, you can pause, you can silence yourself, you can leave the room quietly, but everybody in there, you can see their profile picture. And when they're speaking, like this green thing came around my face, it lights up around theirs and it light up around yours. And you guys are like,
right.
yeah, it's more like it's more a real-time communication verbally, not
Yeah,
you
and
know
I'm aware of the I guess I should say the model what it is, right? Being on that.
oh,
I'm
okay.
gonna say it
But yeah,
because
you
I come from the Discord world, right? See, Discord world. I don't know if you're familiar with Discord. Discord is basically what the gamers used to use back in the days, right? Then
oh, okay,
the
okay.
investors took it over, right? It's basically like a meet and greet place where you can come and hang out. But over there you can do all those things that some of the stuff you couldn't do on potentially on private clubhouse until they build it out, right? And then they had the voice, right? You get on the voice, hop on, all right, and just kind of politic. Then you kind of do the posting in there. But again, in the essence of that, in terms of networking, right? Because essentially we here to network, right? We all here to network
Oh, it's great
and
networking potential.
thoroughly, right? Best of our ability, because again, you're trying to politic around, you know, potential, yeah, again, a net positive from it, right? A monetary gain in a sense, right? It
Hmm.
wouldn't,
Hmm.
in the layman terms, the knowledge in itself, when you gain knowledge too, that's a gain too. Of course, it hadn't been materialized yet. Make sense? It's like, okay, I got this now. Okay, now I got to materialize. I got to actualize this, right? I got to make this happen now. See, that's the part where it's us. Well, in terms of our reality gets separates from everybody else because see, we get a chance to take our actionable intel and go right into the market. See what I'm
Hmm.
saying? Straight beeline. There's no middleman. Ain't no stop and talk. This guy ain't no me. Ain't no wait on this person to get this stuff together so you can make them move together. So it's like we cut out all the fluff and we go direct to the source because a lot of the stuff that even though people are networking, they're somewhat in a cache or a line or a queue of everybody else trying to get to the what? To the big dog, right? Oh, come to my level, stop. Wait, I gotta see if we can get some time for you, right? To meet again. Okay, you got a little okay, move you to the next person. Wait, right? Well, he ain't ready yet, or she ain't ready yet. Okay, give me a little minute. Let me see. Right? Unless they come find you on it and they're like, hey, I'm so and so. This is what I do, blah, blah, blah. Now, again, I'm stressing that for a reason because here again, you got all the power. You are the juice, right? You the juice, right? Because you say, all right, that sounds good. That's great. I can get into that, right? I'll do this too, but I also got this going on here too, right? And I'm not solely dependent upon that alone, meaning it working out, right? In order for it to kind of come into fruition, right? Here you say, okay, what the stock market doing? What the stock's doing? Okay, I already got some capital, got the knowledge. All right, let's go get a bag, right? They're on that website to do what? Get a bag or make friends.
No, they okay,
I'm
like
I'm using that object. I'm throwing it out there in in a kind of
okay,
objective way. But
okay,
are they there to get a bag or make friends?
both.
At the end of the day, you in the stock market to make friends or get money.
They get money. They no friends, right? They don't really
Are people on Facebook to make friends or get money?
make friends for the most. Then maybe they make money depending on the friends they make.
Because it's the nature of the energy that's already in play, right? Because
Right.
what do you got to do to get to them steps? You know what I'm saying? It's a lot of pre-steps you got to go through to get to that, right? You got to find the right people that bought that life. Then you got to see if they interest align with your interest, if they interest too, then y'all can probably work together, try to figure out how to get to the bag. You see what I'm saying? Nothing wrong with that. Over here, what we do, look, this stock, that stock, this stock, this asset, what's moving, what's not, what's good, what's not. Okay. All right. Yep. Then the next day you see somebody post in the group or something. Oh, yep. That was a quick little $1,500 in about 2 hours worth of work. Yep. I'm finna go fishing for the rest of the day. Did you have to wait on anybody?
No.
Did you have to answer to anybody?
No.
Remember we had the saying early on, a dime holding up a what? A dime holding up a dollar. Our modus operandi is what they call the least path of resistance. I need beeline. I don't need C's and D's and E's and F. I need a beeline. I need to go direct to the market. You see what I'm saying? Because in that moment, what I did, I cut out what? Excess time, and I probably saved a whole lot of what? physical money and mental money, right? Because sometimes people run you ragged. I got this plan. Let's go. Let's go grind. Let's go grind. Then you got to wait on. Then they like, you like, I'm ready. And you got to wait on them because they got a world too that they got to deal with. See what I'm saying? If they're not a punctuated person, right? If they're not punctual, and time is money to them, that's what they're gonna be. What on time? They're gonna be ready, right? That's a part of networking, though. See what I'm saying? It's both. It's all good on both sides of my point, right? But in essence, what I'm saying, when you want to get really focused and seriously get to what they call get to your end goals a lot faster, because everybody's trying to get a bag. Don't let them fool you, right? Oh, I'm trying to make friends. That's good. Yeah. Again, I have this saying, ain't no such thing as best friends. There's not. There's only permanent interests. What makes you have a value to hang around with a person for years is the interest level. Think about that. There's only permanent interest. Without a permanent interest, you ain't got nothing to get up out of bed for. People fall out all the time.
I think if you're not dealing with emotions. But
here's my point. That's what I'm saying. See, you are psychologically well put. You got to be together, deal with all that. You got to be strong, and the person that you dealing with has to be equal or greater at the level that mental strength capacity you do. Make sense? Because at any sign of a flaw, it can mess up the whole vibe. Make sense? But see, if they on code, guess what that means? That means y'all have permanent what? Interest. You already know. Look, you already know that's going to disturb the moment. Why would you even put us in that situation? Make sense? So people go out there and flip on each other all the time and mess up stuff because they're not emotionally invested in a proper interest or a code that says we're trying to go here. Right? We ain't trying to go right. Right? Because in doing all that, you losing what? Time, and you wasting probably what? Money. If you already needing a bag, convince me how you got time and money to waste. I'm just saying these are very basic rules of engagement. Don't they call it self-preservation, right? What's the word self-preservation? It says what? Self-preservation. Preserve thyself. Get your ish together first before you even take it on the road to anybody else. Make sense?
That's probably been my problem. That's why I'm probably where I'm at, because humanitarians don't think that way.
It's that all it is that you can love on people and love on life, but in the same breath, you got to survive it too. Not just survive it, it's a difference. You got to thrive it. See, survival is always playing from a place of what? We had this saying earlier. Remember that saying we put out? It's called what? In the investment world, this is a ubiquitous term. It's called what? Sink or what? That's a ubiquitous term we use in the stock market. See it right on my screen? Sink or swim. That's ubiquitous terminology in the stock market, in the investment world. Everybody understands it, what it means. That's real talk. That's real talk in the stock market, and it's real talk actually in the hood. Either you're going to sink or you're going to what? Swim. Either you're going to be treading water or you're going to be what? Lapping jokers, right? Michael Phelps style, right? So again, here you kind of got a mastery going on. You accumulate enough data, information, skill sets where you can make moves, right? You swimming. Sinking is, oh boy, every day you trying to make sure you tread water, not what? Go under. If you about to sink, do you have all your bearings together? Are you emotionally put together when you about to sink? No, you worried. You're nervous. You about to capitulate, right? One way or else, you got to come up with something. You see what I'm saying? That's a whole new different ball game. Here, again, we cut out all that because we don't have to deal with nobody over here. See what I'm saying? You don't have to deal with the joker that you know that's gonna sit there and procrastinate all the time. Are you ready today? You ain't ready today. As soon as you get with them, procrastinate. I thought you were ready, man. Look, all right, dang it, man. I wasted all this time. You ain't ready, right? Here is like, no big deal, right? Our focus are because we're trying to establish something that we're already come behind in to a degree, and put ourselves in a position where we can have that kind of luxury, right? I have this saying also. You neutralize a lot of stuff, but we don't have a luxury to have a luxury, right? Because there's people out there always trying to put out our fire, put out our flame, right? Stun our growth, right? So for everybody that gets in your lane when you're trying to make power moves in life, that slows you up from hitting your goals, that's a what? Detraction, right? That's a detractor, right? That's time and money that you just wasted. But you knew it was going to be wasted because have this scenario or this entity ever proven that they was what? They were on point, right? Or their interests are in alignment with what? Your goals and what you're trying to accomplish. Make sense? So that's why I say, my perspective, of course, my philosophy, there's no such thing as permanent, permanent friends, this, that. People fall all the time. Without an interest level, you'll never have a code to say there's certain things I do know I just cannot do, or I should not say, right? Because if I'm thinking in the best interest of another person that I really have an affection for, meaning like I care for this person, or I hold this person in esteem regard, I should know how to read the room. We said earlier about reading the tea leaves, right? If you know a person under stress, do you go be around them and try to force them to just bend to your will? No, let them, let people decompress. When they're ready, they'll come around. It's that same folk, right? To a degree, right? So again, in all, I know we went off to the philosophy bag right now. We supposed to be in these talks. But no, but it's a part of our industry is what we do for a reason. Why? Because you know what? And learning how to invest in the trade, again, the number one thing that you're gonna have to learn how to what? Get in check is your what? Your emotions. Because again, what's two things to get people emotional? Money and what? And love, right? Those two things. That's it. That's two things to make people fall out or fall in, right? One or the other. You're either gonna fall out over it or you're gonna fall in because of it. True story. It's human nature. You ain't gonna be able to, I don't care who you ain't gonna be able to whoop that. You'll need to survive, of course, money, whatever. In this case, we're in a capitalist society, it is what it is. And then you'll need to what? Procreate, love, or be with your opposite, whatever, unless that ain't the thing. Of course, they got all this new stuff today, right? And that's fine if people want to live their life. No, that's fine. No, serious. I'm only saying it because you gotta look at it this way. It's all about, like I said, see, this is how I know people got to realize how life is set up the way it's set up for a reason. I just sat there and said, ain't no such thing as what? Permanent friends, right? They're only permanent what? Interest. You see what I'm saying? It's the interest. Whether they you, not you, look like you, not look like you. If that interest is solid, guess what? You're gonna roll. So it's changing the game. It's a different way that we have to start looking at life. You see what I'm saying? But for the most part, if you're not struggling or you trying to survive in a way where you can, let's say, even feed yourself, then that's the biggest what? Hurdle out the way, right? It's the money part. Again, that's the one part that most people fall out the most of, right? You think it's love. No, not really, right? The money always be the first one to tear a joke up. Right? Been there for on both sides, myself personally. About growing up, trying to establish hey, there's certain things you can do and there's certain things you can't do. When money involved. You see what I'm saying? With money involved. Right? So, because that right there make you what? Money make you fall out in what? In friendship. But I thought we were friends. Put some money involved. Friends? Man, where that money at? Where that bag at? Look like where that bag at? We've been friends for 14 years. We're gonna fall out over $20. Yep. Because the person that desperate, then guess what? Whatever. I'll move on. So we move with a whole new different disposition because now we're thinking like calculative, how's the word? Calculative, excuse me, I'm about to butcher that word. I don't for some reason I can't talk now. Calculative. Come through, see the smart people in the house. See that listen, I ain't perfect. Right? right? And we're using a whole new different approach to funnel our energy toward, right? Because here, not that this is the only thing, but here you are in the what? You're in a safe place. You're in a safe place over here. Why do I know that? Because guess what? Who can stop you from this opportunity here? Who can stop you from this grind here? Nobody, right? Nobody. And I'm not saying this is the only thing you need to be chasing in life. Not what I'm saying. I'm saying this need to be a part of what you're trying to do in life. You got a business, right? You got you might still work, in the workforce scenario. So guess what? This is a sidebar to that, right? You have unlimited potential, right? You're not boxed into what, you know, to a corner. Right. So again, I say this like y'all know, like y'all witnessed when COVID hit, what did the world do? The world freaked out. Joke was like, how am I gonna do this? How am I gonna do that? How am I gonna feed my kids? How am I gonna do this here? Because they was concerned about being able to go to what? Go to work. Because that's all they what? That's all they know. Now imagine that. All you know is work, how to work for somebody. You never took time to figure out how to what? Build your own work. Let that marinate for a moment. They got all kind of what? BSs, right? MAs, right? They got ED, right? They got all kinds of stuff, PhD, and nobody took the time to figure out how to build work. They used to just working for something or working for somebody else basically. But you got investment, yeah. But I let my CPA handle that or my broker handle that. But it's your money, yeah. But I'm not good at that. How you ain't good at that? Do you pay your bills at home? Yeah. Do you grocery shop selectively and selective when it comes to research and search stuff? Yeah. Well, guess what? That's the work of an investor. Majority of the stuff in your house is probably publicly traded. How you not knowing how to invest? But whatever. When you teach it, they're a little bit more plain. People get it, they grasp it, they run with it, right? So that's what we're trying to do over here. So neither here nor there from that perspective, but it's about how you value it, what you see, how you position yourself to be able to take advantage of it, and then from there, essentially, uh, you know, knowing that you're never ever with such a skill set, right? Because you're not limited, right? Firewalled from having the basic essentials, right? What do you need to get started in this? Laptop, cell phone, computer, tablet, Wi-Fi, broadband connection, some capital, meaning money, and then what? Knowledge. If Shanika said, I'm done with America, I'm tired of these idiotic, crazy people, I'm gonna move to the island. If you can catch a Wi-Fi signal out there on that island, and you got some power electricity, or you don't even need power electricity now, because now they got what? Solar panels. You got solar panels, you hook a generator to solar panel and get you some power. But you catch a signal somewhere, or a sat line, look at you still be getting your bag. Amazon be dropping you packages off on some little island out there. Like, yeah, we created it, we dropped it off. Look at, see, because you got a skill set where you don't need other things or people to dictate how you can live life through financial gain. Make sense? You can go get it. Right. So that's what this is all about. So you got your hand up. I see you got your hand up. You ready to close it out?
Yes.
Go ahead.
Okay. Just quickly, I just wanted to know, with the Joe Biden bill that was just passed, that's basically gonna, from what I understand, and I'm looking at make the see it, they said the financial debt hit the ceiling, then by October it's measured that the monies that they're putting out to the organizations, government, like for Ida, for hurricane disasters, and which we've had a lot of in different locations. They putting out like a couple of millions of dollars for the no, actually billions. Pardon self, 28.6 billion for the
28.6, and then 6.3 billion for what?
for help with support of resettlement and Afghanistan evacuees, which could last for I don't know how long, because I was told that from people that were there, that war is not about to finish anytime soon. So basically, what I'm getting at is, should investments in insurance companies, government agencies regarding or concerning puts around in October,
Crash.
um uh um assistance, like non-for-profit organizations, uh see kind of like the depending on their services, a loss as well or a gain. um and what's the other one? Military stocks. And are there ETFs for that, like with
Well,
funding and
here's what you did. You can now you're doing what they call, this is kind of like the hypothesis phase of a what, of an investment, right? You're starting to conjure up some ideas of if they have any relative value to what the markets may be or may not be responding to, right? Not that
Right.
these stocks that are out there can or cannot make money, or could be making money, or may not be making money right now. It's all about what, because I think we was talking about it earlier before you came on, but you're gonna get there, right? You're still earning the game. It's this word right here, right? Cyclical nature of markets. When there's a certain value or a certain, let's say, a certain scenario in markets where you say to yourself, this is very pressing and it's taking a lot of global attention to deal with this problem, right? Or this entity or this scenario. What are all the things surrounding it that can feed off of it? Because that's how Wall Street thinks, right? Wall Street said it's a disaster. How can we make money off of it? If it's something good, how can we make money off it? They don't care. They make money off. Look, these people, look, there's no conscience when it comes to, for the most part, there's no conscience when it comes to, make sense? Because again, people are suffering during the hurricane. Guess what? Stock market still open. Oh, they gonna need to rebuild. I'm gonna go buy Home Depot stock. See how that work?
You make money off of the
everything.
Yeah,
everything. See what I'm saying? Everything.
You just need to know when you can make the money. That's it, because you can make it up or down.
All dependent upon, like we said earlier, this word right here, cyclical nature of markets. What's necessary at this moment? What's popping right now? I said earlier, I hate to keep going back to it, and this other thing is permanent this, permanent that. It's only permanent interest. Interest also shift, right? If everybody buying coin stocks at a point where coin stocks are popping because there's that the new fad, and this everybody run the coin because corn fuel, this, that, and then a new innovator come out the next day. Now they move away from corn and it's a soybean fuel and soybean this. See how that work? People just left corn and went to what? Soybean. You see what I'm saying?
So
how many people gonna say lower to corn? How many people gonna say loyal to corn when corn is tanking and going down? When they can make money in what? In soybean, because that's a new fad.
You can't stay loyal. But okay, wait. Oh my goodness, it was okay. For estimated date time, when people say I put this estimated date time that I'm gonna possibly put, buying in this time, or whatever your investment is, you able to set that date from knowing what's gonna happen, like by the news that you're watching, or and if so, let's say like they're giving dates in October. So if I know in October this amount of money is going to be put out, and it'll affect these particular stocks this way, or I'm assuming, I'm taking a educated financial guess, then
Way to say it.
Is that how you get your date? And is it better that when a lot of people are in hysteria before the actual event occurs to buy in or pull out, or is it better after the fact for certain investments?
Well,
Particularly
no,
like,
you fine.
okay, so let's use the trucking. You know that they're about to or they are losing money, but is it best for the companies that watching a percentage go down or watching a percentage go up? If percentage is going all the way down, is it better for you to do it when it's in that momentum of going down, make money? Is it safer basically to trade in the momentum of the percentage going down after a certain percentage? Maybe like if it's if at all right. So I heard a brother say at 0%, put all the money in, right? On that interview with the Breakfast Club I was watching. But so if that's the case, if you could throw it all in at 0, if that's the case, then around 10, you may still be a little observant. Around 15, you may not be moving. Around 20, just saying theoretically, right? You definitely ain't putting it in because it's not safe. It could wind up being more volatile bounce. I think like if I'm getting this right, it'll bounce or whatever. But if it goes all the way down, for a fact now, everybody's gonna definitely be pulling out. That's a definite put put profit, right? If I'm
I know
going with that
you
right.
using the option terminology, but it just basically mean the stock is coming down, or other way you can say is they're short selling the stock, right? They actually shorting the stock to come down, right? They're trading it in essence for it to come down. They make money off the stock coming down. We just say the put is easy to say it, but no, essentially what I guess if I'm reading it correctly, no, you're right. It's about being able to establish, like we was talking about earlier, right? When we was going through the hardcore stuff, is establishing what they consider to be trend, right? What is a trend? A
Okay.
trend is a momentary or elongated aspect of a pattern, or a continuity of what of momentum. In this case, in a biased direction, right?
Mm-hmm.
It could be either what bullish, right? There's only two type of direction, right? There's three, but what we know to be there's only what? It's only bullish and what? Bearish, right? Bearish is what? Down. Bullish is what? Up, right? So if a trend is leading to be a bearish signal, and you say, okay, if the stock is, I don't know, up at its highest point, right? It's all-time high per se, right? And then all heck breaks loose, right?
Mm-hmm.
So what happens is the stocks that are at their all-time highs in a moment where a specific sector or just the overall market is starting to pull back, and there's no underlying catalyst about that stock that can necessarily keep it up above that of what everybody else is, starting to kind of retreat off their prices, right? And it's at a higher price. That means it's more expensive for it, right? And it possibly can be trading at a lot lower price. Do you think they're going to hit that overpriced stock first, or the stocks that are already kind of beaten down?
Already beaten down? Dang, I'm guessing because I didn't hear what you said. I'm sorry. Like the last
Meaning,
part.
if a stock is at an all-time high, and the broader market is starting to come down, that better before it happened, right? The market started coming down. Which one is more susceptible to be attacked? The stock that's sitting at an all-time high price, right? Or the ones that are already kind of beat down? Which ones do you think they'll be more excited to want to probably short?
The ones that's in at an all-time high?
Like you said earlier, with the 52 holding company when it comes to transportation, right? Those at the high got more to lose, right?
Mm-hmm.
See, that's natural. You don't need education to know that. That's just simple, right? That's understanding. Look, liability, right? Liability costs, right?
Right.
That's life is liability or surplus, right? What you dealing with, what you working with, what you working with. So you're making that same assessment when you think about these companies. What's their liability? How much overhead they got out there? How much exposure they have, right? Risk management that they're taking on, debt to equity, all this stuff. And then basic, what's their competitive environment look like? Who's the next best? If they're not the first, are they second? Are they third? Right? There's still market cap that you can take. That's why we made the assessment earlier about pure play streaming, right? Who's the pure play best streaming company out there? Netflix. right? We had to think twice on that. Yeah, they got some competitors what on their heels right now, right? In Disney, right? And many others, but strictly pure play streaming, who do you gonna go to? Right? Next, it goes to Netflix, right? Because that's what they do, right? And they do it well, right? And they've earned and gained market share by establishing and following to the degree where people still what buy into their business model. Make sense? So if you're starting to do selective investments based upon uh, let's say things happen, right? Again, hurricane, natural disaster, this, that, the third. There has to be aid given. There has to be a rebuilding phase. There has to be something to kind of work itself into that that equation to kind of make that situation whole, right? Now, if you're a person on the flip side of that has lost because of that, then yeah, it's probably gonna mess up your business. If your business was shut down because of that, well, guess what? Every day that you're not open, that's costing you what? Money. So of course it's gonna hurt your business. Others, come in and say, well, I'm here to be to help me, right? Fill in those blocks that gaps that you guys are losing right now. So guess what? At that moment, them stocks begin to be what? Very useful. And now you can say, hey, it's probably gonna take you guys, a little time to get all this stuff worked out. So this might be a good opportunity to invest in this company because this company is like kind of frontline helping them get on their feet, right? The resources, the national advertisement, whatever, right? But essentially that's what you're doing, right? You're putting together again a business plan, right? A timely business plan based upon circumstances, chain of events, whatever, and saying, okay, I think, like you just alluding to, if these things come into fruition, this money gets allocated over time, that money gonna get dispersed. Now, the majority of that money, you can kind of track it to some companies, right? Because some of the stuff is like, public disclosure. We're going, we got a company that we already been doing business with. Like it's so many contracts that's the government has, right? For company that they use, that they contract out to, right? So you have to be on your game to go dissect and find those companies, right? Right? Because what's gonna happen is, and in doing so, then you can say, okay, well, at least they finna get a bag from this, right? Right? Because they got this money allocated to come and they can benefit from it. So there's companies that get government contracts all the time, or win them all the time out the blue. Right? Matter of fact, it was one that I saw earlier today. I think it got some money from the government. Right? Little stocks, they jump up and run because of that. But essentially, that's what you're doing. If you're using that angle, you're gonna look at it the same way. Who are these players that potentially can get some of the money? When is that money potentially gonna get dispersed? So if I start, kind of front running it in advance, but you have to be on your game if you're gonna front run it, because a lot of these stocks are gonna be probably just sitting there doing nothing, right? And then some of them may be okay. Yeah, this was the maybe the tipping point to get them stocks to moving, and you can jump in and say, okay, well, I'm gonna give it time. Guess what happened? It moves. You can benefit from it, right? But and in doing so, again, if you have capital where you can park it in some of these stocks and afford to let it kind of slowly work its way through it, and you don't need that capital for anything else, then so be it. Make sense? Because then you ask yourself, is this money well suited in another stock that can give me what? A faster return, a bigger return, whatever potentially, then waiting on this one to kind of work yourself out. Make sense? So you always gonna have that focus when you're trying to think about all those different peripheries. When it all comes down to it at the end of the day, is that when you get a better understanding to know how to move into things like you just kind of spoke about, like is this money gonna come in October? Where are the companies gonna really, who are these companies gonna benefit from it? Right? Or it might just be so even dispersed, it might not even be worth it. You see what I'm saying? But it's a good way to kind of be inquisitive in the right way to say, let me just dig a little deeper and see. You see what I'm saying? You can probably go pull that stuff up and see, okay, this company here is probably going to get awarded the contract because of this, that, and the third. They spoke about it already. Whatever, right? That's a part of investment thesis, though. All right, so you're on the right track. And see, that's why I say woman's intuition is always good. I know the fella's going to come for me, right? But women make some of the best traders because you guys, ladies, excuse me, y'all take it to that extent of trying to really, put all the different variables in play, right? Not that guys don't, but women definitely have that natural niche or niche value with them when it comes to that, right? So you're on the right track. Stay focused in that. Keep asking those questions and start here, and then take it to what? Take it to trial. Take those same question to trial. How do you take them to trial? You take them right to Google, right? You take them to Google. You take them to what? To YouTube, right? Because you can query it. If there's a video out there on it, guess what? If there's an article out there on it, guess what? You see what I'm saying? You can put two and two together. Now you can't really take this. You can't take the information to your homegirl that don't know nothing about this, right? You can politic with it, probably try to extract some, an opinion out of her, right? But ultimately, if that's not her industry or her field, she can be like, girl, I don't know nothing about you talking about, girl. What's going on TV? Right? You're gonna hit a void. You're gonna hit a block there, right? Because a lot of this stuff sometimes it'll drive you crazy because you can't really have these conversations with anybody else that don't understand it because they're not into it, right? So a lot of investors and traders that I know, it's like we're on islands to ourselves. And you can't wait to get around other investors. Like, man, so good to see another person that invests in the market too. You invest? Yeah, I'm in the market too. Good, man. What have you been investing in? Everybody else be like, oh man, party BS, party BS, party BS. Next thing you got a whole conversation going on about stocks, investments, stuff like that. Like, how can we get a bag? You're gonna eat, sleep, and drink this, right? Because they're trying to get it now that they probably missed out on, back then. And again, a lot of people be, they all the beat path. Look at people, they don't even look the part because they don't care about all that. But they look, them brokers accounts though, swollen, swollen. Most unassuming person in the party got the biggest bank account in there because they're not concerned with all the other stuff, right? They're not trying to look expensive for people that don't want to be impressed by them. See what I'm saying? They're trying to take that capital and put it to work, right?
Yeah.
So that's what it is. So yeah, so you're on the right track. Stay focused in that. Use that. Query it. Take it to trial. Take it to Google. Take it to YouTube. Take it to your other peers in the groups, right? Get in that frame of, again, conversation and politicking, because again, that's what it's for. That's why I said it's a think tank, right? Because before you know it, you spark an idea, you get some conversation about it, it can help you evolve even more rounded picture. Make sense? Well, that's what think tanks are supposed to be for, right? It's it's to evolve, right? Opportunity or ideal to checking off all the variables and figure out whether we can kind of multiply it, right? The multiple effect, right? So that's it. So really good information there, right? We kind of went off the beat path a little bit, but we're on point because all of it's synonymous, right? That's why I love these conversations when it comes to that too, because again, in doing so, you start to figure out a lot of things inside of your head that could be very useful for us, what market related, right? Because there's two things out there that move the world. What are those two things? A product or a service, right? You subject it to them every single day, right? Either a product itself or a what? Or a service, right? That's commerce 101. As an investor, all you want to focus on is what? Product and service. That's the only thing out there, right? There's something else come out there in the picture we don't hear about yet, but that's it. So if it's a service, like you talked about earlier, insurance, stuff like that, that's service based. If it's a product because they need something to kind of fill that void or that gap, or raw material, commodity might be in play, guess what? You can backtrack all that stuff all the way down to the raw goods and services itself before you even get to the finished product that a person may be buying to. Like I said, corn or soybean, right? Whatever hot, whatever not, whatever, So it's all synonymous at the end of the day. Right? All right. So you got something to work with. As always, I think everybody else got some, got some out of the bill. Of course, I know we got one person. They didn't get the other people in terms of rich. So I guess we're gonna be doing it again next week. But in doing so, we're learning something too, because again, we're putting together perspective, right? The broader market, how to look at it going forward. We know the moving parts on the chessboard here. We know the feds. We know, again, the infrastructure bill is still out there. We know the debt ceiling is looming. That's the most imminent thing. It's looming still. It ain't been, ironed out. We just got a government shutdown averted, but that's it. No other aspects that markets can say, like, we got this stuff behind it. And we still got inflation and all the stuff we talked about earlier. So you got something to work with, right? Go dig into each individual one of those entities, figure out what can, help your investment thesis, or, kind of make you pause a little bit, right? Or, you know, just being aware of what's going on in the markets is good too, because again, you can start compounding all this stuff in your head. So if you ever have to see this stuff again at some point in the future, something happened, you know exactly what happened during that time. You say, oh, doing this is what happened, right? This is what they did, right? You can kind of start putting it together. All right. So that's it. So let me get ready to get off here. All right. Again, another great build as always. A lot of good information disseminated. Some really good psychological evaluations tonight, which is great because again, this discipline, right? This is understanding how markets moving, what people are thinking, right? How to capitalize on them scenarios, right? And just like that, we're looking at the market earlier. The futures were up, and now the futures are what? Blood red, right? And they're down possibly because what? They probably didn't get that debt ceiling part like we talked about earlier. If they don't get that debt ceiling part thrown in there, the market's gonna do what? Probably not be happy. And right now the futures are down. It's just the futures, of course, it could be green in the morning, but as of now, there's continuation that we saw in the market when the markets closed to the downside. Now you have acceleration to that now in the futures market. Right, so we got some key levels of support tomorrow, which is 428. Last time I checked, well, make sure I double check this. 428. No, it's not 16. Which is it? 428. I'm about to mess up. Let me see. I probably need to go on the outer chart. We'll say 428.77 or something. Matter of fact, let me go to the outer chart. But anyway, y'all know how to, you know, do the basic charting, right? If some of you guys are still learning, of course, you're just trying to take the most key point or the most current point, support point, where the market test that point at some point and retest it again. It's called back testing it, right? So the back test mean. So we talk about around about 428.70 something. So we'll say that 428.80, right? For 428.80, we'd say 428.80, right? So if that area, you know, gets lost either in the futures and it holds into the open session, that could be problematic for markets tomorrow. All right, so yeah. So that's it. So that's it, guys. I'm gonna get off here. Any other last ones before I get out of here? Nothing lengthy because I gotta go eat. I'm already having eating late, excuse me. Sister Shanique, go ahead. Sorry.
It's always me, and I'm so sorry, but I just
No, it's not. You're learning.
Okay, I'm gonna be quick. I cheated a little bit. So I went to Google, listening to what you were saying. I said, oh, what? Yeah, why don't I use the Google? Companies that lost.
But you're always gonna use Google. Ain't no, and I gotta see. I always interject when people be talking with. I want you to get in the mind frame, but talking like you have ownership of this, right? It's not like you happenstance by did that. You had a focus point, you had an interest, and you went seeking it. See how that worked?
That's right. That's right. I could have did a little more intricate work, but I said, okay, let me just put in real quick the companies that lost the most money in 2021. So I wanted to be specific for now, and it gave 14 companies that aren't profitable. It gave S&P 500 6 money losing companies that are about to roll. But one of the most interesting ones was 7 bankruptcy stocks that are going to sell in 2021. So if they already filed bankrupt, and you know that they're gonna lose the money because they filed bankruptcy, then that's a definite, right? Like if you
To a
invest,
degree, because there are different bankruptcy when it comes to corporation. I'm sure you know about it's chapter 11, there's chapter what?
okay, yeah, chapter 11, chapter 7.
And chapter 7, 11, 7 is what? Personal. Chapter 11 is more what? Business related, right? Chapter 11 and chapter 13, right? And chapter 11 in corporations is what they call a restructuring bankruptcy. That means you necessarily don't go to zero. That means that now you have stakeholders and bondholders now kind of come in and kind of you have a what they call a revamping of the old board and in with a new one, and they kind of rebuild the company up from the ground up. Now the only people that really get wiped out in those scenarios are what they consider to be shareholders, right? Or the shareholders type. They the ones to get jacked up in that. Right. But outside of that, they still live to see another day. Right. Even though chapter 7 people do, that's personal, but that's different. But some of those are just meaning that at that moment they finna get liquid. They have to liquidate probably some of their assets to be able to still be functioning as a business. Make sense? So it's either you we say it's where either you're sovereign or you're not, right? Or solvent. Excuse me, solvent. I'm sovereign. Think about something there. Either solve it or you're not, right? Right. So when you hear people say The company is still solvent. That means they have assets they can probably liquidate to kind of pay their debts off. Make sense? And they can probably work themselves out of bankruptcy. Then you have some companies that actually just can't, and they have to liquidate everything and then go to zero. Right? Those are the ones you probably talking about. Those are what you consider to be what you say. Oh, this is a definite. They ain't got no money. Right? Let somebody come in and save them at the last hour, they finna go under. Right? And I've been in scenarios where I showed that some companies like that, into bad scenarios like that, made out. But again, that's just one of many ways you can look at this. And again, that's just being curious or plugging at some ideas on how to find those underlying scenarios like that. That's how you find those aces or diamonds in the hole, right? I'm good for that. I come out of that environment, right? I was heavy biotech stock because those are always gonna be hit and miss because they're trying to come up with some kind of cure, whatever, right? If it failed, guess what happened? The company going to hell, right? That's just simple as that. They put everything on that little miracle drug, right? They got that Peter Popoff spray, right? That Florida water. I'm gonna leave that alone. Move on, brother. Boy, they cover me in the back chat somewhere. Like, bro, I got some Florida water in the house right now. Boy, stop. No, but you get my point. But
yes,
right, old school. But that's how you do it, though. Literally, you start thinking about it from that perspective. You see what I'm saying? And you just all you doing is just basically right, and doing away with all the variables, right? Until you either falsify or you can, it's soundproof. Okay, you go for it. If it a lot of holes in it and a lot of it bad, okay, you back away. We go to something else, right? So that just again, the fundamental side of this is going to come very natural to you. It's already coming natural to you. The only part you can do that you obviously still learn when you marry the technicals with it, meaning that's the chart stuff, right? That's understanding how to put the the mentality behind all the other stuff to the chart, right? Like we just talking about here, you had the peak up here, Amazon, right? You had all-time high up here on Amazon at dating the $3,800 a share in mid-July, because that was a boom cycle. They came out of spring spending, people buying, right? People getting back out. They started lifting a lot of mandate. You can go outside now, and people like, okay, they were just buying. But anyway, spending money based. And then in came oh, it's gonna get ugly again. Oh boy. Oh, here with this, or this, that, and the third, right? Because inflation, right? Inflation hurts companies like Amazon too, right? But the main stuff that they sell is products, whatever, right? It's inflationary, right? But there's a lot of other stuff too on top of that. But supply chain issues, this, that, and third, just being overbought, extended, then had such a great run since the COVID lows or the scenario of when COVID came. It just couldn't make this up. Just stock is just crazy. If you look, it went from $1,600 last year during COVID, right? All the way up to now $4,000 a share. In about a year and 4 or 5 months. That's crazy. Right? So it basically essentially, dang near double almost. Right? So it's that kind of understanding that you're working with. All right. So that's it. So yeah, focus on that. Again, there's more material that we got available in the group. We got the videos. Again, the same things that you're thinking about possibly wanting to get into in terms of trying to say, well, I think this is going to be a good scenario. You're doing the right thing. You're using what in the beginning you just asked about. I said, always go Google first before you come to somebody, because when you put that intent behind it or that interest level into it, what happens? You take more ownership of the information. Make sense?
That's right.
Because you did the work. You like, okay, I looked this stuff up, man. I connected some dots. Now you like, I'm a detective. I keep telling you that's what you do. That's what we do for it. We detectives. We data detectives, man. Literally, right? We take information, fundamentally or technical information, and we go put it to work. There's a technical story, and there's always a fundamental story too, right? Or sometimes it's and or, right? But nonetheless, it's what we're working with based upon what's the most relevant piece of information. Make sense? Or the relevant perspective, technical or data fundamental. Right. So that's what makes this stuff exciting. So stay hungry, stay humble, stay digging, keep pushing, keep asking questions. No such thing as a dumb question when you're trying to figure out how to get a bag and rule the world. Simple as that. Right. And if you don't move your feet, you don't eat. It's simple as that. right? This is a performance-based industry over here. You gotta work. And the work ain't what you think it is in terms of what everybody else is having to deal with. Why? Because that Mr. Charlie is standing over their back every day, right? You just trying to get a little water at the water cooler. Here come Mr. Charlie sitting there looking at you, giving that eye. I know this joker ain't behind me, giving me this little dust. You ain't my mama, joker. Right? But that's the rat world out there, right? We're trying to separate ourselves from that. We're trying to find a beeline straight to opportunity, right? That's what we're here for, to find opportunity.
That's right.
No middleman over here. That's all I'm saying. Ain't no middleman over here. Right? None. There is none. There is not. Right?
Yes.
So get excited. So yeah. So stay hungry, guys. Stay. Focused. We know what the rules of engagement are as far as the markets as of what you discussed today, previous to today. We know that the debt selling part of the bill is still out there. That's why the market's probably like not too still happy tonight, which we talked about. If the markets can't get what all it wants, it's gonna throw a hissy fit because the markets are spoiled. Why? Because they've been feeding our taxpayers' money since what? Forever. And as soon as they allow people like investment bankers and fund managers to become a part of our government or infiltrate the government, right? To take over the economic side of things, then guess what? They always gonna be on a paper chase to get more out of Americans, taxpayers' money to fuel their monetary ambitions, right? Their greed, quote unquote, in essence. Right. So we're trained to follow the money and not be in our emotions because we understand that's what America does, right? America that has a history of that, right? So that's it. So long as we ain't hurt nobody maliciously doing none of that, which we're not, and we just trying to focus on getting our piece of the pie that's owed to us, which we are. That's all that matters, right? That's all that matters. All right. So that's it, guys. So when we go to shut it down. Since Angie came in a little late, she was busy. I guess she was busy early. It happens, right? You guys, out there conquering the world, right? As always. So we're happy to have you all in the house. All right. Good evening to you, Sister Angie. All right.
Good evening. Good
Yeah,
evening.
thanks.
Thank you as well, over Jeremy. So again, I hope you guys got some out of it. I know we kind of went off script a little bit, politicking with our sister, right? Sister Shanika took me on one of my old philosophical moments. Where I had to go down my old deep rabbit hole, right? Yeah, but. You took me there a little bit in a good way, but I did dust off some of those things I've done before because again, like I said, I came out of that environment too when I was in the international market. Well, I led a team. I was actually, basically, a stakeholder in the company that had people underneath me, right? I come from curating and cultivating, right? So I know that better than anybody because again, I do understand that there's a basic code that we all live by, right? And you can tell when a person on that level without you having to even that person they about that they serious business, right? Because they meet people where they are, and we're not too busy trying to ID what people, where they are in terms of if they lack or they're not. We don't care about that. Only thing I care about is your positive, right? Because those are going to overturn the weaknesses. Because over here again, there's no competition. See, that eliminates the worst thing that everybody got to deal with out there on the rat world, right? They got to deal with competition. So they go to bed with it on their mind, they wake up with it on their mind. Over here, there's none. Everything over here is family oriented. Why? We finna go get this money together. We're gonna find a way to get this money, right? And everybody can play a part. You know what I'm saying? Intricate value to that. So it makes for a very relaxed environment over here, right? Ain't no set tripping over here. Ain't no pound on the chest like King Kongs and Queen Kongs. And ain't none of that over here. Right. So I love it from that perspective. So shout out to y'all. Shout out to our future. And let's keep grinding, right? Y'all know how this stuff go. It doesn't stop, right? So that's why we say peace, power, and profit, right? Knowledge brings power. Power equals what? Profit. Knowledge brings the power. Stop trying to omit the knowledge, black people. Anybody else out there? You cannot skip the knowledge to try to attain power. It just ain't gonna happen unless you're gonna be out there knocking people out like Debo every day. And then guess what? There's always somebody that can knock you out. Don't get it twisted. You can't be the baddest thing on the block, right? There's always gonna be somebody gonna get you one day, right? So understand that. So put in the work. Don't hide from it. Seek it, and you'll be a better scenario today, right? So that's it. So anybody on the last way? I should say anybody got anything on the way out the door, right? I'm hungry. That's what it is.
Man, get you a sandwich, bro. I'm
finna go up here and get my old surge sandwich, but I'm gonna just go straight surge, straight to some bread.
Get your put sandwich, cocaine operation.
Right? Yeah, you put one old put sandwiches together real quick, right? Or one old big contract put sandwich, right? So
But no, thank you though. Thank you for doing this, man. Every day. Thank you.
anytime, y'all already know it. It's team. It's team all us, right? If there's the saying that it's team all us, right? Because that's what it's about. If you ask me personally, because I think that's what we all, we come here for, right? We literally come here to see if we can figure out a way to get a leg up, right? So that's positive. I don't care how people talk that trash, but I know over here we working. I'm gonna just keep saying that. Over here, you don't want the producer screaming all over the album and dancing the videos. Come to Death Row Records, right? Cause we ain't gonna be doing nothing over here. We gonna come on here. We're gonna go to work. That's all we know how to do over here. I'm just saying, right? And we all equal. So that kills all that other stuff. We all equal over here on Ubuntu for a reason, right?
That
We
the
all
new mic
contribute.
set up right there.
Actually,
Go ahead, somebody.
Is that your mic set up next to you to the right? In
Oh
your
yeah,
left?
y'all see I had it right there just quiet. I ain't saying nothing about it all night. Did it?
Yeah,
It ain't ready yet. It's close. I gotta get my just came. I got the stuff. So I remember I was talking about that last show we did. I said, man, I need to stop playing to go on the upgrade mistake.
When
I
it
just
did.
silently. I've been busy. But when I said I wasn't running around, I've been trying to do all the research. I've been silent, right? So I still got to get the cable and all that stuff. But I got the arm set up.
And just the flesh. Yeah.
Yeah, you see how I did? They made it happen. So got the mic. And obviously in this case, of course, now we can make some things happen. And the headsets, actually I got the headsets coming tomorrow. Even though, I'm retired, the old one, they came free, right? But I got a headset, and then I got the interface, basically like a mixer, but it's an interface, the new style to connect it. It's XLR microphone, exposed to USB. So spent a little money, right? Went in the pocket, right? Made a little money, could do a little thing when you make a little change, right?
Right.
But I think the quality of the people I deal with, which is you all, is worthy of it. And and then I didn't have, I ain't gonna say that. I about to throw some shots, but I ain't gonna leave that long. I didn't have to be all in the YouTube in the chat saying hit me cash app and somebody donate. I ain't to hit y'all like that. Tap your pocket for you to donate for me to get a microphone. No, for me it's my microphone, right? If I ever come to people, it's gonna be something that we're gonna do something in the group setting, right? Believe me, anytime I come to y'all for a donation, it's gonna be because we're trying to all raise money collectively in a pot form to see if we can help somebody or bless somebody with something. So that's the only time y'all probably hear me come together. Like, hey, y'all hit the cash out. We finna make buy somebody an investment account, right? That's what we do on our side, right? So we're gonna help people.
We do.
I think that your students should consecutively and constantly look to give when you give free. That's respect for the
Well, it's
teacher.
part of the mentor, sir. I get you, but you know what I'm saying. But
that's
ultimately,
I know, but
you know what I'm saying.
no,
I'm not the person out there fleecing jokers down because you know some joke about the fleecing joker, boy. Every 30 seconds they make that round like at the church plate at the collection. We gotta come on and they hit you with that guitar. That guitar, and you get up that seat, start dancing, and you can't even cut your step good. He can that plate. God, dog, bro, I just threw your dub in there. God, dog, bro. God, dang it, bro.
I get what you're saying comes from a space where you don't need to ask because your family already knows to grace you with like that. So you don't need to ask because it's
I think you hit your mute button, but yeah, no, we get your point. It's all love, Again, that stuff is.
That was a call that came in. So yeah,
no, you good. That stuff is all love over here. I'm working hard like everybody because we all, that's what I love about the skill again. See, over here you got people who got a chance to get a bag. Juggle ain't stressing about no dollars. You know what I'm saying? Everybody over on the other side looking rough and like, man, we supporting the scenario, but man, we look at getting all these dollars. I need to cut these bills. I'm like, yeah, but come over and hang out with us too, so we can help you make some money, right? That's how we think. But anyway, no, it's all love. Humble and honored, as we say, and humble and hungry, which we always say. Another saying of ours over here. So it's all, it's all love, right? And that part is transitory because we want to spread that around, right? It is transitory over here, right? It still imposed inflation. But yeah, so good idea over Chris. So I got it sitting there. I just got the arm up and the mic. So I had a cord tomorrow, the mic tomorrow, and the interface come tomorrow. So next session we have, I'll be sounding like Barry White over here.
Like,
Look at here. But the Barry White voice on the Joker.
kind of like
Just cut that. So yeah, so it's yeah, Blue. So I put the setup too when I posted. Cause I keep telling y'all, man, you guys are ready for, well, some of y'all that
That's dope.
Ready for that. Y'all, you know what I'm saying? Y'all ready for this, man? Y'all need to be building. I'm trying to tell you, we're build your YouTube channels up. Get you guys popular because there's a lot of jokers that, all right, I'll leave that alone. I know I'm been, because I'm like, man.
I know, yeah, you gotta go eat.
No, I'm not just there. I'm just saying some of the stuff that people out there, because man, that what y'all have to offer to a lot of people that's outside of y'all circles. I keep telling y'all the vanguard. Y'all are the financial vanguards, and y'all, well, no matter where you at in your state of learning, not just here, of course, everybody on the YouTube side, to the YouTube family, everybody that's in this, y'all are financial vanguard. We do stuff that more people clamor at. They scared, they shaking their boots to do. Think about that. Again, we talk about people that got MBAs and PhD, all this stuff like that. They run from this. I got a broker for all that. I ain't got to spend time for that. Like this, this your money. How you let somebody? Didn't MC Hammer have that problem? Right?
Yeah.
You make all this money and then everybody over there rip you out. Didn't Mike Tyson have that problem? Well, you just slugging anyway. He didn't care. You just knock a joke out. Like, cut me a bag, knock a joke out. But you get my point. No, focus on, no, you need to learn how to get it too and manage it. And you got my point. So anyway. All right. So again, thank everybody, all the family, everybody on the YouTube side. Thank y'all for coming through as well. Over Dollar Will, Sister Monica, obviously on that side. I family UV, Brother Chaos Rain came through this evening. See you over there, family. Peace, Power, and Profit, Brother Jim Denson. I family CG3, our brother Iori, right? Over from Dollar Will Camp. Y'all know y'all family here anytime, all the time. All right. Sister Tamika came through. Our family Sida Samuda came through, right? Our brother Quavo came through as well. I see him over there. And then everybody, that was able to come through this evening here. I know I keep y'all late. And I said I wasn't going to be on this long today. But yeah, I got jug up late, right? We burning me that door. Right? But that's fine because whatever. I feel like this, hey, it's best our time be allocated to this interest than something else,
Thanks.
We got something to work with going in tomorrow. I would think we do, right? Not just tomorrow, but next week. Right. And so right now the future market is throwing up. Right. So we'll see if they hold overnight, because just like we saw with the future market that was up last night, it was up about 300 points plus. The SP was up like near what, about 0.82%, almost 1.4%, and reversed all those gains. It reversed all those gains. I'm sure y'all saw that too. I was like, I woke up literally about 1 something in the morning. I was in my bed, because I be sleeping sometime. I wake up light. I'm like, man, let me just double check the market. So the market messed me up. One eye, like killing my eye up. Man, we down. I mean, we up, a lot. Okay. And Mar might be crazy. And so all I knew was I had like 6, 7 calls that I had swung into, because the bounce, obviously, at the end. And boy, I barely squeaked out with a couple of them with some profit. A couple of them broke even down, lost a little bit. But initially, right after that, I reversed. I already had a couple puts, but I ended up adding more puts. And so I was able to catch that first flush down when we kind of first make that first flush down. And it was just beautiful. I was like, yes, right. We hit that 430. That's when we were starting to politic a little bit, I think, in the group. Me, you over Chris, I think, with Jeremy.
Yeah.
Yeah, I'll tell y'all, you like, it ain't gonna break that 430. I was like, hey, I'll post y'all just posting the picture. I was like, yeah, boy, that thing right here looking weak, boy, because I seen that weakness. That thing cut that low down in that low 30. I said, yep, cha-ching, running right now, right?
So once it hit, like I said, it's like a couple minutes before the market closed. I was like, yeah, it's finna break 430 today.
Mm-hmm.
All right, ain't gonna work. Cocaine operation failed today. It wasn't good enough.
And again, 1.63. Y'all know, again, I'm getting ready to leave. Seriously. Today's operation was the biggest repo operation to date in American history. They had the biggest reverse repo operations to date auction ever in American history. It was $1.6 trillion.
And it still didn't work.
And it still didn't work. So when I
Got
tell
him.
y'all, when markets start to sniff out weakness, because Wall Street ain't stupid. Wall Street is just like we're trained to. Wall Street sells into what? Into strength.
Yep.
And they buy into weakness. But if the trend is strong towards what?
Upside.
Right? Or in this case, it was to the downside.
Yeah,
I mean, because we still in this bearish trend, right? We ebb and flowing through this bear trend until they break trend, right? We still in it on the macro picture, but then you always look out at the bigger picture, macro, right? They couldn't wait to sell into them rips. And that's basically what they did. So these big volatility candles that spike all the way up after they drop real hard.
Yes.
Y'all gonna learn, because a lot of y'all still learning how to deal with that, right? I came through a lot of that stuff early on in my career. And it is want to rip your chest out, rip your heart out kind of thing. You're like, God, dog, bro. Especially if you're in a short put position, because you like keep saying, oh, this ain't got to keep falling. Of course, when you're making money, you know how it is. Everybody go through it, right? All I know when they had that hard flush down, like, I saw my option push just expanded even more. I was like, oh, this is crazy. I was already up like what I think at that point like $700 on the few puts I had, and I added a couple more on some of the peak points. I think I showed in the group where I said, yo, okay, it's starting to round the top. I added more puts there, and before I know it, you know, because I had areas around whatever, that thing kind of tanked down and kind of shot back up. I said, here you go, here you can try to pump. I'm not going to get shaken because guess what? I still got the VWAP to my back door. Right? That's all I kept thinking. And it literally went to the VWAP, pierced above it a few times, came back down below it. It didn't close above it with strength. Of course, I always look for that. And then it flushed, like I said, down at the back end of the day. I saw that flush, I was like, woo, right? So instantly, I just saw that count just almost like, you know, thing to almost double up. It went for like what, 600 and something dollars. And before you know it, I was at like 13, near 1,300, somewhere around there, 1,200, $1,300, and literally like in minutes. Market saw just dumping that fast because y'all know options don't put it, just turns over quick. I was like, I said, yep, clean, right, out of there, right. So I was like, okay, see, you know, it's that kind of resiliency. So, but you know, we all get there at our own point in time. Just stay focused to deal with volatility in the markets. That's why we've been talking about that a lot. It's just a part of our business. You got to be able to deal with that because that's people out there making human emotions. That's human people. That's people in the market making, you know, they're in their feelings, essentially. You got to be able to ID that. Now, we know there's a lot of algos and machines behind this stuff too, granted, but a lot of that stuff is people getting their emotions rattled, right? Because everybody been used to just buying a dip and being saved, not today. So the same way with AMC that it bounced, right? AMC bounced today. That was not by mistake either, because we already had said the support was going to be down near 34, 35. I got receipts showing that. I was like 34, 35. That's going to be the area, right? Because they already brought it down from 50 all the way back down. And it bounced hard going into an end of the month quarter close out with hedge funds that were shorting it. I actually had to cover, right? They actually had to cover finally, not all of them, but you know, Wall Street bets they're gonna make like they won. I'm like, y'all need to stop. They people just had to cover theirs, allocate some money, right? But either way, the stock bounced. That's all we care about at the end of the day, right? And so this stuff is great, man. I love it. All right. Anyway, let me get out of here. Let me go get me a mayonnaise sandwich. All right. We got that vegan mayonnaise. They got that egg stuff. We got the veganade. They call it veganase. I was like, all this crazy stuff, veganase. So we'll get some old vegan mayonnaise now. Give me a little something to eat, y'all. Seriously. Thank y'all for being up this late. Thank y'all for your attention. Thank y'all for y'all, again, patience to one another, because that's what we're here for, to support one another and build this, because again, it's our turn, right? I just say that it's our turn, right? To do something powerful and then go out there and pay it forward to others. So I'm looking forward to you all doing the same thing, building out y'all YouTube channels. Y'all should be ready. Over Chris got one, he building his out. Go subscribe to his channel, his YouTube channel. Anybody else that's obviously getting ready to go down that lane, you need to look, get it happy, get it popping, so we can support it, because everybody else support people, and them like these just be having millions of views, and they be talking about a whole lot of. I'll leave that alone. I'm like, look, all right. I'm just saying, but I know maybe I know people want to be entertained. I get it. America's it's one big coliseum, I guess. All right, but we're gonna keep doing the real work. All right, so that's it. Good night, everybody.
Good
All right.
night.
Now I'll
Peace,
see y'all
power,
in the
and
next one. So peace,
All
power,
right, good
profit.
night,
See
Oprah.
y'all back in the group, and
Peace,
we'll see what this
family.
market gonna do tomorrow. I
Bye.
hope
Good
if
night.
you are gonna be actively trading the market tomorrow, just remember again, just caveat: tomorrow is the first day of the month. Y'all know how that stuff works, and it's the October month. October effect, right? That's something y'all might need me new to. So that's a Google moment for you, Sister Shaniqua. There's a saying in the markets. It's called the October effect, right? Markets typically act very weird during the month of October, right? Maybe call it the Ghoul month or the Halloween month, or whatever. I'm actually born in October, so this is my birth month, but whatever. But October effect, right? So you might want to look into that because September was a bad month that we knew about. That's why we had this lot of capitulation on top of that. The economic news. Who knows what October going to be? But a lot of the issues are coming forward now. They can't hide it. Cat's out the bag. We'll see what happens, right? So we're prepared. All right.
What is
So
that?
go ahead. Sorry.
What's that beeping noise?
That's me.
Yeah, it's me.
Everybody knows.
Oh,
Everybody notices it. It's the alarm.
Oh, that's you.
Yeah,
Yeah. The thing. See, y'all know I be going. I forget. I hear it now. Yeah, okay. I did hear. You know
yeah,
what?
now
Weird
I
thing,
know, right? For some
I don't know.
reason,
I get so used to just going, information. Sometimes I hear stuff. I just be like, I just keep moving, right? So that lets you know I'm training it, boy. I'm training to be a vessel, boy. Look, when I'm on a mission, I just be focused. So Chris caught that.
You
Shit,
thought
like,
just
I hear that beeping back there. Anybody about that battery? I hear that battery crying back there. It was a battery in me. No, that's fine. So, no, thank you all.
good night, everyone.
Good night, everybody.
Good
Again,
night. Power and profit,
get some
y'all.
rest and let's get it right. So hopefully go live doing tomorrow. Hopefully, if everything work out, go live. Maybe internet if y'all are around. Catch me on YouTube. All right.
All right.
It's recorded on YouTube. If you want to go back and do the replay, go to YouTube. It's already going to be up there until we get away where I can catalog all of them. Then y'all have what they call the private links, and y'all can be able to get the information for yourself. All right. Thank you all. Have a good evening. Sister
All right.
Kiana, Brother Al, over Chris, Brother Jermaine, Sister Shanika, Brother Rich, right? Brother Jeremy, Sister Angela, Brother Brandon, everybody came through, everybody else, Brother Dunn, everybody, right? I beat for that. Good night. See y'all. Tomorrow. See y'all later.
peace over. Get a sandwich.
Peace, everybody. Yeah, I'm gonna get that sandwich right now, but I'm headed up the stairs now. Flaming. All right.